he kind of sort of said that the biggest vulnerability for India is essentially depending on other countries. So, I mean, the focus thrust very much seems to be manufacturing and make in India, make what you can here and do not import. So, it's a broader kind of message, but I think an important one. Now, President Trump's H1B visa is finally managed to drag services into the trade war. So far, it was all about goods, but now services, there is a bit of a question mark as well. Near-term impact, and we'll talk more about this. Rima will put out some numbers as well. We're getting commentary from managements who are listed, companies which are listed. Near-term impact may be limited on IT revenue and margins as well. I don't think there is... that is a very large fear in that sense. And of course, in the medium term, longer term, what is the solution? I mean, basically, don't do work on site and get those H1B sort of workers on site to do this work. Do it offshore. GCCs, global capability centers, etc., perhaps are another way to go. But, I mean, I think what this does, of course, is hurt multiples for IT services companies because, as I said, so far it was only about goods. Now there is, of course, services into the mix as well. There is also talk of this Hire Act, basically restraining a tax on work which is offshore to outside US. That is basically in the Congress. It'll be debated, etc. We don't know if it will be passed, but I think that is a much bigger impact if it does get through, as some are saying it will, by the end of the year. Basically, caps upsides, increases uncertainty in that sense, at least in the next in the next quarter or 2 quarters or so. So that's the space, I think, which obviously does react in a negative sense. The other way, Commerce Minister Piyush Goyal is in the US for trade and BTA negotiations, bilateral trade negotiations. Focus in US this week. Just to go back to the US market, Fed speakers, as I said, Fed cut last week, but I think the Trump appointee, Stephen Miran, is going to speak today on Monday. And markets will be waiting to see if he's going to be critical. He's going to demand 150 basis points worth of cuts this year. More, we'll see. But I think that will be the headline when we come back tomorrow morning. Fed rate cuts last week, even as hard data remains very strong in the US. US economy remains pretty strong. And, of course, financial conditions remain very, very loose. Friday's change, not very much, except the fact that the dollar index in the last 3 sessions is up about 1% or so. Equities were higher, and of course the 10-year yield moved up another 2 basis points or so. Now, just to tie in the levels, the Nifty posted a negative close on Friday. Remember, it had done about a 1,000-point rally in the prior 14 sessions, but we are still trading above the 40-hourly exponential moving average, which becomes the immediate support. 25,244 is that level. It's about 100 points down from where we closed on the Nifty. Bank Nifty had a 12-day winning streak. It saw a negative close on Friday. Here, the support stand again at the 40-hourly exponential average, which is 55,261. So those are levels. GIFT Nifty gives you a quick sense of how we're likely to start. I think the last I saw, maybe about an 80, 90-point cut. Yeah, about a 90-odd point cut. And I presume bulk of this, of course, will be from the IT services bank, which is still a large portion, a heavily weighted part of the market. Well, let's just get to that story, right? The US has raised the annual H1B visa fee to $1 lakh US dollars per applicant. I mean, we're going to talk and get lots of opinion, but just the basics for those who've not been watching probably or who want to understand this better. Rima.
Okay, so H1B visa fee will now cost $100,000. But White House has clarified this will be a one-time petition fee, not an annual charge. If you have an H1B visa, you are abroad right now, you can re-enter. You do not need to pay $100,000 to re-enter. And this is applicable only for new H1B visas, not renewal. Also, this will now, from the timing point of view, for FY26, the H1B visas are already in place. So it's not going to affect this year, but FY27 will get impacted. Markets were jittery. Over the weekend, we had Infosys and Wipro ADR down between 2 to 3%. And back home, Indian IT anyway has been underperforming, with the Nifty IT index down 15% on a YTD basis. A quick word on the street reactions. Now, BofA says that without any mitigating factors, if you just calculate how much Indian IT companies are sending people on H1B and you apply the new higher fees, then the EPS impact will be 7 to 17% over a 3-year period, because your H1B visa is typically for 3 years, but you can renew it for another 3 years. So 7 to 17% gross EPS impact. Okay, so on an annual basis, 2 to 6%. But remember, companies have a 12-month buffer. They can figure out how they want to, whether they want to be selective in sending H1B visas. So there are mitigating factors. They believe Tech Mahindra is most impacted. Morgan Stanley says prima facie it looks negative, but they see minimal near-term impact. CLSA also echoes the same thing. If the companies bear the full impact, which is unlikely, they don't pass on the cost, they don't increase nearshoring or perhaps increase their local talent, then the EPS impact could be 6% to FY27. Midcap companies have quickly responded to this. First Source says no impact, zero dependency on H1B visa. Coforge is saying only 65 petitions were sent, 63 got approved, and that is 0.2% of their workforce. Science says only 6 people, employees on H1B visa, so no material impact. Persistent is they've not given out numbers, but they have said we don't see any significant impact. But, just to summarize, I think in the near term, there could be some margin pressure, but analysts believe that over the medium term or 3 to 5 year period, this can be nullified because of other measures, increase your outsourcing, increase nearshoring. But just FY27, there could be perhaps some margin impact.
Okay, well, Rima, that's pretty useful. Moshe Khatri is with us, Managing Director, Investment Banking of Wedbush Securities. Ganesh Natarajan is MD, Zensar Technologies. Gentlemen, great to have both of you here. Thank you very much for joining us. Mr. Natarajan, if I can come to you first, just summarize your thinking, top of mind. You want to be specific with numbers in terms of impact, implications, go for it, or a broader top-down perspective on this. How do you see it?
First, a clarification. I'm no longer MD of Zensar Technologies. I'm the chairman of GCT Data Solutions, which is an AI and data company. So I think there's a small correction.
Apologies, sir. Go on.
I stopped being MD of Zensar 10 years back. So. But to answer your question very specifically, I mean, if you look at the mid-tier pack, I think you already mentioned it in your narrative, which is that there is no real massive H1B activity right now. Because if you look at the trend over the last maybe 10 to 15 years, it's always moved towards more of offshoring, more of offshore outsourcing, and less of H1Bs. Having said that, I mean, the reality is that last year, I think over 60,000 Indians went to the US on H1B visas. And one would expect the same set of applications would continue. So to that extent, if the $100,000 fee is applied, clearly there will be a dampening effect on that. But will it affect the mid-tier and the large tier? As you already said, and all your commentary has already revealed that there's not too much of impact. But certainly for small companies which are relying on sending a bunch of people to the US, there will be an impact. So I think not very negative, but I would say certainly there will be some impact.
So Mr. Natarajan, so in the near term, there will be some impact, especially on the cost side. What about on the revenue side? Would clients be comfortable knowing that there will be fewer people on site and most of the work will be outsourced or done from nearshore locations? Will there be a revenue impact to your mind?
No, I'm glad you mentioned that, Rima, because I mean, ultimately it's all with the client. And clients are not going to change their model overnight. Because as you know, for the last 30 years, we've been trying to convince clients to move more stuff offshore because it makes sense for them, makes sense for us. But there are different models by which clients do technology work through vendors. And some of it will tend to be, I mean, almost 20% is on site. So it's not going to happen overnight. So yes, there could be some projects which definitely need proximity to the customer, which might get postponed or even cancelled. So I would not say there'll be no impact. There will be some changes to client directions in terms of how they do it. But over the maybe 2 to 3 years, you can probably convince clients to do much more work through GCCs, through offshore, and all the good stuff that is already there in the pipeline.
Okay, good morning, gentlemen, and good to see you all in. This is Nigel on this side. Well, Moshe, let's get you into the conversation then. If you could give us a brief idea about what is the wage differential between someone who's on a H1B visa and a local, a broad number.
So good morning. Good to be here. So a couple of things. First of all, on the differential, it's still about, the delta is still about 60 to 70%. But I just wanted to add, a couple of other data points from my colleague here that's on the panel. I think that, look, the way I see it in terms of the H1B visa executive action, I think this is manageable for most vendors in the sector. But then the increased regulatory scrutiny is actually another added headwind for the sector. And we'll talk about this in a second. Now, this one specifically seems to be a function of an ongoing dialogue between the U.S. administration and India that's gone badly, where unfortunately the India's tech-enabled services sector is being held as a bargaining chip. Specifically on this one, obviously the H1B visa program has been targeted multiple times during the past 15 years. We got some clarification, obviously, that this is a one-time kind of fee that's related to new visas. But the sector has been battle tested in this area and has significantly reduced its dependence on this program by expanding the on-site execution. And also in the past, we've seen expansion of offshoring when H1B visa application costs went up. So I don't think it's going to be very different this time. But from a big picture perspective, I think at this point, the sector continues to face multiple headwinds, and you're adding this one, right? So anywhere from depressed growth, Gen AI's disruptive impact, GCCs taking market share, the U.S. HAR Act that you just mentioned at the beginning of the segment, and we'll see where that goes. But the sector doesn't seem to be able to catch a break from all these headwinds. That's the bottom line.
Okay, all right, Moshe, just one more question. Do you think this will mean more delays in deal closures? Commercials of some of these RFPs at on-site might change. They could require renegotiations as well. So do you think we could see further delays?
Yeah, the sector has been battle tested. I'll be surprised if we see any of that. I think that discretionary spending continues to be under pressure anyway. Whatever is working these days is predominantly cost takeouts. That probably continues just because a big chunk of that gets done offshore anyway, right? And then whatever's really working in this market is very niche areas, niche buckets in IT services, product development, ER&D, Gen AI-enabled, tech-enabled services. These are the areas that are getting, where we're seeing spending, and a lot of that is probably done anyway, either offshore or on-site, and that's not going to change.
Moshe, just one more thing. This HIRE Act, which we are hearing about.
Yeah.
Have you looked at it? And it's in the Congress, right? And do we need to worry about that one?
So a couple of things. I believe you're talking about the Senate. There's a senator that's kind of putting that potential law or regulation that still has to go through vote. The president still has to sign it. But in general, we don't see this practical. How do you basically, stop any sort of offshoring if you don't have any scale in the U.S. to pick up the work? And even if the administration wants to do this, they'll get calls from the large enterprises in the U.S. complaining about that. So I would say the probability of this thing passing through is very, very low.
The point is, what is practical and what they want to do seems to be a big gap now between both. Just one more thing, Moshe, and maybe Mr. Natarajan, you want to come in as well. Looks like with regards to H1B, Indians as a cohort are the most affected, but it's not Indian companies which are the most affected, because the largest users of H1B are American large giants, tech companies.
Amazon,
Microsoft. Yeah.
Absolutely. That's why I'm saying, I think at this point, the administration will be getting calls from all these large tech companies that are using the program. And these are people that are funding the political parties. So I can't really see the administration ignoring these calls and complaints. That's why I'm saying this is just impractical. And I think that's a lot of noise about potentially nothing.
Mr. Natarajan,
I just like to point out, I just like to point out one thing that there is a provision for an exemption for some companies or some cases. So we need to be watchful on that. I mean, Indian companies do use H1s. I don't think we can say we won't use. And normally that's being used for supporting an offshore, because there will be some people on site to support that. So it is a dampener, but we have to face the reality that things are moving more and more to work being done by local Americans on site. And I think we'll have to move with the flow and make sure that our models respond accordingly.
Yes. The Department of Homeland Security state can exempt individuals, companies, or industries in the national interest. This is broad, discretionary, and case by case. This is what the executive order earlier said. Mr. Natarajan, quick word. Will we see a mushrooming of GCCs now in India? And will that be another headwind for Indian IT? Will they take away work which would have otherwise come to large tech companies?
No, Rima, that's been something we've been discussing for 20 years. The GCCs have always added value because GCCs do some portion of the work, mainly the mission critical work. But most of the discretionary work is still done. I mean, you may be working with a GCC rather than with the parent company, but that will continue. Mushrooming of GCCs, I don't see, but more work in mature GCCs is likely to happen because people will try and avoid cross-border movement of people. That's going to happen.
Moshe, have you spoken to investors investing in Indian, tech industry? I was looking at data. The FIs, this is as per August, towards the end of August. The FIs, towards the end of August, we've seen outflows of $4.1 billion since March of 2024, and the assets under custody fell from 10.3% in Jan 2025 to 7.4% in July 2025. So FIs have been shunning Indian IT. How are they reacting to this added headache or disruption?
As I said, this is just another headwind that they have to deal with. And nice talking to you, Rima. Look, the sentiment remains extremely negative. And we've had 2-3 years of slowdown in terms of growth. You continue to have concerns related to the disruptive impact of Gen AI and obviously GCCs and this regulatory scrutiny, which in our view, this seems to be more of a political kind of game back and forth between the US and India, doesn't help.
Okay. Just quick word, Moshe, in the large cap companies that you look at, which ones will be most impacted?
We don't believe that the large caps will be impacted. And again, as I said, H1B visa applications have been down significantly in the past 2 years. And these companies are extremely well positioned here in terms of being pedal tested.
Got it. Thank you, gentlemen, for joining us today. Thank you very much. That is the big story, and we'll be taking it forward through the course of the trading session. Before now, let me tell you all the interactions that we've lined up for you on our show. So at 8:35, you've got CP Gurnani joining in again to discuss the impact of the new fee on H1B visa program. So we'll take that forward. At 9 a.m., we have Manik Taneja of Axis Capital. Again, we'll get into individual stocks and the sector impact. At 9:20, Mihir Vora of Trust Mutual Fund will be a market master for the day. 9:30 a.m. onwards, we'll have discussions lined up with the management of Bajaj Auto, Metro Brands, PNB and Shriram Finance as the new GST 2.0 regime kicks in. And towards the end of the show, in our special segment, It's the Economy, Lata will be in conversation with Madhvi Arora of MK Global Financial Services and Mohandas Pai of RN Capital. Get into a break. On the other side, we'll get you the F&O setup. Stay tuned.
This is Network 18, and you're watching CNBC TV18.
Welcome back. The Gift Nifty is suggesting a negative start. We're down about 90 points, but we've had a good run. The Nifty and the Sensex have seen weekly gains for 3 consecutive weeks, and in this period, we've gained close to about 4%. But let's find out what the setup is looking like for today. Nigel's moved over to the big wall.
Well, we had a bit of a break in Friday's trading session, as you said, and the Nifty ended a little bit lower. But, and this morning, there's another 60, 70 point downtick that we're bracing ourselves for. So it's a bit of a test for the bulls. And I think that dip could actually get bought into, and I wouldn't be surprised at some point of time the Nifty moves into the green. Now, giving you the data points with regard to Friday's trading session, well, you had both the institutions that were buyers. But keep in mind, there was FTSE rebalance that took place on Friday, and that's why the FI participation was much higher than normal. So the gross volumes were more than double of what we normally see. Moving to, what happened in the F&O space? Well, there was some unwinding of positions, both on the Nifty as well as on the Nifty Bank itself. But what about the FI movement? Well, not too much movement, both on the long as well as on the short side. In fact, in line with what we saw on the Nifty open interest as well as the Nifty Bank open interest, there was some unwinding of long positions, while the short positioning continues at around 87%. And part of that short covering bounce has played out, because in the last few days, we've seen that the short positioning from around 1.91 lakh contracts, that's down to around 1.46 lakh contracts. So close to around 45,000 short contracts have got covered out. So part of that is in the price with regard to the bounce. But keep in mind, 1.46 lakh contracts on the short side is not small by any stretch of imagination. So this market is still net short. You get some good news. These shorts will have to scramble for cover. Moving to the PCR, well, a few sessions ago, it went to around 1.4. Now, that's cooled off to around 0.94 odd. So that's pretty good, right? Because you don't want that PCR to move towards at 1.6. Historically, when we see it move to around 1.5, 1.6, that's when the market comes in for a bigger correction. Moving to the options data, 25,400 call, 25,350 call. Both of them had a fair bit of open interest built up. So that's telling you the bears, they are waiting by at high levels. They believe that they can defend the higher levels. Well, there was some put writing as well. So that brings us to the levels. On the upside, the bears are counting on 25,500, 25,550 level holding out. So that's a crucial resistance mark. If we can get past this, then you get the next round of the uptrend. While on the downside, just for today, given that we have a 70, 80 point downtick on the Gift Nifty that is suggesting, 25,200, 25,225, that's the important mark. You don't want to break that. And in fact, if you're adventurous, maybe getting in closer to these levels will be important. The Nifty Bank, that was the one that was leading the way. It had a bit of an off session in Friday's trading session. However, it holds above the 20 DMA and it ended around the 50 DMA. So you'll want it actually to cross the 50 DMA in today's trading session. Tech, that's going to be in focus because of the H1B visa issues that we heard over the weekend. But let's see whether or not, initially there could be some kind of a dampener with regard to the start. But let's see whether or not that dip gets bought into. Moving to stocks that I'm looking at, well, we're looking at 2 stocks. Sammaan Capital, I told you on Friday itself, that's likely to move into the F&O ban. That's what happened. And RBL Bank, it's come out of the F&O ban, which again, we gave you a heads up on that one. The short's getting a little bit nervous on RBL Bank, and I'll keep an eye out on that stock even for today's trading session and the next few days. That's a stock to move at. But for the next month or so, we could be bracing for a very, very big boost on the consumption front, and maybe historic one as well. GST 2.0, RBI rate cuts, budget tax cuts, as well as festive season. We'll keep an eye out on some of these consumption-linked stocks. FMCG as well as autos will be in focus.
Indeed. And in fact, as the GST reforms come into effect from yesterday, in a special address, Prime Minister Narendra Modi addressed the media and he called the new reforms as a festival of savings, Bachat Utsav. He also said that it will accelerate India's growth story. Listen in.
नवरात्रि के प्रथम दिवस 22 सितंबर को सूर्योदय के साथ ही नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लागू हो जाएंगे। एक तरह से कल से देश में जीएसटी बचत उत्सव शुरू होने जा रहा है। इस जीएसटी बचत उत्सव में आपकी बचत बढ़ेगी और आप अपनी पसंद की चीजों को और ज्यादा आसानी से खरीद पाएंगे। त्योहारों के इस मौसम में सबका मुंह मीठा होगा। देश के हर परिवार की खुशियां बढ़ेगी। ये रिफॉर्म भारत की ग्रोथ स्टोरी को एक्सेलरेट करेंगे, कारोबार को और आसान बनाएंगे, निवेश को और आकर्षक बनाएंगे और हर राज्य को विकास की दौड़ में बराबरी का साथी बनाएंगे। घर बनाना, टीवी, फ्रिज खरीदने की बात हो, स्कूटर, बाइक, कार खरीदना हो, ये सब पर अब कम खर्च करना होगा। आपके लिए घूमना फिरना भी सस्ता हो जाएगा, क्योंकि ज्यादातर होटल्स के कमरों पर भी जीएसटी कम कर दिया गया है।
Well, in fact, we have Sudarshan who's joining with more details on the new GST rates. Morning, Sud.
Morning, Nigel. So the new tax regime is here as GST reforms come into effect today, and it coincides perfectly with the onset of festive season beginning with Navratri. And PM Modi described the reforms as a milestone for the neo-middle class and calling it a nationwide GST Bachat Utsav. Invoking the mantra of Nagrik Devo Bhava, respect for the citizen is central to its governance, PM said decisions taken over the last 1 year will collectively save Indians more than rupees 2.5 lakh crore. The cuts, he emphasized, would benefit the poor, middle class, farmers, traders and entrepreneurs while strengthening the vision of Made in India, or better say Swadeshi. So I have taken few sectors which will benefit from the GST cut, and first on the list is the most important is the auto sector. All the companies have gone big on the price cuts, from Maruti, Mahindra & Mahindra, Tata Motors, Hyundai to all the even high brand names. Even the bike companies have gone big. Maruti has focused majorly on the entry-level segment where the price cut is up to rupees 1.30 lakh, and in percentage term, if you say, it's almost up to 27%. While in the SUVs, price cut is in the range of 2 to 14%. The same pattern was seen for companies like M&M, which has cut prices up to rupees 1.55 lakh, Hyundai up to rupees 2.40 lakh, and almost Tata Motors also has cut price up to rupees 1.40 lakh. In the bike segment, all the companies have passed on the benefits of GST cut, but the focus would be the segment up to 350cc engine, as it forms nearly up to 95% of total domestic volumes. Biggest beneficiaries of this would be Asher Motors and Hero MotoCorp. Hero MotoCorp would also benefit if there is a real pickup in the rural demand. Now, one segment that will benefit not only from GST cut, but also good monsoon and even the rural demand pickup, that is the tractor segment, which earlier used to be in 12% tax slab, now is in 5% slab. Another sector that will be in focus because of GST cut, and apart from this sector, even other sector due to this will benefit, is the cement, which is now in 18% slab from the earlier slab of 28%. If there is a pickup for the cement or say infrastructure, cement companies will benefit, and indirectly it will also benefit real estate companies, because even it was a good monsoon, and after the monsoon season is over, so we are expecting real estate demand also to pick up going ahead. After that, keep an eye on all these consumer staples names. FMCG companies, take a toothpaste, soaps, hair oil, shampoo, everything is now in 5% bracket. Even textile segments will benefit, garments, footwear, which cost up to 1,000 rupees. For that also GST has been reduced. Now it's in 5% slab. So keep an eye on all these companies like HUL, Britannia, Trent, Bata, Colgate and Voltas. So at the end, would just quote PM Modi. He says, reforms are not just about lower taxes, but about empowering citizens. So we'll have to see if the GST cut really redefines India's consumption story.
Thank you very much for that. So these are the two big stories: the GST 2.0 boost to consumption, and IT companies today grappling with higher visa costs. But not just that, all global investors are converging at the JP Morgan Summit. And markets will be watching all these signals. So here's what we'll do. We'll slip into a very short break, and on the other side, we'll head to the JP Morgan conference, and we will be joined by James Sullivan. He joins us from the sidelines of their annual India conference.
images.
Welcome back. You're with us here on Bazaar Morning Call, and we've sort of shifted base to an important conference which is kicking off today, which is the JP Morgan 10th Annual India Investor Conference. And I'm sitting down here on the sidelines of it with the man who heads equity research Asia Pacific for JP Morgan, James Sullivan. James, great to have you on the program. Thank you very much. Good morning.
Thank you.
I mean, the big question I think you will get here from investors, etc., is this huge underperformance India has seen over the last 1 year relative to other Asian markets, and of course, I mean, I think other large markets as well. So for the last few years, India and US were the only two sort of games in town.
Right.
I mean, US is still chugging along to all-time highs, whereas India has kind of struggled. Your thoughts?
So, no, thank you for the question. Thanks for having me on the show. I think there's two big picture ways of approaching your question. One, from a market-specific perspective, as you very rightly say, we've seen significant underperformance here in India. You've seen $23 billion in foreign investor net selling over the course of the past 12 months, which has been a real driver of that underperformance. I think it's important to recognize where we entered this conversation from, though. We had entered this conversation from a period of outperformance. The market had gotten pretty pricey from any valuation metric perspective. And the JP Morgan call was that you would see a slowdown in earnings revisions as we went through this adjustment phase, which is exactly what we've seen. So I think that scene setting is important because the underperformance is off the back of something. Yeah. I think the other reality...
It's correcting an earlier period of outperformance, in that sense.
It's pausing from an earlier period of outperformance, I think is a fair way of saying it, because the medium-term outlook here in India, we still are very positive on. But we had seen pretty pricey valuations, earnings expectations had gotten quite aggressive, and so you needed a period of pause, which we've now seen, and that actually sets the stage for another bout of outperformance from a JP Morgan perspective. The other reality is if you look at India within an Asian context, it's actually very rare for India and China to both outperform at the same time. And so you see this internal rotational trade within Asia quite often. So the fact that China has come off of its lows and has had such great performance on a year-to-date basis has taken a little bit of that incremental capital, particularly from a foreigner perspective, out of India. Now, both of those have occurred, which is great if you're looking forward for incremental performance from here.
I mean, Korea is up 50% this year, right? I mean, it's been incredible. So what? I mean, we're at the turning point now where this again flips that internal rotations back in favor of India.
So opportunities and risks, and I think they both exist as we were chatting prior to the program. On the opportunity side, you saw the second quarter GDP print come in at 7.8%, better than expectations. JP Morgan has taken up our full year economic growth forecast as a result of that beat. Inflation is coming in at okay levels, but we'll talk about that again in a second. And earnings expectations have become more normalized. And so again, we're setting the stage for potential outperformance moving forward, particularly in certain sectors. The other question that we're doing a lot of work on right now is the opportunity for rural consumption outperformance. We've obviously seen a very strong monsoon, about 7% above historical averages. The potential for that to trickle down into rural spending is real. You then overlay that with the GST reforms that the government has pushed through. And again, that sets the stage for a slightly different conversation moving forward. The flip side of that, from my perspective, is really on the inflation side. If you do see India have to curtail purchases of, in particular, Russian oil, that will have an impact on inflation and potentially create some issues for the RBI. And so there is a balance. On net, we're positive because of the underperformance. We're positive on more normalized earnings expectations and more normalized valuation as a floor for market performance from here. But we'd like to be quite specific. And where you see idiosyncratic drivers like GST, like a stronger than expected monsoon, as a potential driver for rural consumption, which has not been the flavor of the year, then we think that there's some really interesting investment opportunities.
It's a broad thrust area. It's consumption sectors, which perhaps...
I think that's fair. And it's predicated on some of the uncertainties around global trade right now.
Yeah.
So India, from a manufacturing perspective, the story of India has been services for a very long period of time and really globally relevant in the services space. The manufacturing conversation has come up over the course of the past couple of years. Given some of the uncertainties in the global trade scenario, there's risk there.
Yeah.
And so trying to focus on domestic demand drivers, areas that India can control itself, rather than be dependent on outperformance on global decisions that are outside of the control of the Indian government.
I mean, you brought services up, James, and I think services are now part of the trade war conversation. I mean, if I want to call it a war, whatever, dispute, negotiation, but this H1B issue, I mean, how do you look at it?
So look, it's critical in a number of different ways. And I think from a big picture perspective, the most important thing that we're trying to understand isn't necessarily the visa issue in isolation. What I'm trying to understand, what JP Morgan economists are trying to understand, the trade conversation has been purely focused on trade in goods. This is really the first salvo that has impacted the services space in a meaningful way. And so the fundamental question that we're trying to wrap our heads around, are we now segueing to a more broad trade conversation across both goods and services? Does this open up a new front is probably overly aggressive as terminology, but does this open up a new conversation in the trade discussions that we hadn't really seen at all previous to this? And that's really what we're trying to get our heads around.
In terms of specific, I mean, I think your analyst, Ankur Rudra, has put out a note quantifying the implications, etc.
Yes.
I mean, any thoughts? Is it going to really... IT services has not been loved as a sector for a while now, and this is one more hit.
So you've seen significant underperformance for a whole variety of reasons, inclusive of currency impact, inclusive of the potential risk of what we just saw occur. The question, as always, is now in implementation. When I speak to my government relations colleagues in the United States, when I speak with corporate folks that are exposed to both India and the United States, particularly over this past weekend, post-announcement on Friday, there's massive uncertainty in terms of how this plays out. You've seen a lot of corporates publicly announce that they want their staff to stay in the United States, reduce travel, et cetera. There's significant uncertainty whether this impacts student visas. There's a whole raft of degree structures in the United States, particularly STEM-focused, that result in automatic visas. That program is now up for question. The implementation will absolutely be critical. $100,000 is not a small amount on a per-employee basis, particularly if you look at the average IT services salary in the United States of about $174,000 to $200,000. So this is meaningful in terms of the increase in cost.
And there is that Hire Act as well, right? Which is, I think, was proposed in the Senate. Which, I mean, do you think it'll that is also something which caps upsides, I mean, increases uncertainty. We don't know if it'll pass or not. As someone in the morning, a guest told us, it's impractical. I mean, it doesn't make sense, but your thoughts?
I think we have yet to see the broader impact of a lot of these programs, particularly on structural inflation in the United States. We've obviously seen a lot of conversations regarding Fed rate policy over the course of the past couple of months. There are elements of the U.S. economy that are starting to change off the back of legislation and off the back of new policies pushed by the U.S. government. We have yet to see how that plays out, particularly on the inflation statistics. So a lot of things to watch from a market's perspective.
In terms of the broader India-US sort of dispute, you think that'll resolve by the end of the year? I mean, resolve when there's 50%. I mean, you know, think about it. 6 months back, India was supposed to be the first in line to get a deal, supposed to be, supposed to get a better deal as opposed to some of the competing exporting countries. It's exactly the opposite. So you think at least the 25%, I mean, it's 50 right now, at least the 25%, there's some resolution to that.
So they're discussing the trade dispute right now, and representatives from both governments are sitting down. We'll have to see how those negotiations play out. I'm definitely not going to claim any knowledge in terms of the inner thinking.
What are your colleagues in Washington, et cetera, telling you?
At the moment, we see an administration that is very transactional in nature. Now, that does offer the opportunity for change. That does offer the opportunity for deals. And so we'll have to see how the negotiations play out.
Okay. So they're not saying one way or the other in terms of how this sort of pans out. Do you think the services bit is a negotiation tactic, or you don't think it's a separate thing?
It's an interesting negotiation tactic, particularly from a U.S. government perspective. As we all know, there's a trade deficit in the United States, however, significant services surplus. And so if you're going to start to wander into the surplus side of the ledger, that is potentially damaging to U.S. Overall trade interests. And so my personal view is I think the U.S. government will be very careful to broaden the front on the services side, because then that opens up an area where the U.S. has a structural competitive advantage, and other governments can start to push back in more materials ways than they have access to in the good side.
James, one of the questions, and you cover Asia Pacific, and there are this entire AI theme. How do you think about it? I mean, many people are now openly, strongly starting to say, well, there perhaps is a bit of a bubble building in this space. Your thoughts?
Sure. I mean, smarter people than I have opined on this, in particular some of the corporate leaders of the largest companies in the space. My personal view as a user of AI and as somebody that runs a function and employs a lot of analysts, this is an absolutely critical tool that we have to understand how to use. In a competitive industry, will it result in dramatically lower headcount? Will it result in dramatically lower salary levels, et cetera? I doubt that. I think it will allow us to do significantly better research. I think it will allow us to do significantly deeper research. But in a competitive environment, I think it's unlikely that you're going to see having an employee base or that type of cost savings. It's an absolutely critical tool that both I as well as my team needs to understand how to use effectively. But it's a tool. I don't know that it replaces. It's a fantastic way, particularly so if we can differentiate AI versus LLMs, because they're very different conversations. LLMs are fantastic at summarizing what the world knows. That's not my team's job. My team's job is to ask new questions, teach the street new things that it doesn't yet understand. LLMs aren't great at that. And so if we segue from summarization of existing reality to a forecast of future reality, which is where my team lives, it's a tool.
It's a tool, but you're not answering the question, a bubble or not, from a corporate perspective, from an investment perspective, capital misallocation, those kind of things.
I think the critical element that we have to remain focused on is a forecast of incremental returns for all of this investment. And at this point, corporate leaders in that space are saying that those returns are very uncertain.
Well, James, we'll leave it at that. Thank you very much for joining us.
Thank you so much.
Have a great conference. Really appreciate your time here.
Thank you.
Thank you. Well, I think, guys, it's back to you in the studios.
Thank you. That was a great conversation. But for now, we'll slip into a short break. And on the other side, we'll move from macros to micros. Lots of stock-specific action to track today. And we'll get to it in top 10. The stocks that we're looking at, IT as a whole, Power Grid, Siegel, PNC Infratech, NBCC, NetWeb, Aarti Pharma and Garden Reach Shipbuilder. Stocks on the radar with negative news flow are Lupin and GNFC. And, of course, all the IT stocks. Welcome back. Let's continue to talk about the Indian IT sector that could feel the heat on the back of the executive order signed by Donald Trump 2 days back to increase the H1B visa fee to $100,000. CP Gurnani, co-founder, vice chairman at ENEOS, is now with us on the phone line. Mr. Gurnani, morning. This is the most dramatic shakeup of H1B visa that, the program that we've seen ever. Do you think the H1B visa program as it stands today becomes unviable? And what, according to you, is the impact on the Indian IT industry?
I think it is one of those geopolitical posturing. Number two, from my point of view, is very simple. We delivered from India projects seamlessly for 2 years without any travel at all. That means we can maintain systems, we can deliver systems without any H1B or travel. And we approved it over 2 years. So the customers have the confidence that this is not a necessity. Number third is the relationship between the American companies and Indian companies have now matured, because this is not a new relationship. It's not a new project whatsoever. So I think you have noticed it, that Indian companies' dependence on H1B has reduced by almost 60% over the last 5 years. And we can do with much, much lesser. And I don't think this will disrupt the Indian IT industry. As a matter of fact, I see it as a positive. Positive number one is we will do more offshoring, there will be more GCCs, and there will be more automation. Number two is that Indian IT industry will shift towards products and platforms to reduce the dependence on some of these programs like H1B even more. So I see only the positives, and temporarily also this is not a setback.
All right. Hi, Mr. Gurnani, and thanks a lot for joining in, sir. Do you think, but higher offshoring, they could look at higher offshoring, but could it attract further scrutiny from the administration out there, and it could actually make things difficult?
I mean, listen, if you want to hurt yourself, that means if an American administration wants to hurt themselves, let's face it, there is not enough skilled STEM workers in United States. And that is why it is not only the Indian IT companies. That is why a JP Morgan or insurance companies or the Amazons of this world apply for H1B visas. So if you want to hurt yourself, or if you want to make your cost of production higher, if you want to make your cost of technology higher, I mean, honestly, yes. I mean, anybody can do whatever act they want to do. But in general, I think Indian IT industry has reached a level of sophistication, level of thought leadership, a level of maturity that a step back will not hurt anyone. I'm talking of all the companies which already have enough H1s in the circulation, and hence they can manage with their own H1s and hence be able to support the client without getting into any kind of a panic.
Mr. Gurnani, well-articulated thoughts on this particular issue, and the companies do have 6 months to come out with mitigating factors. But as Mr. Gurnani pointed out, and he's been a veteran of the Indian IT industry for now more than 2 decades, he points out that it's not going to be very disruptive. Thank you very much, sir, for joining in. And someone called it a self-goal because of the kind of dependence that big tech, consulting firms like Accenture, Deloitte, EY have on H1B visas. So 70% of the H1B visas go to Indians.
Yes.
But a majority of that is actually by big tech firms like Amazon, Meta, Microsoft, and consulting firms. So someone called it a self-goal. Just echoing the point. Yeah, just echoing
Absolutely.
the point.
And I like the point that Mr. Gurnani made as well, right? It could actually make Indian companies more competitive. And in fact, offshoring could get a bit of a booster shot as well. So interesting times. Well, let's move on then. Let's get our research team, all of them, coming up on the screen for you, because we're going straight to our CNBC TV18 list of top stocks that we're looking at. And Dreamer, No. You start off the proceedings.
So far all the people we've spoken to said that yes, it's going to maybe hurt in the near term, but in the long term, I think the impact is going to be manageable. So it'll be interesting to see the kind of reaction. But just in the near term, I think there is some fear. Look at the way Infosys, Wipro, ADR performed. They were down between 2 to 3%. BofA says that, if there are no mitigating factors, if the companies do not take steps, as is, there could be an impact of 2 to 6% on an annual basis. But the companies can take steps to offset that. So over a 3-year period, they don't see any impact. But Tech Mahindra is a stock that they believe could be impacted. CLSA also says that it will have a limited impact. If the entire burden on fresh applications, the companies do not reduce the number of people they sent on H1 visas, if you assume ceteris paribus, the impact will be about 6%, but the actual impact should be a lot lower. In their coverage, LTI, Mindtree, and Persistent Systems will see the highest impact. For TCS, it could be lower. But just let's put out the numbers that Midcap IT companies have said. First Source, no impact. Coforge, only 63 H1B applicants were approved last year. Cyient, 6. Emphasis 130, and Persistent hasn't given a number, but they've said the impact is going to be it's not going to be material. So near term, yes, this is a bit of a disruption, but it seems to be that it's manageable and it's not an existential crisis for Indian IT.
Got it. Thanks a lot for that, Rima. Well, let's hop across to Vivek. He's here to tell us about a few more stocks that he's tracking. Good morning, Vivek.
Well, good morning. A few power as well as infra companies in focus. Routine order wins across most of these names. So Power Grid has won and has emerged as a successful bidder under the tariff-based competitive bidding. Now, this is for setting up an ISTS project, and this is in the state of Madhya Pradesh. This particular project will be done via the build, own, operate, transfer mechanism. Seagull is the other stock on focus. The company has emerged as the lowest bidder. Now, this is for setting up a BESS or a battery energy storage project in the state of Madhya Pradesh. This is for a solar PV project. The construction period is for 24 months. The total PPA will be signed for 25 years. The tariff is at 2.7 rupees per kilowatt hour, and the total approximate project value is at close to 1,700 crores. So positive development as far as Seagull is concerned. PNC Insa will also be in focus. This on the back of the fact that the company has received the letter of acceptance. Now, this is from the Bihar State Road Development Corporation. This particular order is for the construction of a bridge. Contract worth 3 years, and the total size of the contract is a little over 495 crores. And lastly, NBCC, a routine order win across 4 states. The company has received orders worth 117 crores. This is from UP, Haryana, Gujarat, as well as New Delhi.
Thank you very much for that. Let's get to some other stocks. Netweb will be interesting. They won an order, 450 crore rupees. Vinny is now joining in with more on that, and she's also watching some pharma stocks.
Hi, Rima. Good morning. So, Netweb Technologies, we've seen a run-up coming in the last month specifically. There was a big order win that came in last month. Now, this is another big one. 450 crore order win. This is from Tyron AI GPU accelerated system. Now, this is obviously for deployment of AI infrastructure facility. Time period of completion is going to be by the end of FY26. So, that will be interesting to watch out for in terms of Netweb Technologies. We're expecting green here. Lupin, that's the one that we are expecting a bit of a subdued performance today. Red is what we could see. US FDA inspection has been completed at its Pune biotech facility. 4 observations is what they've received over there, and the company said obviously they will be working with the US FDA and will give their responses. But as of now, we could see red here. Lastly, Aarti Pharma Labs, that's the one we'll focus on. The company's promoter has sold 0.66% stake in the company, Sefchem Enterprises. They have sold 6 lakh shares. So that's the promoter company. Now, apart from that, we've seen buying coming in of around 1.7% stake overall from Norges Bank as well as Vanguard. So we could see green coming in here for the company.
Okay, all right, Vinny. Thanks a lot for that. Well, let's go to Ria then. She's here to tell us about Garden Reach as well as GNFC. Morning, Ria.
Well, good morning, Nigel. First, let's focus on Garden Reach Shipbuilders. They have signed a $62 million agreement for the construction of 4 units of hybrid multi-purpose vessels. These orders have come in from 2 German companies and are going to be executed within the next 33 to 42 months. They also have a provision of 2 additional vessels of the hybrid propulsion type. And remember, the company had also earlier signed contracts for a total of 8 other vessels under the MPV program. And apart from this, for Garden Reach, they've also signed 5 MOUs MOUs with strategic partners in the shipbuilding, port and infrastructure sectors. So positive start expected for Garden Reach. Moving on to GNFC, this one expected to open in the red since the TD2 unit at the Dahej unit has been shut down due to a leakage. The company has clarified that the incident remained confined within the company's premises and there was no loss of life and no gas release beyond the plant boundary. This TD2 plant will be restored after the completion of the necessary checks and the remedial measures once they will be completed.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Power Grid, Seagull, PNC Infratech, NBCC, NetWeb Technology, Aarti Pharma, Garden Reach Shipbuilders. Stock with negative news flow are broadly watch for all the IT stocks, Lupin and GNFC. Moving on now, let's get a handle on what's happening in the world of commodities and currencies. Manisha is now joining in for a complete roundup. Manisha.
Thank you so much for that. Well, I'll start with the crude oil prices, where we have started the day with a gain here. Geopolitical tensions in Europe and Middle East really seem to be supporting. The Russian airstrikes at the West Ukraine are threatening the Polish border, and that is where the premium really seems to be building in. But apart from that, you also have a 19th package of sanctions from European Union coming in on Russia. There also is a tropical storm by the name of Gabriel brewing up in the Atlantic Ocean. So there are various things right now which seem to be supporting the crude oil prices. Having said that, the precious metals also have surged back yet again. Friday was a day of profit taking, but today morning you're looking at the gold prices just about $10 away from making yet another all-time highs. Silver is at a new 14-year highs with $43 an ounce onto that one. What the markets will watch out for in this week is going to be about the U.S. inflation data, and 9 Fed official speeches are slated for this week. That is where you'll get your cues from.
Okay, all right, Manisha, thanks a lot for that. Well, time to slip into a short break. On the other side, Dharmesh Kant of Chola Securities will be joining in to help us out with some fundamental stock talk. Stay with us.
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड भी, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
विराज रायचन स्टील। आपने वरदान स्टील का नाम सुना होगा। ऑफ कोर्स। आप मिस्टर वरदान के बेटे हैं? नहीं। छोटे भाई? नहीं। दामाद? नहीं। फिर? शेयर होल्डर? सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड भी, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Welcome back. You're tuned in to Bazaar Morning Call and hope you're having a pleasant morning. Well, Dharmesh Kant, head research at Chola Securities, joins us on the show. Hey, Dharmesh, good morning. Good to see you in. Well, we've spoken plenty about tech from the morning because of this H1B visa issues that could hurt a lot of Indians. But let's keep that aside for now. Let's focus on other stocks. GST 2.0 is here with us, and it could drive a big consumption boost. And probably the next 1 month or 45 days or so is going to be very, very interesting because of a whole host of measures and GST 2.0 at the helm. Tell us, how do you approach autos, cement, some of those potential beneficiaries of the GST cut? I recall you telling us you're bullish on Hero MotoCorp as well as Mahindra & Mahindra in the past.
Yeah, very good morning, Nigel, and thanks for inviting me for the show. Now the time has come when the ruling will get going as far as the consumption drive is concerned. Government has did everything. I mean, whether it is GST cut, indirect tax cut, direct tax cut, and the interest rate cut, everything has been playing out. And there has been appeal by the government as well to boost up the consumption since savings are there in your pocket. So it has to be seen how the consumption pans out. But our dealer checks suggest across Pan India, there has been a good query and people have been inquiring about when this will be rolled out or how much the differential in the pricing will be. We think this is definitely, it will play out in the next 30-45 days. Though automobile stock prices have run up quite hard. I mean, Hero MotoCorp have run up 20-25% from the time we have discussed about this, and we have been bullish far earlier than that. Same has been the case with M&M. But I do think as incremental news flow with regard to sales picking up trickles down in, there would be momentum in the stocks and they will keep on riding higher. So 10-15% on the very aggressive side, upside can still be there, depending upon how the incremental sales are. And people who are invested, I mean, part profit taking is always recommended, but you can still continue the ride for another 5-10%. That is how we are looking at the automobile space, and the top two picks still remains Hero MotoCorp along with Mahindra Mahindra. Though Eicher Motors, TVS Motor, Maruti, Tata Motors always is likely to see a good upside. At the same time, cement side, as you have rightly pointed out, but I think there would be some tepid kind of a action on the cement space, primarily because if you look at the cement prices net of discount, nothing has materially changed on that price. So the offtake price, the landed price for trade and non-trade sales still remains the same. Volume is what people are looking forward to, but that has to be seen. Again, 5-7% kind of an upside can still be there. And again, the top two picks, they are Ultratech and Ambuja Cement. We are looking at large cap cement companies having a pan-India presence and not going by the mid and small cap. However, I mean, consolidation can still be there in the play. So that is how we are looking at consumption space. Not particularly bullish on the FMCG basket per se. I mean, how much you can consume. You cannot consume two toothpaste at the same time. So that is how we are looking at that space.
So Dharmesh, give us 2-3 stocks where you see a lot of upside. As you said, in the case of in the case of auto names, they've already done so well, and the upside could be what, 5-10%, and periodically you are recommending profit booking. So just 2-3 recommendations from you where there is still a lot of value left in the stock and there could be meaningful upsides.
I think, Rima, I mean, one has to look at financials. But that is one space where rally has not picked up. And if we are buying the thesis that all this macroeconomic play, leads to consumption, longevity, and the drifting of the consumption into the month of November, December, then I think, 2-3 large cap stocks would be. One is from the private sector banking space. ICICI Bank and Axis Bank is looking solid to us. Similarly, from the public sector banking space, Bank of India. So these are from the banking space. NBFC, as Nigel pointed out, cement can pick up. So we are playing the real estate scheme through, NBFC space or housing finance companies. There, I think PNB Housing Finance has taken a strong betting, and that was nothing fundamental to do with it. So business is continuing as usual. So that can be in the recurring along with LIC Housing Finance, Aadhaar Housing Finance, other three basket. So, the idea is go by a basket approach rather than a single stocks approach. And there a mix of, private banks along with, housing finance companies augurs well. As far as consumption pure play on the NBFC like Bajaj Finance and all is there, I think there won't be much traction out there. Much has been priced in. So there may be 2-3% kind of an upside, but then it's trickled down. But our long-term medium play definitely sits in the housing finance companies.
Yeah. Dharmesh, good morning. On Friday, there was that Supreme Court matter with regards to Vodafone Idea. And we got perspective from senior lawyers, etc., who told us that there is a change in stance, softening of stance from the government of India. This is now scheduled for the 26th of September now, where the government is expected to take a proposal to kind of sort of try to resolve this. We don't know what shape, form, etc. Vodafone Idea went up. Indus was up a little bit on Friday. Your thoughts?
Yeah, good morning, Bashar. I mean, this kind of rhetoric we have listened n number of times in the past 2-3 years, where government is, softening its stance, and they have already done their bit. They have done a lot of equity infusion, so it solely rests on the EGR part. If that has to be done away. Otherwise, on the operating level, if you look at Vodafone Idea, despite subscriber base getting reduced, they are doing fairly well on the operating profit front. And if some lease of life is given to them, then definitely the things are in place and they can consolidate and take it forward from there. But unless this comes through, the bleeding is excessive. Look at the kind of a debt which is setting out there. So just servicing of the interest component is unbearable. And at this point in time, if the bleeding continues for next 6 to 9 months, then I think nothing will be left to be undone. So we are hoping that things turn around. But unless something comes through, it's difficult to take a long-term investment bet. Trading bets based on news flows can always be there.
Dharmesh, what about NetWeb? It's one of those few IT-related stocks which are close to its 52-week highs, I think 1% away. And its low in April was 1250, and now the stock is at 3200. That's a 160% jump. That's the kind of buying interest at lower levels. Now, I know the stock is expensive, but I was just looking at the growth numbers. In FY25, top line growth 59%, FY24, 63%, FY23, 80%, the year prior, 73%. So even though it's expensive, it's delivering on growth. How do you feel about this particular stock?
Yeah, sure, Neva. I mean, this is a unique proposition in the hardware side of the entire data center and the cloud built up out there. And they have done exceptionally well as far as, building up of the hardware side of the technology is concerned. So this is another classic example of services through hardware rather than software platform. So the company has done well and it's likely to do well. Still, it's a far cry from a $1 billion mark of revenue. And I do think the way it is going and the way the evolution is happening across the space, and a lot of data centers would be required in India to match up to the global standards and the domestic data use itself. So, I mean, 2-3% is what is there as of now compared to the data generation and storage of around 20%. So, a lot of gap there. So, people are buying that idea. I mean, if you are not looking at valuation per se on the multiple side at 100 PE multiple or say 110 PE multiple 1 year, 2 year forward, and just looking at the growth trajectory and the potential which is there in the system, and they have early mover advantage as well. The proof of the pudding has already been established about the capabilities. So stay invested. I mean, and just be there for 3-5 years. I think there are further upsides left to this company.
We had on Friday on Editors Roundtable.
Hiren Ved.
Who we discussed NetWeb quite extensively, right? So yeah, expensive, but
it's looks like very good growth.
Fantastic growth coming through there. I think we have to take a break, so let's do that. Dharmesh, of course, is still with us. We'll come back in just a bit from now, get you some technical trading ideas as well. Coming up on the other side, Sudarshan and Mitesh.
gestures.
Welcome back. There's about 10 minutes to go for the market pre-open session. And let's get to the brokerage calls of the day in terms of what the street is watching out for. Sud is here with that list. So good morning.
Morning, Prashant. So first one on the list is Vodafone Idea. On Friday, we saw that Supreme Court has agreed to hear Vodafone Idea's plea related to AGR dues, and even government's reply was looked like it's looking to resolve this issue, and it has said that it's not opposing Vodafone Idea's plea. And today, Citi has come out with a note. It is a buy call, but mentions that it's a high risk, and target price has given is of rupees 10 per share. On Friday, also the stock had moved as high as 10%. Another stock might be in focus is Knowledge Realty Trust. Two brokerages have initiated coverage on the stock. First one is Morgan Stanley. It has initiated coverage with overweight call, and target has given is of rupees 122 per share. It says company offers a defensive profile on steadily rising cash flows, and there is a potential on acquisition front as well. And it's a strong GCC-led office. There also demand is expected to improve further going ahead. Second, even BofA Securities has initiated coverage with a buy call, and target is of rupees 110 per share. Some of the key features that it has mentioned: first one is most geographically diverse company. Second, it has a high exposure to GCC and has a low exposure to IT services. It has a healthy balance sheet with 20% leverage, and also it's sponsored by Blackstone and Satwa. And recently, SEBI has also mentioned that it will grant equity status to REITs, and which is likely to widen the investor base. That also might be positive for Knowledge Realty Trust.
Thank you very much for that. When we had chatted with the management of Knowledge Realty Trust during the IPO, they said that we hope to return mid-teens growth to our revenues. So mid-teens. And he said this will come by a combination of 7 to 8% dividend yield, and plus the balance will be on account of an increase in their operating cash flows, because many of their office spaces are coming up for rent renewal. And they're coming up in marquee areas like BKC. So the expected rent increase is going to drive a jump in their operating inflows. And as Sudarshan pointed out, there is that headroom post the IPO for acquisition. So mid-teens revenue growth is what the company was targeting to return to the investors over the just near term, 2 to 3 years next. But let's get in the handle on the market technicals. Sudarshan Sukhani and Mitesh Thakkar are now joining in. Gentlemen, good morning. Happy Monday to you. So Friday was a bit of a down day, and today the Gift Nifty is also suggesting a downtick. What should the approach be? Sudarshan, if you may go first.
Good morning. See, the approach, despite the fact of news and say a disappointing weekend for most Indians, I think the trend is still up. My view was that 25,200 is the cutoff point below which we should close long positions. That number remains. So far as the Nifty maintains its level, head above this level, I would be a buyer on dips. And actually today's early morning gap down, if it happens, hopefully, is a buying opportunity, because we already know where our stops are. So I would be a buyer on a dip.
Okay, will be a buyer on dip. Got that, Sudarshan. Good morning, gentlemen, and good to see you all in on this Monday morning. Mitesh, what's your view? The Gift Nifty is suggesting we pull back a little bit. We had some red on the screen on Friday. So put that together, you're getting 150, 180 point downtick. How do you approach trade?
Good morning, Nigel. So I think, we did have a negative day on Friday, and the closing was around 25,330. And a 70, 80 point kind of gap down would imply that we might open around 25,250. Now, that is where the gap area is. That is where the first support for me kind of comes in. If we open around 25,250, 270 zones, and if there's lack of follow through, my idea would be to buy the dip immediately. As Sudarshan also mentioned, the trend is on the upside. You will have these kind of pullbacks and profit booking kind of, marginal declines. But around 25,250, if there's stability, I would immediately want to buy into it. In case we see the markets continue with the supply, then I think the next support level, which is around 25,150 kicks in, and that's where, I don't think that Nifty is going to break below that level in the short term, and therefore that will be an even better buying opportunity. But the initial idea is that we might not see 25,250 itself break, it might sustain, and therefore the morning dip would be a welcome buying opportunity.
Gentlemen, Mitesh, morning to you. Sudarshan, morning to you. In terms of individual trades, Mitesh, what would you go with?
I have a mix of buys and sell, Prashant. On the stock side, there are some stocks, which are showing signs of correction. So I have some sell calls as well. But the broader idea is to be more on the long side. I have a buy on Bharti Airtel, a good swing breakout over here. The price are making a fresh swing high above the earlier highs of 1940.50. So keep a stop below 1940. Look for a first target of around 2000. Also a buy on Hudco, which had a very strong price volume breakout on Friday. So on a mild decline, say if you get it a point and a half lower, around 228 to 27, buy with a stop at 223 for a first target of around 238 to about 240. The FMCG names surprisingly look, they might have some more corrections. So I have a negative call on HUL, which I would recommend selling with a stop at 25.90 for targets of around 2500. And Page Industries, the structure is negative. The stock is trading at a support of 43,500, just about 70 points higher. So if it breaks 43,500, take a shot with a stop at 44,100 and look for a target of around 42,300.
Got that. Buy Bharti, Hudco, sell Page and HUL. Sudarshan, you were telling us buy the dips today. If IT opens gap down, and it's likely to do so, what would the trade be on the Nifty IT index or any individual tech stocks? And then tell us your stock recommendations for the day.
It's a very good question, and I'll answer that with one of my stock recommendations. My big, bold recommendation is to buy TCS. I'm giving an initial stop of 3,000, although that would depend on how the market opens. And when you want to buy IT stocks or even the Nifty, there's no need to jump into the IT stocks. Once they stabilize, they are a buying opportunity. TCS is a buy simply because it has been moving sideways, building a base for 1.5 months. I think a dip would actually be a test of its earlier low and probably successful. So my view on IT stocks is to go and buy them. For the other 3 stocks that I have, all of them are buying ideas, and a dip is usually, we always say buy the dip. When the dip comes, we all get that fright. Who knows what will happen? So JSL is a buy with a stop under 772. Minda is a buy with a stop under 1300, and Torrent Pharma is a buy with a stop under 3560.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you all for your 9-10 call. For the time being, we'll take that short break, come back, we'll get the pre-open rates. We'll also have Manik Taneja of Axis Capital who will be joining in to discuss the key trends in the IT sector and also give us his sense on the impact of the new H1B visa fee.
policy.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC TV18 Motilal Oswal studio. Well, we have Dharmesh Kant, who's still with us before we get the pre-open rates. So, Dharmesh, going to squeeze in a couple of more questions. Now there is a basket of money that you have to allocate, and tech may be a little bit under the weather, and there are various uncertainties in that space. So platform companies could get a larger chunk. And as we saw, some of these companies have done very well. Whether you look at Paytm, whether you look at the new listed company, Urban Company, that's now trading at around 100 times forward earnings, or maybe, the eternal Swiggies of the world. From this basket, what do you like? Do you think there is still value in any of these names? If yes, which one?
Yeah, I mean, you have to segregate platform companies under two baskets. One is the fintech-led basket, and the other is like Urban Company, Eternal, and Swiggies of the world. So, I mean, Eternal, Swiggies, and Urban Company, these are basically, an arbitrage or a leverage on an abundant, cheap, partially educated labor force, and this can be replaced anytime with some other platform player coming into play. So there is no business mode to it. It's just that it's an early mover advantage they are getting, and competition is hitting up and it's likely to hit up further. Since they are early movers, they have got the valuation multiples, and that's on the high. If I have to play it, I would definitely play it through fintechs like Paytm or a PV policy. I mean, Policy Bazaar. Those are the companies where I still think there can be a significant delta and value accretion going forward as they capture the market share in a big way. So penetration is still low there, and it's getting highly penetrated, and those are the companies looking forward to. So if I have to allocate, it would be more on the fintech side rather than on a pure play on the cheap labor which is available.
By the way, today JM Financial has downgraded Swiggy from a hold to a reduced rating, and they say that Swiggy's balance sheet is a cause of concern. It requires remedial measures. Media reports suggest that Swiggy may sell its 12% stake in Rapido, but that can give the company only $320 million. But JM says that the company needs a lot more, maybe even a $500 million cash raise, because while Instamart is doing well, it's losing relative market share to Blinkit, and Blinkit has planned aggressive expansion. So if you are comparing Swiggy to its well-capitalized peer, like an Eternal, there is a risk of the company falling behind. So according to JM Financial, that until the balance sheet issues are resolved, meaningful shareholders are unlikely, which is why they have a reduced rating, though, and the target price is at 440. Currently, Swiggy is close to about 460. So limited downside, but upside clearly, according to JM Financial, looks capped.
I think we're more IT, Rima.
All right, so let's go.
Rima, it's not going away from you today.
Yeah. Well, it's been there for a weekend, but Dharmesh, stay on. We've got Manik Taneja, Executive Director, IT Services and Internet at Axis Capital, now joining in. Manik, good morning. We've been discussing the big picture so far and the impact on the industry, but stock specific, if you could drill it down, who gets impacted the most and who can escape this?
Sure. Thank you for having me, Rima. First of all, at the very outset, if you look at numbers, Indian IT has kept on reducing dependence on the H1B visa program. Just to give you some context, from a combination of initial plus continuing approvals, the top 5 Indian IT companies receive between 40 to 45,000 visas on an annual basis between FY16 and 17. That number was less than about 12,000 as of the most recent financial year, which is still underway given they follow October to a September accounting. And even from a percentage of the total H1B visa approvals, that ratio for the top 5 companies has fallen from almost close to 11-12% to about less than 5% now. So the dependence for these companies has kept on reducing, and which has been a function of these companies hiring a lot more local resources, also sponsoring some of their existing workforce for green cards, as well as expanding nearshore presence in markets like Canada and Mexico. So I would say this is fairly a manageable risk, and with the clarity that came up over the weekend, I think becomes all the more manageable. From a ceteris paribus, assuming that these companies continue to essentially apply for similar number of visas as they applied for in the last year on a continuing basis, and which is a big if, given companies will change their operating model and also push some of this increase back to customers. something similar to what we had seen between CY 17 and 19. So if one, or while that will like largely be the case, but assuming that they retain the same number of visas on an annual basis, the impact is probably higher for Tech Mahindra amongst the tier 1 companies. Tier 2 companies much more impacted compared to tier 1 companies, and BPO companies are completely insulated. So sorry for that long-winded answer, but I just wanted to set the context.
Did you speak to any investors who invest in technology names? Do they also concur that the impact is going to be limited? And if that is the case, is the dip any correction a buying opportunity? And just one follow-up, how much downside from here on then for the IT stocks?
Sure. So I would say if there is a very sharp fall in the stocks today, probably that provides an opportunity to add on to these names. See, outside of the current visa-related challenges, the challenge that the Indian IT services sector essentially is facing is continuing moderation in terms of growth. And given the maturity and the fact that with the way macro essentially seems to be playing, there is concern now as to how CY26/FY27 plays out. So that's where we've had a very selective approach within the sector. So our preferred names are Infosys and Wipro amongst the tier 1 companies, the likes of Emphasis and Hexaware amongst the tier 2 names, and then in the BPO space, First Source and Sagility are our top picks.
You said Tech Mahindra is most impacted. Can you help with the numbers?
So as per our calculation, about 4% plus impact from an EBITDA standpoint for Tech Mahindra compared to probably tier 1 companies, which will be anywhere between 1.5% to 2%.
Okay, and how is this arrived at? I mean, how many people do they have on H1B visa? How did you get this 4% EBITDA impact for Tech Mahindra?
So as of the most recent year, Tech Mahindra basically got almost 957 H1B approvals. This is a combination of initial plus continuing visas.
Okay.
And we basically arrived at is essentially looking at a combination of the average 3-year approvals that these companies sought, and then assuming that they continue to essentially apply for a similar number of visas next year and 100K charge for that. Yes.
CLSA's note also talks about in the mid-cap space, LTI, Mindtree and Persistent having possibly seeing the maximum impact. Can you help with the numbers here? Because Persistent, while they have clarified to the exchanges, they haven't shared how many H1B visas they sponsor, and therefore, like some of the peers like Sign, Emphasis have given actual numbers. So can you tell us for LTI, Mindtree and Persistent, and in the mid-cap space, would they be the ones most impacted?
So Persistent between in FY25 applied for almost close to about 192 approvals. This is as per the data that's there on the USCIS website. And LTI, Mindtree, I don't have the data offhand, but if you were to essentially extrapolate that for Persistent, the impact is close to about 7-8% on FY25 EBITDA if they retain that absolute number in terms of new applications next year. As I said, these are all significant ifs because companies will change their operating model, will probably apply for lesser number of visas. So assuming that essentially it's a 7 to 8% impact.
Okay, that's the gross impact pre-mitigation. These are the numbers that Manik has kindly shared for us. But of course, the companies have 6 months. This will be effective only next year for FY27 visas. So that's the timing angle. And the companies will look at increasing nearshoring, local talent, perhaps reduce the number of people they said, just send critical selective H1B visas. So the actual impact could be a lot lower.
Absolutely. Of course, there is... the problem is there more coming apart from this, right? Because, that higher act, which many are saying perhaps is low chance of passing, but there is another sort of, I think, proposal, increase the H1B sort of wages themselves. So is that going to basically adds to uncertainty, although earnings impact, as we've been pointing out, remains kind of mixed. All these IT stocks at the end of the pre-open session up at the bottom of the screen, they're down not very much. I mean, 1.5%, 2.5%, 3%. So in that range, Infy is down about 4% or so. And as I was pointing out earlier, this, of course, is the reason why I think the market is under a little bit of pressure as well. Sudarshan and Mitesh are back with us with their 9-10 call. Sudarshan, what do you have?
Minda. Minda is a buy with a stop under 1300.
Okay, Mitesh, what about you?
Yeah, I'll go with the buy on Bharti Airtel for 2000.
Okay. Uno Minda and Bharti are the two calls at 9:10 from Sudarshan and Mitesh respectively. Well, the standout brokerage report of the day, which one is it? Nimesh is standing by with that. Nimesh, good morning.
Hi, Prashant. So today's standout is an insurance sector. JP Morgan has upgraded a couple of names within that space. So they've upgraded HDFC Life to overweight from neutral, and target price sharply raised to 980 versus 750 earlier. And they've double upgraded GIC RE to an overweight from underweight, and there the target price is increased further sharply to 480 versus 197 earlier. So big upgrades on these two names from JP Morgan. LIC remains the top pick with an overweight rating, and a target price there is 1152. Now JP Morgan expects the sector's compounding, the performance to the continue, and the balance sheet will strengthen further from here on. So that's the big call that they have. And on back of that, they expect the momentum to earnings momentum to continue as well. The very near-term trigger for the stock would be the GST-related new, new sets of policies which are going to get announced. So that could be a big trigger and a very near-term catalyst. But two big upgrades from JP Morgan today: HDFC Life to overweight, and a double upgrade on GIC RE as well.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's hop across to Gaurav. He's here to tell us about Paytm. Morning, Gaurav.
Well, good morning. It seems like Jefferies is being a little bullish on Paytm because they have increased the target price to 1420. They recently met the management, and now what the management is saying is that payment platform has come a long way and it is also delivering profits now. They believe that the profit is going to increase. They have also indicated it earlier during the con call. Other than that, management is also saying that the merchant franchise is very strong with around 45 million users so far, and it is the lending business is also going to increase and they are going to perform well. What they're saying is that there are new opportunities in the postpaid on UPI segment and wealth segment. Remember, recently they launched this postpaid on UPI service in collaboration with Suryodaya Small Finance Bank. So definitely they are also advancing in this field. And because of all these reasons, now Jefferies, they have raised their EBITDA target almost by 9 to 14%, which will be led by lower OPEX as per Jefferies. Definitely, when we talk about the stock performance in the last 6 months, we have seen stock delivering more than 50% returns from around 800 odd rupees to more than 1200 rupees. But recently, in the last trading session, we saw the stock decline almost by 4.5%. So given the target price of 1420, it leaves further upside of 20%. So definitely, it makes a case to watch how Paytm performs in coming days from here on.
Okay. Thanks very much, Gaurav, for that. Stock is up at about 1180 or so at this point in time. 90 points lower on the Nifty, about 475 lower on the Sensex. But let's just take a quick look at where else where else stocks are moving. Of course, IT, we've been highlighting. They're all up on your screen, between 2 and 4% lower in Tech Mahindra, TCS. Other stocks with news flow: Power Grid, Seagull, PNC, Infratech are all up on your screen. PNC is up about 3.5%. There's NBCC, which is in focus. NetWeb, of course, has been a rocket. Stocks up 2, and Aarti Pharma is another one, which is flat. Garden Reach Shipbuilders, Lupin, GNFC are some of the others, which we highlighted as a part of stocks with news, order wins, etc. So there you go. About a minute to go, less than a minute to go as far as market open is concerned. So we'll look at where things open up at, and then, of course, we will dive into individual stocks, etc. So it's a 70, 80, 90 point lower start. It's been that way from the morning, and we'll pick it up after that. So 25,240, it was a nice trending market higher. Friday, of course, we took a bit of a pause. Let's see if there is more here. 25,250 on the Nifty is where the Nifty is opening at. The Nifty Bank is not yet. I don't think we have the first rates here. Okay, I think we have 55,470. It's actually slightly in the green, if anything. Midcap index is down about 0.2. You've got the small cap index, which will come up on your screen as well. I'll give you a sense of where we're starting. 30 points, 35 points lower on the small cap. So I think the bulk of the impact coming via the IT services companies, and that's why the Nifty is down about 80 odd points. Other indices are doing better, if anything. The insurers are higher. Nimesh put out that call from JP Morgan. HDFC Life is coming up at one end. On the other hand, of course, you've got IT services, and the Nifty heat map is kind of evenly split between how many stocks are higher and how many stocks are lower. Rima.
Well, it's IT all the way down. The losses, though, are limited to about 2 to 4-5% because, as analysts pointed out, the overall EPS impact is also going to be not more than 3-4%. And plus, companies have mitigating offsetting factors. But the top loser right now is Tech Mahindra. Analysts have been pointing out that Tech Mahindra is the most impacted in the large cap universe, tech universe. And that stock is down close to about 5%. And in the mid cap end of trade, it's, I think, persistent, where you are seeing considerable weakness. But the top 5 Nifty losers are all IT names. It's Tech Mahindra extending the losses now to 6%. TCS, Infosys, Wipro, HCL Tech also seeing cuts of close to about 3%. So that's taken a big knock today on expected lines. Autos too, a bit on the back foot. Seems like the GST bonanza, GST reforms 2.0 has already played out. Stocks have done very well. So for today, Eicher Motors, Tata Motors are down close to about 0.5%. We should also pull up M&M and Bajaj Auto flat. It looks like, at least for now, things are on the quieter side. On the way up, it's life insurance, as Prashant was pointing out. HDFC Life is your top gainer. Adani Enterprises is one of the big movers. Here, there is a Jefferies note. They're bullish on the stock. Target price is 3,000 rupees. And Adani Enterprises is moving up quite well. Eternal is seeing buying. This month, it's seen a rally of nearly about 8%. In fact, many of the Adani Group stocks are continuing with the excitement from Friday after they got a clean sheet from SEBI. So Adani Ports too on the buying radar. But IT down, and the other sectors stocks are not seeing big moves.
Well, that's right. You know, a few stocks actually that are moving up. SCI, they have signed an MOU with BPCL, HPCL and IOC to jointly build and operate a fleet that strengthens India's shipping capacity and energy security under the Atmanirbhar Bharat Act. So that's why, in fact, that stock, in fact, is moving up on very, very large volumes. You have Garden Reach as well, that's up close to around 5%. Anandraj, I think Rima mentioned that stock is up and about in today's trading session. So big move is what we're seeing on all of those names. A quick word on the tech index. Well, it's still down close to around 3.5%. It's just recovered, I think, 100 points from the lows of the day. And, now it's 200 points recovery from the lows of the day. The low of the day is around 35,100. By the end of today, you'll want the tech index actually to recover considerable amount of this ground, which will tell you the kind of interest that you're seeing in the sector, because that's seen a bit of a run-up. Today, it's under the weather because of the H1B visa issues. But, let's see whether or not there can be some recovery. A few more stocks, you have Vodafone Idea. That's up close to around 1.5%. So it's seeing some kind of follow-through buying. Sagility is down 2.5%. Rima mentioned that note on Swiggy. That as well is little under the weather. So the Nifty opens up in the red on expected lines. The problem today is that the tech index, well, that's giving no support whatsoever. The Nifty Bank, I think, is doing a relative outperformance if I get that one up for you on the screen. Let's see whether or not this dip gets spotted too.
Such as the negativity surrounding, the sentiment has been hit. Even a company like First Source, which is clarified, they have zero impact, no H1 employees, on H1B visa. Even that stock today has taken a hit of close to about 2%.
Absolutely. The index is down about 3% or so. So there is that pressure, which is very clearly showing up. The number one volume-led gainer on the NSE is Urban Company. Urban Company had a fantastic, last week, of course, it listed. It's only 4 days old in the market. Today is the 5th day. So opened at 160 bucks and stocks now at about 190 rupees right now. I mean, I think it's not the 5th day, it's the 4th day in terms of the listed space. Listed on the 17th a few days ago. So 3.5%, very, very large volumes coming through, 191. NetWeb is moving up 4% now. It's of course a new all-time high. As I was saying, I mean, it's up 25% this year. It's up a lot last year. I mean, of course, 2024 was the re-rating year in that sense, but the move is continuing. Silver Bs are up about 3% or so. I don't know if you can pull that up, but yeah, I mean, it's coming up. Silver, the ETF is also moving a little high. I'm not sure if there's a move as far as silver prices are concerned. On the downside, apart from the IT stocks, there isn't very much else. It's all IT, which is taking a knock right now. Mihir Vora is with us, Chief Investment Officer at Trust Mutual Fund. Mihir, great to have you with us here. Thank you for your time. So I guess first question is IT. What else? What do you think earnings impact, as we've heard from company after company and exchange releases, etc., seems to be minimal. But, when uncertainty goes up, not just what's happened, but what may happen in the future, caps valuation multiples, doesn't it?
Yes, it does. And in any case, we've seen that the large cap ITs were not the fastest growing parts of the market in any case. So this certainly does not help sentiment. We have seen that there is some differentiation between companies which have less of H1B dependence versus companies which have a little more. But I think it's really, markets today reacting to the initial news. But in any case, if I were to take a 1 to 5 year call, then given the current business models, the large cap IT companies especially don't seem to be the fastest growing parts of the economy. I'd rather stay with the domestic themes.
So don't buy, even if you have a 2, 3, 5 year kind of horizon. Don't buy IT.
Absolutely, because the domestic and the segments in which the government is focusing on, like investments, consumption, etc., have a tailwind for them. Whereas in IT, you're only going to see incremental headwind. So while the US has clarified that the H1B program and the fees will not be on a retrospective basis, it does not apply to the existing stock of holders. But incrementally, obviously, it's going to be more expensive, and at $100,000, I think the H1B program pretty much becomes very, very selective and unviable for the normal kind of IT services that we were used to. Specialist roles, etc., will continue to happen, but that'll be a very minuscule portion. So obviously, the IT sector will face headwinds in its current business models unless they do things differently.
Well, indeed. Hi, Mir. Good morning, and good to see you, Ben. Yeah, tech seems to be going through its own share of problems. For the time being, though, there is some kind of recovery that we're seeing from the low point of the day. So we'll see how that one goes. Let's focus on the domestic themes then. Trump seems to have stole the thunder away from the GST 2.0. Let's talk about that. GST 2.0 goes into effect from today, and we could be bracing for the best possible consumption period. Possibly the next 30 to 45 days could see a lot of buying. At least that's the hope. Consumption-related names as well as on autos. How much of this good news is in the price, and how would you approach these sectors?
Absolutely. The PM himself has said, go forth and buy stuff. So obviously, that's going to create a good tailwind for the discretionary consumption segment. I think not only goods, but also services like airlines and hotels, etc. We are in for good times. And the fact that companies have done proactively a lot of pricing adjustments to at least create that buzz around the whole GST cut. So the timing was appropriate. We have the Navratri season and the festive season now starting for the next few months. So it should be good times for consumption. I think the sector has been quite under-owned for quite some time. So while stocks have reacted and have gone up in the last 1 month or so, I think if you look at the portfolios of a lot of mutual funds and investors, there was a lot of underinvestment in the sector. So you might still see a lot of incremental money flowing into this segment.
Okay, all right. Mihir, what about market construct itself? We have had our own set of headwinds, particularly in the last 12 months or so. Same time last year, the markets were extremely buoyant. Earnings growth was expected to pick up. We're talking about, even scaling higher from where we were at. Last 1 year, no returns. That's why retail is getting a little bit frustrated, because they're not used to this sort of a period after 4 very, very good years. So now the maturity of the investor will come into play. What is your approach with regard to the index? We are still holding strong, given the headwinds, whether it was geopolitical issues, whether it was with the lack of earnings growth, and the entire Trump saga that's played out. Do you think the markets can hold their own? The recent lows will be protected, the lows of this year, and the markets maybe see a time correction?
Well, we've already seen a time correction. As you mentioned that we've not made returns at the index level in the last 1 year. But the big issue is that we have to probably select which index we want to look at, because we were just talking about IT. That's the second largest segment in the Nifty 50, and the largest, of course, is banks and financials. In IT, there are headwinds as we just discussed. In banking, while everything is hunky-dory, valuations are cheap, we are still not seeing credit growth, which the hope is that it will happen for the second half. So IT, I'm not expecting to do much in the next 1 year or so. But banking, a lot depends on banking and the consumer part of the segment, apart from the traditional ones like government consumption, government investments, defense, etc., to drive the index. The good thing is that it was very lopsided for the last many years in favor of financials and banking as far as index returns are concerned. Now we'll have to depend a lot more on the other segments for the index to work. So it's going to be, my guess is it's going to be a year in which stock picking will be more important than looking at the index levels.
Mihir, let's focus on the metals pack then. There is hope that there can be a recovery from here on. The stocks, actually, to be fair, they have been the outperformers in the last 30 to 45 days because there is hope that China is getting its act together. There's going to be a lower amount of supply coming out of there, and we're bracing for some price increases in all probability post the monsoon. It's a tricky sector, but I've seen you in your earlier avatar as well. Sometimes you don't want to play the core metal plays. You look at some pipe makers. You look at other ways of playing the metal theme. How would you approach this space? Because clearly the government's measures, Chinese measures, and the Fed rate cuts, bode well for base metal prices. So your approach?
Base metals for me is always a tactical trade. So even if prices move up in the short term, they don't last, frankly speaking. In metals, the plays are more on the precious metals side, where unfortunately we don't have a lot of stocks to play with. It's mostly the ETFs which have direct exposure to the commodity that we can play. But metals like steel, I would say, are more of a tactical play. There might be a structural rally in things like copper, but again, we don't have a real pure play, copper play in the country. So while you might want to take a view on some of the metal stocks, it'll be more tactical, and in the metals like gold, silver, copper itself that matter, we don't really have a direct play on the underlying.
And what about the pipe makers and the likes? Would you look at that? Because, construction could pick up. So some of these pipe makers which have made no money whatsoever. There are the other suppliers with regard to the oil and gas space. Water could be in a bit of a headwind because we've heard about collection issues. But the hope is second half of the year will be better. So anything you like from that pack?
Absolutely. So the pipe makers have done well or expected to do well, irrespective of the metal prices. Though I wouldn't really play them for the metal price. But the fact is that given the buzz that we are seeing in construction activity and the continuing of government spending, etc., pipes in general should continue to do well, especially the ones which are more linked to real estate, because we do see that real estate construction in urban as well as in the rural areas should continue to do well.
Yeah, no, absolutely. And I think that's an important point.
And the other big one, and on the in pipes, the other big segment is, of course, in the structurals, which is linked to the government spending on infrastructure like your buildings, your airports, your railways, etc. Where again, I think given the state of the economy, the government is unlikely to let up on the spending on the infra part also. So I think the structural pipes, as well as the pipes used in your water for residential purposes, etc., should continue to do well.
No, those are important points. By the way, the market has recovered, right? The market is down only 40 points now, and it's come off nicely. The low today is 25,200, and we are at about 25,290 nearly. So that's the lift that the index has got. And the IT index is also recovered. It was down about almost 4% at one point. The low is 35,145, and we're at about 35,600. So, it's down 2.6% at this point in time. So coming up very, very nicely at this stage. Urban companies now up to 196. So about a 6% pop now on Urban Company. Any thoughts here? Mihir, Urban Company, did you participate in the anchor round or later since listing?
Well, I won't comment on individual stocks, but as of now, we don't have any holding in that particular name, and I would refrain from making a comment on the stock.
You like the business? Do you like the business, Mihir?
So in general, we like the scalable businesses, where the TAM is large. So you have some of the other ones. We have some of the other ones in good measure, like the delivery services, like some of the online ticketing services, online auction places, etc. So in general, we like the network effect kind of a space per se, and we have a good exposure to this segment, the new age B2B and B2C companies. Yes.
Okay, thank you very much, Mihir, for joining in. Look forward to the next conversation. For now, Let's kick off Corporate Radar. We've got Rakesh Sharma, Executive Director at Bajaj Auto, who's joining us as the new GST regime gets underway. Thank you very much for joining in. And some of the top discussion points today are, one, the GST cut on bikes below 350cc, automakers passing on the GST benefits, and plus update on inquiries after the GST cuts. Thank you very much for joining in. First, on an average, can you tell us the reduction in prices on account of GST for Bajaj Auto, and over and above that, are there discounts, and how are the inquiries looking?
Good morning. Yes, it's a very important day today, as there's a lot of expectation in the market. The news has penetrated right across India, from the urban and off late even in the rural areas. And there has been, in the last 1 week, a very healthy uptick for inquiries. And most people, particularly in the festive states, wait for the Navratris to begin so that they can take deliveries in the auspicious period. We have passed on, obviously, the entire GST reform and the entire GST cut. So in motorcycles, it ranges from, depending on the bike, from rupees 5,000 per unit to about 20,000. And three-wheelers too, we've passed on the entire GST benefit, which amounts to almost 28,000 rupees. We've gone further. There was an expectation that this little distortion which is there on the above 350cc bikes would get evened out, but when the announcement came, the 350cc's are being taxed at a higher rate. So we've gone further and we have maintained our prices of the 350cc plus range, just so that the consumer in the festive period doesn't see at least a disruption over there. In addition, as part of the festive spirit, we've made it attractive, particularly for those people who are going to take finance. And we believe that this cut should see better penetration of financing. So there is a little bit of schemes on processing fees, etc., for customers who are going to be taking finance. So they will see an attractive offer over there. So all that combines to give a really healthy, 20,000 rupees saving for an average 150cc type of motorcycle.
Okay. And over and above the GST, the cut in prices on account of GST pass-through, are you giving any festive discounts?
Well, no discounts, like I just mentioned.
There are incentives if you take, for financing of the bike.
Yeah.
That is there. But other than that, no discounts?
No. There's no discount on the bike. I think there is a very healthy discount which the government has handed over to the customer. So I think that...
Mr. Sharma, how are the inquiries? Can you give us some numbers?
Well, it's very, very premature to give you numbers of inquiries, and I don't know how relevant that would be. But I can say that there have been a lot of calls and a lot of the visits. I would say that in terms of people calling, people visiting, there is a marked uptick in the last 1 week, gone up by 20-25%. So there is a lot of interest in the potential customers.
All right. Hi, Mr. Sharma. Morning and good to see you, Ben. So on a like-to-like basis, festival to festival season, what kind of numbers are you working with? Two-wheeler, motorcycles, as well as if you tell us in terms of EV. What is the rough growth you're looking at? Y'all are giving discounts. The government has given the set of discounts as well. So it should be very buoyant times, right? What is your estimate?
I think it should be buoyant times. I think most importantly, it will reverse the declining trend which the industry was facing. I mean, we just stepped back. FY25 ended at 6% growth. It started very well, did well in the festive, but Q3, Q4 of last financial year were negatives. Q1 was a negative, and year to date, that is April to August, the motorcycle industry was at -1%. And we were all expecting it to be around, between 3 to 5% plus. So I think that this reform is going to be quite a quite an inflection point, because it hopefully will reverse the negative year-to-date trend into a positive one as we go forward, not just in this season, but hopefully beyond the festive season in Q4 as well. Because some of the growth inhibitors which we were seeing in the last few months, which were around inflation, particularly rental inflation, and the reduction of disposable surplus and the uncertainty around inflation, those forces will get mitigated. I think the customer sentiment will become much more positive when they see so many categories, the prices coming down. And that was a key reason. The financing companies were a little bit cautious. With disposable incomes going up, inflation coming down, I think they will feel a little bit better about risk assessment, and finance penetration should improve. So when you put this together, I think this will be quite a pivotal in reversing a negative trend into a positive one. But having said that, I was doing some maths, and we will still be below FY 18-19 in the industry. So there is some, FY 18-19 was the peak, and it will be a touch and go. But hopefully, let's see, fingers crossed, that we can cross the FY 18-19 peak by the time we close the year in March 26.
Mr. Sharma, hi, morning. Prashant here. Could you tell us, because your export proportion is also quite significant relative to other players, in the domestic two-wheeler segment, what's the sort of proportion of your sales which comes from the local market? And second, April to August this year, FY26, compared to those same months last year, there seems to be a bit of drop in market share for you, about roughly 90-100 basis points or so. I just want to go back to the point that Rima asked about other incentives, etc. What else could you do to, regain market share here? And if there are any specific reasons for this, is it intensifying competition in this segment? Go on, sir.
Well, to knock off your first question, the international business on volume terms is about 40-45%. Of course, during the festive, the domestic picks up. But over the year, the volumes are 40-45%. In value terms, it is about 45%. That's our share of our international business in the Bajaj Auto portfolio. Yes, from about 6 months or 9 months ago, we did start to see in certain segments a loss of market share. And a large part of that, I think, is competitive activity in terms of new product introductions by competition. And these have to be responded to. So that's very much in the cards, in the pipeline. Over the next few quarters, there will be a response on our strategic segment, which is the 125cc plus segment, with an array of new products coming in. If I rewind about 3 years back, we had the first mover advantage in terms of introducing new products into the freshly developing segment, which was the 125cc segment. So we raced ahead, and those products need refreshment. They need some more innovation, and that's about it. And that's what we are right now preparing for, and the next quarters should see that. I think that's the fundamental response, and all the other tactical stuff, of course, will accompany this fundamental action.
Okay. Sir, I think when, about a month back prior to this GST announcement, you had spoken about industry growth of 5 to 6%. Is that correct for domestic two-wheelers led by 125cc? Was
yes,
that your...
That's right. That's what
so how will that number change now with this GST bonanza and an uptick in volumes?
So that's what I was saying in the beginning, that when the year started, all of us were expecting around 5 to 6% growth.
Correct.
because FY25 had closed at 6%, but slightly unexpectedly, for reasons of inflation, caution in the financing segment, we found that the industry actually degrew. And that is exactly what I said. But because of this change, the substantial benefit which the government has passed on to the customer, both in terms of both quantitatively and qualitatively, I think it will push the industry to reverse the negative trend and get positive zone.
So 5 to 6% industry growth guidance stays now.
Hopefully, it should get back. There is no reason for the industry to now not at least go back to the last year's growth rate.
Got that. Thank you very much, sir, for joining in. We will slip into a break. On the other side, we'll connect with the managements of Metro Brands, PNB and Shriram Finance as the new GST 2.0 regime kicks in today. Stay tuned.
For
Welcome back. This is Corporate Radar and you're watching CNBC TV18. Well, keep an eye out on the markets. The bulls have used this opportunity to jump into the markets. The Nifty is now down less than 10 points. So it's a good recovery that we've seen from the low point of the day. The intraday chart comes up for you on the screen of the Nifty. Moving to the footwear maker, then Metro Brands. It's in focus. GST on footwear has been reduced at the rupees 2,500 point. The cut is from around 5% to 5% from around 12% earlier. Mr. Nissan Joseph, the CEO of Metro Brands, joins us on the show. Hi, sir. Good morning and good to see you in. Let's get some clarity out of you first. What proportion of your sales volume / value come from footwear sub 2,500 rupees? I was reading a couple of notes and some of them suggested around 40%, but you'll be the best analyst on your own company. So tell us, what's that number?
Right, Nigel, good morning and thanks for having me. Yes, the number is in the range of 40%, but depending on the different banners we have, as you know, we have Metro, Mochi, Walkway, and a few other brands and banners. In the different banners, that percentage would be significantly different. For example, in our Walkway business, it would be a high portion of our sales fall into that 2,500 and below range. And in the Metro Mochi business, it would be somewhere in the 40% range. The other thing to note here, though, is that two things. One is we are finally on parity with apparel, so that's exciting news for us. And the other thing is not only does it affect price points at 2,500 and below, we'd also be re-looking at price points above 2,500 to about 3,000 to say, is there an adjustment we can make by sharing some of that discounting to get some products in below the 2,500 rupee range, right? So I think there's a lot of positive momentum here. The good news is, you know, I think for once, this is the first time that we've had a GST revision where we've not had to take up GST prices. So we're quite excited by it. Do I think it means everybody's going to run out and start shopping tomorrow? Not necessarily, but I think in the long run, it should bode well for consumer demand.
Okay, got that. Fair estimate then. You know, before we get to the benefits of GST, I want to ask you about the existing inventory clearance. How will that pan out? How much is it? How much inventory are you sitting on?
A lot, as opposed to all of the 40% we're sitting on it currently. So, and that's not an issue because, we programmed our registers to automatically take the differential and give the consumer that benefit of savings, right? It may not be easy to communicate on every single price point that particular discount, but I think when they go to checkout, they're definitely going to see that we've given them the benefit of the GST decreases.
Just one point. Good morning, Prashant here. What could you give us an overall sense of, what percentage of the portfolio is impacted by these reductions for you?
Yeah, Prashant, good morning. I think it's definitely in the 40% range that you're going to see, especially with Metro and Mochi carrying the brunt of the weight of our business, right? However, we also have brands like Crocs and Clarks that may not benefit much from it. But on the flip side, our walkway chain will benefit significantly from it. So averaging it out we're going to see price reductions in about 40% of our chain inventory.
And walkway is only about 70, 80 stores right now. Of course, I'm assuming that the number will go up significantly. So the overall portfolio will also shift as time goes by, right?
Absolutely, correct.
And 300 to 3,500 rupees is essentially the range at walkway.
No. Walkway is under 1,000 rupees.
Oh, all of it is under 1,000?
Well, I'm talking about the average is under 1,000. But when you look at our Metro Mochi business, that's what you're referring to, Prashant. That runs about 3,000 plus. Okay.
No, I was saying that starts at 300 and goes up to walkway. Starts at 300 rupees.
Well, I think from a velocity weighted standpoint, it has a broad, it goes from 300 to 2,400. But if you look at the price, the velocity of goods over 1,000 rupees, it would not be as significant, it'd be in the low teens, whereas 80% of it would be below that 1,000 rupee range.
You've also, I think, said that over and above the cut in prices for sub 2,500, you will look at additional discounts.
Yeah, Rima, the whole point is, there's a consumer psychology that, when you hit the 2,500 price point, it brings affordability to a lot of people. So if you have something that sells for 2,700, for example, right, would we be benefiting the consumer and ourselves by just taking it down to 25 because we would get 140 rupees of GST benefit, we'd have to chip in 60 rupees of discounts. But does that get a consumer demand? Because we know it's quite elastic, the demand price elasticity there. So would we want to take benefit of that? These are things that we're going to keep measuring and seeing how we want to attack it and address it in the days to come.
Discounts are only for products which would be priced, say, 10 to 15% above the 2,500 mark. Is that correct? So that you can bring it in the lower bracket where the lower GST rates are applicable.
That's correct. And, if anybody had a 2,599 price point, that's almost obsolete anymore, right? So,
So what's your own internal estimate on account of these GST revisions? What could be the extent of incremental sales? What are you working with?
Yeah, I think, I'd rather stick to what we've always guided. I think on a long-term basis, we can feel confident that we'll continue to hit our 15% CAGR growth over the period of time. If you look at, we've had a few muted quarters, there's no doubt about it. But if you look at our performance over FY19, we're up in the 100% range over FY19. So overall, we've slipped back a little bit from that 15% I guided to. However, we're confident that this kind of initiative gets us comfortably back into that 15% plus guidance for the long term.
Any intangible benefits, that you foresee with this lower GST coming into play?
I don't know about intangible, but I think another benefit is, as we go into end of season sale, right? There's a lot of products that might hit the 2,500 mark or might hit the 2,600 mark with the 20 or 30% discount we would give at the end of season sale. Now, all of a sudden, if you took it down to 25, it's no incremental discount to us as a retailer, but it's a benefit to the consumer. So, there are some advantages as we look into going forward, even going through the end of season sale period, which comes, at the end of this calendar year.
Got that. We'll leave it there. Thank you very much for joining us. And I think, if you're able to speak in about, 15 days, 20 days time, you'll have numbers, hard numbers, Mrs. Nissan.
That's right.
In terms of how things are panning out. But very useful. Appreciate it here on CNBC TV18. Well, let's, talk to two financial institutions we're doing segments, but financial institutions are basically entities which are completely economy facing, and all of this will show up in terms of borrowing, right? Mr. Ashok Chandra is Managing Director and CEO of Punjab National Bank, one of the largest banks in the country. And we have Umesh Revankar with us as well, Executive Vice Chairman, Shriram Finance, one of the largest NBFCs in the country. Gentlemen, both of you, thank you very much for joining us. Prashant here. Mr. Chandra, let me. It's a broader question, but also a specific question. The GST impact and implications, right? Those are the three talking points. Of course, early signs of uptick in consumption, festive cheer, GST, of course, is something we will talk about with both, and of course, credit growth implications, right? So, Mr. Chandra, as I was saying, this is expected, the GST cuts, etc., are expected to show up in a big way, especially in the auto segment and also the consumption segments. Could you give us a sense of how you are thinking about it? What is PNB's exposure in these two categories specifically? Consumption loans, auto specifically? Just give us a sense, and what kind of uptick are you expecting?
Good morning. Yes, I think today is a very, very landmark day as far as the simplification and the rate cut in the GST, which is getting implemented from today. See, this entire rate cut which has happened, it is going to bring a lot of relief to everybody in the country now. And if I can talk about a specific field-wise, like agriculture, if I can talk, agriculture, PNB has a very good exposure. We have more than 1.3 trillion exposure. And the way the reform which has happened by way of rate cut in the agriculture, the different segments, agriculture equipments, tractors, the spare parts. So all those things are definitely it is going to bring good momentum in the agri sector. Farmers will be benefited, and a lot of relief is going to come to the rural development, the rural sector. So I'm going to see a good traction going to happen in the agri sector because of this simplification and the rate cut which has happened in the agri segment. If I can talk about the retail segment, again, that is a game changer going to happen in the retail segment because of two things. One is that the disposable income of the person is going to improve, and the demand for the consumer goods and the vehicles because of the rate cut has brought it in the system. I think all those things are going to pick up in a very, very big way from the today onwards. So I'm going to see a good traction happening in the retail front. If I can talk about the MSME part, again, there is input relief is also there. And many of the MSME spare parts and the equipments, the machines, machineries, I think all the segment in the MSME segment, the segment also, sector also, are going to bring a lot of relief to the MSME people. And when the PNB is ready to provide all sorts of credit facility to all these segments, I think I'm going to see a lot of tractions happening in the agri, retail, and MSME in general.
Yeah, got that. In terms of credit growth, bump to credit growth, Mr. Chandra, would you like to put a number?
See, as of now, MSME segment is growing at a speed of around 18% in our bank. Q1 also we had 18 plus was the growth rate YOY. And as of now, when I'm talking to you, I think our growth is more than 18%. And with this simplification and the rate cut which has happened in the MSME segment, I think definitely 1 to 2% minimum growth I'm expecting in the long run. Retail segment also, especially the vehicle and the housing loan. Housing loan, again, if you see the cement sector, the cost has come down because of the lowering of the tax rate. I think, again, the cost of house dwellers also will come down. And definitely there will be a good demand for the housing segment also. So vehicle segment, I think a lot of things have happened. The one is the 28% to 18%. The rate reduction has happened in the overall vehicle space. Plus, if you see the spare part and the tires, all those rates have also been reduced. So I think going to be a big activity happening in the vehicle loan segment. I'm expecting that at least vehicle loan growth will be around 24 to 25% going forward. So I think 1 to 2% growth will happen in all the segment because of this GST simplification and the rate cut.
Got it. Good morning, gentlemen, and good to see you all in. Mr. Revankar, getting you into the conversation, but vehicle prices are likely to go down, right? Will there be enough uptick in volumes to offset this kind of price gap? What are your estimates?
Yeah, overall, there is the expected price drop. In fact, it translates into around 8% decrease in the price for the average vehicles. At the same time, I think manufacturers also are likely to give less discounts. Earlier, the discounts were high, and now the discounts will be lower. So price to the customer, there may not be a big difference. There will be still some difference, but may not be significant. So I feel overall it is a good sentiment, definitely yes. And during the festive period, when normally people buy new vehicle, I think there will be inducement for the customers to buy new vehicle. And for a long time, people have postponed buying a new vehicle because of steep increase in price in the last 3 years. I think this is a good opportunity for the people to buy a new vehicle and upgrade themselves.
Okay. So when we last spoke to you, Mr. Revankar, you said that this year, courtesy the GST bonanza, loan growth should be 17 to 18%, higher than 15% that you had earlier started the year with. Is that still on track?
Yeah, I said for this quarter, there will be a higher growth because it's a festive period. But whether it will keep the momentum for a long time, we are not very sure because there are other uncertainties like the US tariff that is still playing on and having some impact on certain MSME segments. So that we need to really see, and the real impact of that will be seen in the next quarter, because this quarter domestic demand will keep the momentum up. But from next quarter, we have to see how it will span out.
So for this quarter, what should be the loan growth that you see?
Yeah, this quarter we should be growing higher by 2 to 3% more than the previous quarter or previous year.
Got that. And in H2, the second half of the year, you're clearly seeing some headwinds, which could limit the growth on account of what's happening on the tariff front. Would you be able to explain that in greater detail about, what could be the actual impact on your numbers?
The impact to our number will be minimal. See, we will keep growing at around 15% as we guided in the beginning. That may not change much. But how much is the impact for the MSME and how government is going to support the MSME in different ways? The GST is definitely a big step government has taken. But then maybe the industry may be expecting certain other measures like the subsidies on the interest rate or maybe reduction of the power tariff. Those things are there. There are some expectations which they are in dialogue with the government, which if it is possible, then MSME segment will keep moving and growing.
Mr. Revankar, we'll leave it there. Thank you very much for joining us. Mr. Chandra, appreciate you joining us here as well. Really, thank you both for your time this morning. I just want to quickly make a mention that the market's almost back in the green. So that's quite remarkable. 10 points lower, that's it. 25,300 is where the Nifty is at. And Urban Company now nearing 200 rupees. So that's something which we've highlighted. Still remains the number one volume-led gainer. Started at about 191 and 198 now nearly. And Anantraj is back in the mix. Anantraj is up 5.5%. Huge volumes on Anantraj at 675 coming through here. And the other ones, Garden Reach and NetWeb, etc., we've been highlighting. Look at Adani Green, which is picked up. Adani Total, Adani Green. So the Adani stocks are back in focus here. So these are the two names with large volumes. And Shalby Hospitals is at 264. It's up 10%. It's gone up like a rocket. So it's a big one coming through on Shalby. I can go down the list, look at something like a Piccadilly. Piccadilly is at about 770 or so. That's a 6% move coming through. So lots of stuff, it's kind of sort of broadening out what we're seeing out there. Piccadilly is the other one, apart from Shalby that we pointed out. Now, Union Home Minister Amit Shah, in an exclusive conversation with Network 18's Group Editor-in-Chief Rahul Joshi, said GST 2.0 reforms will be remembered as one of the greatest in history of the country. Some of the snippets of that conversation, let's just play them out.
जीएसटी के कारण 16 प्रकार के बिक्री से जुड़े सभी करों का, ऑक्ट्रॉय से लेकर बाकी सारी चीज़ों का, एक्साइज, सेल्स टैक्स, कई छोटे मोटे मनोरंजन कर था, ये सभी का एकीकृत खाका बना। पूरे देश भर की एक इलेक्ट्रॉनिक बिक्री कर प्रणाली बनी, ई-वे बिल बने, और जीएसटी के इतने सालों की यात्रा में 200 से ज़्यादा छोटे मोटे बदलाव कर उसको लोकाभिमुख भी बनाया और टीथिंग प्रॉब्लम समाप्त भी की। ये करते 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 देश की इनकम भी बढ़ी और इतना बड़ा टैक्स का कटौती 80 साल में कभी नहीं हुआ है, जो अभी हुआ है। ढेर सारी चीज़ों में इस जीएसटी रिफॉर्म से फायदा होने वाला है। मैं मानता हूं ये बहुत बड़ा कदम है और इससे जनता का भरोसा बढ़ा है कि अगर हम टैक्स भरकर सरकार की नेट को बड़ा करते हैं तो सरकार टैक्स की कटौती कर फायदा जनता को ही पहुंचाएगी। और ये भरोसा आज़ादी से अब तक अदृश्य था, पहली बार वो दिखाई पड़ता है कि कोई भी सरकार अपने बढ़े हुए टैक्स को ये कहकर प्रोत्साहित करेगी कि भाई आप टैक्स भर रहे हो तो अब हम टैक्स कम करेंगे, तो ज़्यादा से ज़्यादा लोग टैक्स के नेट में भी आएंगे। मुझे विश्वास है इनकम भी कम नहीं होगी, इन्वेस्टमेंट बढ़ेगा, बाजार में एक प्रकार से तेजी भी आएगी और लोगों को सस्ता भी मिलेगा और यहाँ उत्पादन की गतिविधियां भी बढ़ेगी और देश की निकास भी बढ़ेगी।
Okay, that's an important opinion. By the way, Asia's firmly higher today. Nikkei is up over 1%. The Taiwanese markets, Korean markets are also moving up, moving quite smartly. So there is support coming in from Asia. We're dragged down by the cuts on IT, limited now to 2.5%, but that's been the big drag. Other than that, even the pharmaceutical index, the Nifty Pharma Index, is down about 3/4 of a percentage point. But holding flat now at the index level, Vinay Rajani, Senior Technical and Derivative Analyst at HDFC Securities, is now joining in. Vinay, your thoughts on the first 45 minutes of trade? What is the call for the day and your stock calls?
Yeah, good morning and thanks for having me on the show. So Nifty has absorbed the supply which has come in the early morning, and primary trend has been up. We have seen a correction of 230 points odd from the recent swing high of 25,448. But the primary trend has been up. Global market has been supporting. Broader market participation is going on. Sector rotation is fine. So overall, the sentiment is positive. Just because of the IT sector, it has opened gap down. Though we have been underperforming the most of the global markets and emerging market, but the primary trend and the way we have seen in last 8-10 sessions, Nifty has improved. I think overall trend is looking strong only. On Friday when we met, we discussed that there could be a possibility of running correction, and I suggested a support around 25,200 to 25,250 range. And today we saw that that range has been tested, and 25,211 was the low, and nice recovery has been registered after that since morning. So the trend is positive. I think rotation and the broader market participation will continue to do well, and one should remain bullish. 25,200 is a strong base. I think for the day it should not be broken, and overall sentiment should improve throughout the day from here. So overall, I'm expecting resumption of an uptrend.
Vinay, what would you do in terms of specific stocks?
Yeah, so PSU banks have been doing quite well, and the technical setup is quite strong for the index, and from that Canara Bank looks very strong in continuation of an uptrend. So 118.9 should be the entry price. For traders, I would suggest a stop loss at 116. On the upside, I'm expecting a target of 123.50 in the short span of time. The second sector I would pick is the real estate sector. So after healthy correction, this sector has started showing some strength. So Godrej Property is one of the stock which has shown some reversal signs on the charts. So Godrej Property around 2145 one can go long. I would suggest a trading stop loss at 2105. On the upside, I'm expecting a target of 2205. So these both are a recommendation for 1 or 2 days and with the mentioned stop losses.
By the way, the market, I think, is going to come into the green very soon. We're just about 5 points short, 25,320. So just the symbolism is outstanding, right? I mean, H1B, all hangama over the weekend and hand-wringing, anxiety, etc., and you've got the index, which is now, the benchmark at least, with 25,320, almost in the green from Friday's close.
You know, auto is moving up now.
Yeah.
You know, it started flat, but now Bajaj Auto, Hero MotoCorp up more than 1%. So there is strength, and some of the banking names too are higher.
Well, we'll take a break. We are back. Manisha on the other side, commodities in focus in just a bit.
GST.
Welcome back. Let's shift our focus now to the commodity markets. Manisha is now joining in. Hi, good morning, Manisha. What are you tracking?
Thank you for that, Rima. Well, I'm looking at the crude oil prices because the last 2 weeks have seen some gains, and this week in Asia has also started on a positive note, as you can see, for the crude oil prices, more than 0.5% higher, and this is on the back of geopolitical tensions, the kind of statements that we've seen come in from Europe and also West Asia, for that matter. Well, to begin with, the Russian airstrikes on the West Ukrainian part now seem to be threatening the Polish border, and that is where the concerns are. The Polish, as a company or rather a country, also seems to be now trying to defend, also is moving its forces there, and that is what has led to some premium in prices. The second thing really is about the 4 Western nations over the weekend saying that they do recognize the Palestinian state, and this is even as US and Israel have been against it. Markets are watching out for the developments onto this one as well. The third thing is the European Union now proposing over the weekend a 19th sanctions package against Russia. What it also now includes is LNG exports. It also has nearly a huge number, really, 118 shadow vessels, some Chinese companies buying oils as well, and some other foreign companies also have found their name on this 19th package. Well, remember, European Union has been coming out with various packages, and we are looking at more addition into that. In addition to this, the European Union also says that going forward, they will stop buying LNG from Russia from 1st January 2027. Markets also looking at Iraq hiking exports to 3.3 million barrels per day. That is adding some supply pressure. This number is expected to increase to 3.45 to 3.5 as well going forward. And then, remember, this is the hurricane season at the Atlantic, and a second tropical storm, Gabrielle, has strengthened into a hurricane. The landfall is anticipated in the next 2 to 3 days, and if there is any disruption at all, we will see higher prices there. Remember, nearly 17% of Russian refining capacity is shut at this point in time, so any supply disruption will add further premium into prices going forward. I also want to take you through on what we've done in sense of crude oil prices till now in this year. We started firm at $75 a barrel for the Brent prices. We saw a high of $82 as well. We've seen $60 off a low as well into the markets, and to the lower side of the range is where we are trading right now at $67 a barrel. With everything that's happening in sense of geopolitics, Russia, Ukraine, tariff concerns, but it really has to do with the excess supply and concerns about demand. That seems to be keeping the prices in check. And this is about this year. But when you look at the prices itself, while we are down 10% for the crude prices in this year, it clearly is going to be a third straight year of decline in crude prices the way we have been. It fell 3% in the previous year, and 12% of a decline is what we recorded in crude prices in 2023. So 25 clearly seems to be going the same way.
All right, Manisha, thank you very much for that. Well, we'll take a quick commercial break here. On the other side, it's our segments, The Economy. Lata in conversation with Madhavi Arora of MK Global Financial Services and Mohandas Pai of RN Capital to discuss the impact of the H1B visa hike for IT services and the Indian economy in general. Stay tuned.
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
This is Network 18, and you're watching CNBC TV18.
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई चाहे दिल की सुनो या डील्स की।
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a decor brand. Live consciously.
Welcome to It's the Economy. After a brief early dip, Indian markets in general and IT stocks in particular have recovered. The rupee too, while lower, is not the worst performing currency today. But two issues about the impact of the visa fee hike. Important one, impact appears to be more on Indians rather than Indian IT companies, given that US companies are hiring a lot more under H1B than Indian IT companies. Secondly, the hit may not be this year. It may be next year, because this year's lottery is over. Now, given that the US is attacking India's goods and services exports, we need to watch the overall impact on India's current account, rupee, and indeed employment and economic growth itself. And to do exactly that, I have with me two stalwarts, Mohandas Pai, a veteran of the IT space, an investor, and of course now with Arun Capital, and Madhvi Arora, the economist from MK Global. Mr. Pai, Madhvi, thank you very much for your time. Mr. Pai, is this a fair characterization? The impact is more on Indians seeking employment rather than Indian IT.
I think that's a very correct characterization, primarily because there are a lot more Indians applying for H1B than any nationality, and they belong to many more companies than the IT service industries. The IT service industries hire people locally, they build their development centers, they're insulated. And like you said, Lata, it doesn't apply for this year because this year the lottery is over. And I think they're going to issue visas. Applies for the next year. That means it will take one more year for people to apply and pay any fee. I'm sure the number of applications will go down drastically. The stock of H1B is not impacted as of now. The stock of H1B that is not impacted as of now. Okay. And the stock, if nobody tampers with it, will last for a long period of time. So my view is the impact will be very less. And also, Lata...
So, yeah, you know, Mr. Pai, Mr. Pai, I actually, you know, you're both an investor as well as someone who has been an insider of tech. How are you seeing this evolve? Will more be outsourced to, you know, eschew the H1B impact? And also because there aren't enough IT professionals or like, you know, similar talent people in the US. Do you see more getting outsourced at all? Is that the way we should take a positive read?
Lata, you saw the MIT study recently, right, about the use of AI in enterprises. How are global enterprises going to use AI? There's nobody but these IT service companies can help them. They have the framework, they have the vertical LLMs, they have the talent, they have the execution skills. So naturally, more work will move offshore. You know, Lata, after the COVID, we saw a surge in GCCs. What does it mean? It means the CTO of global enterprises understood your people don't have to be in front of you to keep your IP and do great things for you. They can be anywhere, right? You can work in New York and you can be in Dallas or Florida. And you can be in Bombay, be in Bangalore or anywhere else. So they have shifted the GCCs, 1,750, 1,800 GCCs. So more work will shift offshore because the work is fungible. And the work is electronic and it can easily be done. The skills are here. There's nobody else. The US doesn't have the talent and people are not doing the kind of skills. And Lata, you're seeing the data too. that, Indian companies pay the people in the US more than $100,000 for H1B, plus the cost of travel, plus the cost of leave, plus the cost of so many things. And I think this idea that they're all cheap labor is absurd.
Yes.
I think more work will move offshore,
Yeah.
and offshoring will improve. And I think there'll be a tremendous jump here. So on-site work will come down. That's my understanding.
Okay. Madhuri, what's your assessment on the macroeconomy? Until now, we were only looking at this 2% of GDP impact of the tariff on goods exports. Now, a new can of worms has opened. Your assessment of the current account deficit and export growth this year, but more importantly, next year?
Lata, we have to see it in a broader perspective firstly. Unfortunately, services now has been dragged in the trade war in some sense or the other. And the way US is now sort of telling the world that, I want to be a producer of services as well. So they largely have been consumers, right? So insofar there was being impacted only on the good side. Now when they are sort of getting services on board, there are two ways I can understand this bit. One is that US wants to essentially become a producer economy. Of course, it will come with a cost in the medium term. But at the same time, I think it is going to be used as a tactical way for the US to negotiate with India on the ongoing trade deals. That's the first macro impact for us. In terms of numbers, again, you have to see it from 2 or 3 perspectives. The 3 broad macro channels with which we'll have hit. One would be, of course, remittances. So our broad numbers suggest the remittance impact may not be too much for the incremental potential H1B workers that would have gone to India, probably less than even 1 billion. So that's not a big concern for me. Of course, there could also be, increased offshoring, as you guys were mentioning earlier. So as of now, Indian companies largely maintain a 70-30 offshoring to onshoring ratio. In fact, and they've been very agile over the last 10-15 years. They've actually reduced their dependence on H1B visa. And even in the COVID period as well, they were able to sort of shift to offshoring very smoothly. And we saw the, advent of GCC also coming our way. So the BOP impact from the lost remittances easily is going to be partially offset at least by increased services exports that we may see over the coming years. To be sure, that could also be replaced by nearshoring to countries like, say, Mexico or even in ASEAN countries. So we'll have to keep that also in mind. The third impact would be, of course, the outflow that we see from education-related remittances, which is outward remittances, which is basically, again, a modest number of around 6.5 billion, which is less than 0.15% of GDP. So that could get rerouted from the US elsewhere, or probably, get reduced at the margin. But at this point in time, the BOP impact is pretty modest, in my view, in the near term. Of course, the medium-term implications could be, severe for IT companies. But, we've seen that in the past that IT companies have been pretty agile and very adaptive in terms of changing their growth model or changing their business strategies and stuff like that. And they also would have some time in hand, right? Next 6 to 9 months to prepare for this change that is going to hit their margins or revenue.
I actually am worried about the macro more than IT companies.
In the immediate run,
where, almost it's agreed, and, we have an insider telling us that it is marginal, like Mr. Pai. But Mr. Pai, I'm more, we are very, I guess we're talking about the medium term in slightly facile terms, because the terrain is shifting in weeks, not in months or years. So I'm worried about the Hire Act. That is clearly 25% tax if you export a service, if you do a GCC. And we've got some kind of a rehearsal in the way NVIDIA was treated. Okay, you export chips to China, but give me 15%. Should we be worried about such a change in terrain even for GCCs?
Datta, you are a brilliant economic observer, all right? Global industry, global enterprises work through structures of subsidiaries all around the world, right?
Yeah.
Apple keeps all its overseas profits in Ireland.
Absolutely.
All the global companies who outsource have their subsidiaries all over the world. What they will do is they'll ask the Indian companies to bill to the subsidiary because it gets consolidated into the US accounts, right? More than 50% of the business of Standard & Poor is outside. The source of revenue outside, which are accumulated, they're in tax-sheltered countries. So instead of billing to the US, you'll bill to Ireland, to the same subsidiary of the holding company. So where will there be a tax? The money will accumulate there. There'll be an income, there'll be an expense, and don't have to pay this tax. So structuring is very easy. So right now, I'm not very concerned about that. And remember, the US is has the net surplus in the services trade, $1.3 trillion deficit in goods, and maybe $700 trillion surplus in services. Now, if all countries start putting a 25% tax on the US services, they're going to get hit. India removed the Google tax, right?
Yes.
Just now to keep Trump happy. The Google tax will come back. After that, people don't care.
Yeah.
People will not care. You're putting so much, hurting us so badly. We'll also do that. And American tech companies will get hurt very, very badly. Yep. Like China kicked out NVIDIA right now. And China is a very huge market. So I think we've got to watch what will happen. My estimate is all the tech companies will go to Trump and work out a deal with him to say that without having H1B come in there, and they don't need this kind of a tax on services imports. And if they do, they're going to be in deep trouble. The US dominates the world in technology. If you look at the valuation of the top 10 digital companies, they make up a large part of S&P 500. And they're the drivers of the US economy in terms of capital investment this year, right? And I'm very sanguine about it. Let's wait and see. And you can expect the unexpected from President Trump. But I'm very sanguine that many of these IT companies will fight back.
That's very important takeaways. More as the accountants will outsmart the economists, and we can have tax planning. Secondly, we must remember that others can hit back. I mean, the way in which EU and all countries have even declared Palestine as two states clearly show that they are willing to dare. You'll take this much and not further. So we could see that copybook play if the tax, tyranny goes too far. But Madhavi, aside from all this, yes, I do believe that even India has stood its ground in a very dignified manner. But would you worry that somewhere in the coming years, employment growth could be facing some at least near-term challenges because of this, stream of slings and arrows we are getting?
I agree, Latha, because, in the current year, it may not impact the revenues of IT companies, but it will start hitting them both on margin revenue from FY27 onward if this continues. Obviously, as I said, it's a signaling mechanism from the US that they want to localize a lot of this STEM employment. So that obviously will have impact on domestic market as well. But to some extent, as Sir was also mentioning, that there could be offsets that we may see in the medium term. The models could be very adaptive and agile, and we'll find ways and means to ensure that, companies find a way to remain profitable. But clearly, I think there are multiple factors in which, IT companies could get impacted. The demand environment in the US is also going to be difficult. There will be potential inflation in local and existing H1B holders as well as offshore shift, which may also lead to some, wage hit in India as well. So I think medium term, if the IT sector outlook remains a little less certain, obviously you will have impact in the organized economy, where IT segment is, a large chunk of the organized hiring space. So clearly that would be a big hit. And of course, they are the biggest source of services exports for us as well. Even if the GCCs at this point in time are growing in a much accelerated fashion, if there is a higher tax that come into our way, obviously I don't think that would be the case. But in a hypothetical situation also, if we assume that it would end up becoming a reality, I think when we are in a big fix in terms of, the services exports.
No, as Mr. Pai says, the world will always find a way to sidestep.
Companies have been very adaptive. We have seen that IT companies have been very agile in terms of how they have been, able to sort of play with their models in terms of ensuring that, they remain profitable in the market. So I don't think that it would be...
Unfortunately, out of time, Madhavi. Mr. Pai, thank you very much. This is just the start of the conversation. I think we will have many more occasions. These arrows are not going to stop. And we will need your analysis constantly and your optimistic interpretation. Wrap up on Bazaar. Chartbusters coming up.
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a decor brand. Live consciously.
This is Network 18, and you're watching CNBC TV18.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a decor brand. Live consciously. त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
विराज रायचन स्टील। आपने वरदान स्टील का नाम सुना होगा। ऑफ कोर्स। आप मिस्टर वरदान के बेटे? नहीं। छोटे भाई? नहीं। दामाद? नहीं। फिर? शेयर होल्डर? सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a decor brand. Live consciously.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Benchmark indices recover from opening lows to trade near the flat line. The Nifty trades around the 25,300 odd mark, hit by metals, realty as well as financials. On the other hand, the tech space emerges as the top sectorial loser. The broader market trades in line with the key indices.
Shares of IT stocks trade under pressure and are the top losers on the Nifty after the Trump administration raises H1B visa application fees to $100,000. TCS, Infosys, TechM, amongst others, take a hit.
Consumption stocks rally as the new GST era gets underway. India Inc. also sounds optimistic. Bajaj Auto is expecting a strong festive season. Shoe retailer Metro Brands also expects good strong growth at around 15% CAGR post this GST rate cut.
And shipbuilders and focus today. Garden Reach Shipbuilders rallies on a $62 million order. L&T, Mazgon Docks and Cochin Shipyard also trade with gains on reports of an 80,000 crore tender from the Indian Navy coming soon.
NetWeb Technologies rallies 5%. This after it bags a 450 crore rupee order from Tyrone AI GPU systems. Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel, and with me today is Ekta. Hey Ekta, good to have you on the show. Well, the market started off in the red, but a good recovery is what we've seen from the low point of the day. And this keeping in mind that the tech space is actually under pressure. So pretty heartening start actually to trade today.
Hi, Nigel. Yes, absolutely. You know, if you just pull up the Nifty IT index on an intraday basis, there has been a recovery which has taken place there as well. So around 1% in terms of a recovery from the day's low for the Nifty IT index. And we have the Nifty, which is at around 25,317. So not as bad, because we now do have the Midcap index, which is just about broken into the green as well. So overall, the market seems to be a little more sanguine in terms of all of the bad news that took place over the weekend with regards to the H1B visas. And separately, we do have the GST rationalization, or GST 2.0, which really kicks in from today. So that's the other big trigger to watch out for.
Well, that's right. Let's move to our first corporate conversation then. Mr. Mehul Monka, the Managing Director and the Group CEO of Tega Industries, joins us on the show. Hi, Mr. Monka. Thanks a lot for joining in. Well, we're coming across to you post the announcement with regard to all those that will be participating in your fundraise. We're coming to you in just a bit. For the time being, just highlighting the three broad focal points we're looking at: funding structure for Molycorp acquisition, the plans for unlocking synergies, and growth and capex plans for Molycorp as well as Tega. Mr. Monka, thanks a lot for joining in. Well, let's get a couple of details first out of the way. With regard to the company, you know, this acquisition turning EPS accretive, you had mentioned it'll turn EPS accretive in, you know, the second or the third year. So will it turn EPS accretive in FY27, or is it a plan for FY28?
Morning, Nigel. Thank you for having me on the show. It's going to be EPS accretive from FY27 onwards.
Okay, all right. Got that clarity out of the way. Well, you know, Mr. Monka, I'm not too sure about this data point, but I think this could be one of the largest fundraisers, you know, via the preference route, you know, could be in the top 5 as well, if you have some clarity on that front. And also tell us, what is the feedback you've got from your shareholders? Because you're looking to bite a big asset, but there are some that are a little bit nervous with regard to this sort of, you know, of being so adventurous. Your feedback?
Yeah, so on the fundraise, I'm told that it's the largest in Indian capital markets through the preferential route. I don't have data points to confirm that, but that's what I've been told. I do understand, you know, the shareholder, I would say, caution, but I would say that, you know, we ourselves are looking at it, you know, from an optimistic caution perspective, as one would say. We're excited about the opportunity. I think it builds great value for both the businesses put together. They're complementary in nature, and end of the day, we bring a lot of value to our customers globally.
Okay. So, Mr. Monka, you know, just for your shareholders, if you could just reiterate how exactly would you be funding the acquisition? Because you have this preferential issue of around 2,000 odd crores. I understand that you have to, you know, you will be funding via internal accruals as well. Can you just take us through the breakup of the funding of the acquisition?
Sure. So from Tega's perspective, we need 3,300 crores in total to fund our 77% equity participation. We have 1,000 crores in terms of corporate debt already lined up as far as Tega is concerned. And we are to raise 2,300 in terms of equity raise for Tega, of which 2,000 we have confirmed participation as of now. And we're going to be doing another 300 crores of fundraise shortly.
This 300 crores will be to who?
We are going to do another fundraise of 300 crores.
So just break up this 300 crores. What kind of fundraise are you looking at? And by when? What is the timeline?
I think 300 is too small a chunk to do in QIP. So we'll probably do another preferential raise. We have to meet. Sorry, we'll do it as soon as we complete the first one as per stock exchange guidelines.
Okay, got it. All right. And who is it going to be to?
We have a lot of interest currently already with a few institutions who missed out on the first one. So there still remains a few who are very excited about this transaction. So we will bring them in.
So expand a little bit on that in terms of the kind of interest that you've seen from what was the profile of the investors, and even for this incremental 300 crores who didn't get to participate and is looking to participate. Just take us through the details.
These are domestic institutions. I don't think I can reveal the names at this point, but we are in discussions as we speak. And there remains to be a strong interest to participate in the next round.
Well, that's right, Mr. Monka. I have my ear to the ground as well. And I believe that there was some strong interest. And some of those names didn't appear in the first list. So let's see whether or not they get into the second list. Got that. Now, let's focus on the business that you're taking over. one of the measures of cost saving is going to be relocation of the headquarters. Have you identified where's that headquarter going to be? And I think what you've guided for is around $7 million of savings. So tell us more.
Sure. So that's going to be somewhere in Asia. We haven't narrowed down on the exact city, but we are in discussions with the management team of Molycop for a particular location. It has to be, something favorable from a time zone perspective because it's a global business, as well as, what we're attempting to do is find a city where there's, we can find one flight to anywhere in the world. So yeah, that process is on, and I will confirm that shortly when we get to it.
Okay. You are expecting to unlock EBITDA level synergies of around $20 million by year 2 and $30 million per annum from year 4 onwards. Just tell us about this particular synergies. Where are you looking at in terms of synergies, and what would this mean in terms of consolidated blended margins for you all?
Sure. So these synergies are going to flow through from incremental revenue at Tega level as well as at Molycop level. So we have customers out in the marketplace who will benefit from participation from both the companies in the operational efficiency of the customer. So we're looking at these incremental cash flows to come through, or revenues to come through in both balance sheets of Molycop and Tega. And we're looking at close to about, I would say, in total, anywhere between $80 to $100 million of incremental cash flow to come through in the books of both the businesses to pay down debt.
Okay. All right. Final question then before we let you go, Mr. Mohanka. You're looking at increasing capacity on the high chrome side as well. And there has been that move from forged media to high chrome. Now, you're looking at increasing capacity. I think currently you're doing 20,000 and then 40,000 traded, so it's around 60,000, which you're looking to around 200,000. We have a peer that's listed, AIA, and they have said that, they find that they've seen some headwinds in this sort of a move, particularly on high chrome. What is your comment on that? How confident are you that you'll be able to achieve the guidance that you've given on this segment?
Well, I'm unable to comment on the views of my peers, but from our perspective, the way we're looking at it, I think there's been a lot of commentary that high chrome is gaining against forged media, but we don't believe that to be true. For us, we're coming out of a very small base. There are peers who are larger in the high chrome space globally compared to Molycop, but we are fairly convinced that high chrome is a good space to be in, and coming off a low base, I think the CAGR we're looking at about 15 to 20% over the next 3 years is much doable.
Execution will be key then on that front, because as I said, it's been a challenge for some of your peers said. Final question, your revenue in the last year was around 1,600 crores approximately. Now, going by what all you have said, do you think the EBITDA number can nearly be double of your revenue, say in the next 4 years from now? Mathematically, it looks like the EBITDA number will be in excess of around 3,000 crores. Possible?
Absolutely. That's the reason why we're bringing these two businesses together.
Okay, just before we let you go, just a quick question with regards to the eventual debt that you would be comfortable with on Molycop's books, because you're saying that you have $1 billion, you'll go to 780 million from day one itself. But eventually, what's a comfort level that we're looking for in terms of the debt on Molycop's books?
So we won't like it to be anywhere higher than two times EBITDA at any given level. So the idea would be over the next 4 years to pare it down to those levels.
Okay, so at any given point in time, it shouldn't be more than 2 times EBITDA.
That will be the aim.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Tega Industries talking about their preferential issue of around 2,000 odd crores. They are planning a second preferential issue of around 300 odd crores, saying that interest has been quite significant there. We'll take a short break. We'll be talking to Ankur Rudra of JP Morgan from the JP Morgan 10th Annual India Conference. Stay tuned for that.
विराज रायचन स्टील। आपने वरदान स्टील का नाम सुना होगा? ऑफ कोर्स। आप मिस्टर वरदान के बेटे हैं? नहीं। छोटे भाई? नहीं। दामाद? नहीं। फिर? शेयर होल्डर? सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
I choose a world where we dream and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a decor brand. Live consciously.
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
विराज रायचन स्टील। आपने वरदान स्टील का नाम सुना होगा? ऑफ कोर्स। आप मिस्टर वरदान के बेटे हैं? नहीं। छोटे भाई? नहीं। दामाद? नहीं। फिर? शेयर होल्डर? सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
विराज रायचन स्टील। आपने वरदान स्टील का नाम सुना होगा? ऑफ कोर्स। आप मिस्टर वरदान के बेटे हैं? नहीं। छोटे भाई? नहीं। दामाद? नहीं। फिर? शेयर होल्डर? सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो।
विराज रायचन स्टील। आपने वरदान स्टील का नाम सुना होगा? ऑफ कोर्स। आप मिस्टर वरदान के बेटे हैं? नहीं। छोटे भाई? नहीं। दामाद? नहीं। फिर? शेयर होल्डर? सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome back. You're still tuned into Chartbusters on CNBC TV18. Well, we now have Ankur Rudra, who's the head APAC Telecom and India TMT Research at JP Morgan, joining in to discuss his outlook on the IT space. Ankur, hi, welcome to the show. Well, I'm sure it was an extremely busy weekend for you, and you're probably working the phones throughout. So, what is your sense in terms of all the news with regards to H1B and even the clarification? And net, the impact, according to you, on, say, frontline IT stocks?
Hi, thank you. Thank you for having me. So it's been, I think, the proclamation clearly on an overall basis prices out H1B visas as a source of labor for the industry on a prospective basis. I think what's been helpful is that it's been clarified it applies only prospectively, and it's a one-time charge. So I think what we think is likely to happen is a lot of the enterprises and which outsource, and also the vendors themselves, will relook at their sourcing strategies to see if they can change the labor source. Increasingly, they've been depending on H1B visas less and less over the last 5-6 years. If they can further move towards local hiring, if they can also start using a lot more of nearshoring and offshoring. So we think that will happen to an extent to dilute the impact on a going forward basis. In terms of impact, it's very early days. Typically, when we have new changes, there are always some kind of litigation lawsuits against it. So there is some time for this to potentially impact. It's likely to impact the lottery year from next year onwards. But we think that across the board, around 20 to 50% of on-site employees for IT companies are probably impacted, and about 2 to 6% of earnings impact on an annualized basis from F27 to F30. But that's the worst case. We don't think the worst case will happen. Companies will change sourcing strategies.
All right, Ankur, good to have you on the show. The worst case unlikely to play out, and that's the hope. But, the tech space itself has underperformed, in the last 12 months or so, and gradually it was beginning to find favor yet again. Now, what's your view on the sector itself? Because growth could still remain very, very tepid. However, if you look at valuations, if you look at cash flow yields as well, they seem to be, turning a little bit favorable. So how are you placed?
Yes. So I think if you look at the overall IT services sector, there has been two sources of challenges. One is the macro, which has not been helpful thanks to the tariff and the trade uncertainty, which has been impacting demand. And second is potential deflation from an AI perspective, which is probably more medium term. In the short term, we would expect that the macro sort of headwind potentially eases away from calendar year 26 onwards. So this year is likely to be a weak year in any case. But the AI deflation probably plays out maybe for a 2 to 3 year base period and sort of goes away from the base. So when we look at the sector, we look at it in two angles. One is among the larger firms, which have become a lot more value, like you said. Free cash flow yields and dividend yields have become the cheapest they've been in the last 8 to 10 years, which provides a lot more value in sections of the large cap space which do pay out dividends. And on the mid cap side, there's some companies which are growing a lot faster where these headwinds don't play out so much. So our approach is to have the value large caps which pay out dividends, which look attractive now, and some of the growth oriented mid-sized companies which can grow meaningfully faster from here on.
Ankur, Q1 actually stood out because there was some amount of revenue and margin deflation. As we get into Q2 and, just a couple of days before the quarter ends, what's your sense in terms of the trend that we could expect? Do you expect that sort of trend to continue into Q2?
Yeah, I think there are a couple of things here. One, overall demand environment probably will remain unchanged in the sense that we will not see any further worsening or any meaningful improvement in the demand scenario. But from a bottom-up perspective, I think when we came into Q1, there was an element of negative surprise that demand was as weak as it was. I think in Q2, that negative surprise is unlikely to be there. And there's been a lot of larger contracts which have been signed on a cost-saving basis by a number of companies in the last 6-9 months. Some of them probably begin to ramp up. So we probably will see bottoming out of demand and growth being a bit more stable from here on. I don't expect things to meaningfully worsen. Having said all of that, signings might get impacted to an extent because of the visa-related uncertainty, but that will be more of a medium-term thing. From a revenue perspective, we think it will probably be similar to what we saw in 1Q, if not slightly better.
Okay.
Okay, Ankur, just turning attention a little bit away from tech, a quick comment on telecom. Do you think that it's going to be a 3-player market? And what are the ARPU increases you're working with? 26, 27?
Sure. So on the telecom side, we think that remains a 2.5-player market where the top 2 companies have invested very meaningfully and hence keep taking share to an extent. The third player is something that the government has indicated multiple times they want to do. So we'll have to see how that plays out. It will be a function of the solution on the AGR front. It's difficult to say at the moment. But our medium-term assumption is we'll have all the 3 players there. There'll probably be some sort of a solution. From an ARPU perspective, we have assumed a 10 to 15% kind of a tariff increase for the next couple of years, so around 10-ish% for fiscal 26 and around 10 to 15% for fiscal 27. So the change in view is earlier we had every 2 years there would be a tariff increase. Maybe now we might have a smaller tariff increase on an annual basis. That's what we baked in.
Okay, all right, Ankur, a short but effective chat. Wishing you all the best for the remainder of the conference and looking forward to chatting up with you as things do progress. Well, time to slip into a short break. On the other side, we'll focus more on markets as well as on stock-specific action. Stay with us.
त्योहार की खुशियां होंगी डबल। हुंडई सुपर डिलाइट डेज में आपकी मनपसंद कार्स पर मिल रही है कमाल के डील्स। वैसे लोगे तो आप हुंडई, चाहे दिल की सुनो या डील्स की।
Welcome back. You're still tuned in to Chartbusters on CNBC TV18. Well, as you can see on your screen, it is a good recovery that we've seen for our markets. We have the Nifty, which is just about flattened out. We have the Nifty Bank, which is holding up with a gain of around 0.2%. And like we've been pointing out, there has been some recovery which has taken place for the IT index as well. So it seems as though the markets are quite sanguine in terms of all of the bad news which has taken place over the weekend. But as you can see, the IT index is still under pressure, down around 2.8%. We have Infosys, TCS, HCL Tech, all of these frontline stocks which are under pressure today. But nonetheless, good recovery, Nigel, you'd have to say.
Well, that's right. The market's almost in the green. That's the Nifty, Midcap Index, even Stevens. Nifty Bank put its hand up and getting counted, while the tech space, we'll have to see what kind of a recovery we can see from these levels. But to be fair, from the lows of the day, it's recovered close to around 0.7%. We'll wrap up on this edition of Chartbusters. You stay with us. The team of Trading Hour is waiting by.
Good morning. We are right here bringing you a brand new edition of Trading Hour live from the CNBC TV18 Motilal Oswal studios. Navratri greetings to all our viewers on the first day. I'm Hormus Fatakia, with me as always Reema Tendulkar. Reema, good morning. Well, looking at how the IT stocks have reacted, you would take a 20-point fall on the Nifty with both hands, won't you?
Indeed. But you know, so many of the experts we've been speaking to since morning have said the EPS cuts are limited to 1 to 4%, assuming things continue as is. But companies will take mitigating steps. They will look to offset it by sending fewer H1B people or maybe increasing the local talent. So, I mean, the actual impact could be even lower. So I guess what we're seeing right now on the screen with respect to the IT stocks and the decline perhaps is what it's going to be. It's not going to be an existential crisis. But as you rightly pointed out, it's all about IT. IT is single-handedly dragging the indices down. Tech Mahindra is down 3.5%. Infi, TCS, Wipro, HCL Tech are seeing losses of close to about 2.5%. Midcap IT names, though, are taking a bigger knock. But that is because they've outperformed, and their ability to bear the H1B burden is a lot lower, especially if they are sending significant number of people abroad. So Hexaware told us that about 40% of their American workers are on H1B visa, and that stock is down close to about 6% Emphasis, Persistent, Coforge too are seeing a downtick. But if you strip that out, it's not that the other sectors are losing significant ground. You've got, I think, the pharma index, which is mildly lower. The Nifty pharma index is under pressure. But outside of that, we are holding up pretty okay. So let's talk about stocks outside of IT. Hormus is now at the big wall, and he's going to put the spotlight on the top movers in the market. Hormus.
Well, I had to put the spotlight on IT considering the fall that they have had this morning. And you take a look at the volumes as well. It's been on very significant volumes too. Now, Persistent, we've already had over 7 lakh shares that have changed hands. The 20-day average is just close to 1.5 lakh. Now, Tech Mahindra has seen the most significant volumes here. 25 lakh shares of Tech Mahindra have changed hands. The 20-day average here is just 3 lakh shares. Same is the case for Coforge, 11 lakh shares compared to a 20-day average of 4 lakh. And LTI Mindtree, with close to 2 lakh shares having changed hands, the 20-day average here is only 64,000. So a lot of these IT stocks are declining, yes, but also declining on very significant volumes compared to their 20-day average. The second one on the list today is a PSU name called State Trading Corporation, and here the stock is up 16%. This is the biggest single day gain and the most significant volumes that the stock has seen since July of last year. And you take a look at the volumes here as well. We have been highlighting this for quite a while now, that these broader market names, the moves that you're seeing are on extremely high volumes. And you take a look at the volumes here as well. 2.5 lakh shares have changed hands. The 20-day average is just over 3,000 shares. So compared to a 3,000 share average, over 2.5 lakh shares have changed hands. And courtesy of this move, the stock has broken above all of its key moving averages. Of course, mind you that the stock is having a very little free float in the market, considering the government owns 90% stake in the company, and of course, which is well above the minimum public shareholding norm. So keep that at the back of your radar. And lastly, the stock on the list is Shalby, and Shalby was up around 10-12% a few weeks earlier as well. It's up another 10% today. It's the third straight day of gains for the stock, during which the stock is up 16%. And take a look at the volumes here as well. Over 40 lakh shares have changed hands. The 20-day average here is only 2.5 lakhs, so well over 20 times the 20-day average already within the first 2 hours of the trading session. And courtesy of this move, the stock has already gained more than 35% in the month of September. It has turned out to be the best month of the calendar year so far for Shalby, and as a result of which the stock has also turned positive on a year-to-date basis and also now trades above its IPO price.
Thank you very much for that. But today is the start of Navratri, and the GST 2.0 reforms kick in from today. We have with us Yashovardhan Sinha, CMD at Aditya Vision. Now, this is a company which sells a wide range of products. They include digital gadgets like your laptops, your mobile phones, home appliances like refrigerators, AC, Entertainment solutions like televisions, they operate in more than 175 stores across India, but predominantly in Bihar, Jharkhand and Uttar Pradesh. And all the categories, and many of the categories that they sell in their stores have seen a marked cut in the GST rates, spurring price cuts. And the hope is that we will see a consumption boost. In fact, that is going to be the discussion, the points that we will discuss with the management. Sales expectations driven by GST cut, the festive season, the key demand trends across category, and the outlook on revenue growth and same-store sales growth. Thank you very much, Mr. Sinha, for joining in. I think that's the first question, right? Q1 was a bit subdued, but now expectations are running high. What were you anticipating at the beginning of the year in terms of an overall growth? What are you now expecting? And particularly for this festive season, what is the sales growth that you anticipate?
Good morning. Thank you very much for having me on your show. This big GST cut, I'll say, in fact, it is a revolutionary step from government. We expect that it is going to spur the demand like anything. In fact, it has just kicked in from today, and we are hoping and expecting to have a very good season ahead. In fact, such large cuts on air conditioners and larger TVs, etc., is going to see big boost for demand for these products, and we are hoping to have a very good season going ahead.
Can you put some numbers, sir, for this festive season, which runs from now to almost year end? What is the growth and full year growth?
We give our guidance of 20 to 25% in our guidance. And we are hoping to better this guidance this year because there is something new associated in this festive season.
Mr. Sinha, good morning. Thank you for joining in. Please complete your point, sir.
Sir, what I was saying, what we are expecting that with big cuts and with muted Q1, which we have seen, we are expecting a very good festive season going ahead. There are a lot of inquiries also. We are having a lot of bookings also. So these augurs well for our coming festive season first. Second, coupled with 125 unit free electricity has also a big catalyst in keeping the demand very high, and it is going to cheer up our customers. So these all, in fact, I'll say that everything together is definitely going to do very well for the demand side.
So, Mr. Sinha, since you mentioned that there was a significant rise in inquiries as well after these rate reforms were announced, can you mention the categories in which you saw a significant spurt in inquiries, whether it was the air conditioners, whether it was television or other consumer durable appliances?
Yeah, of course. Wherever people were expecting a large cut in GST, the inquiries are very much there. I mean, ACs, which will be now taxed at 18%, they are very much in demand and very much people are awaiting for today. So AC is one category. Second category will be larger screen televisions, where there is a huge cut in another 10% cut in taxes. So I think these two categories are going to do very well. And in fact, people are withholding their purchases also, which I think that with pent-up demand and coming season festive mood, I think these two categories are going to do very well.
Mr. Sinha, you spoke about how customers were withholding demand, waiting for the lower rates to kick in. Now, when we look at Q2, how was July, August, and even till yesterday when we had higher rates? I mean, was that as weak as Q1 or was there an improvement? I'm trying to understand pre-cuts.
I'll say that, in fact, muted Q1 spilled over Q2 also because of incessant rains, as you must be aware. Yes. So it was a huge impact. It had some impact on our sales. But definitely from the day GST was announced, there was people were withholding their purchases. And though, of course, it was not very significant, but it was significant as far as growth is concerned.
So when you say muted till 15th of August, what are we looking at in terms of growth? And what about after?
Not 15th of August. In fact, when GST Council announced the entire decision, then only growth was. In fact, people started staying away from buying.
So what was Q2? Give us an indication. We're almost coming to the end of Q2, barring this last 10 days. How has Q2 been on an average?
So, as you know, this Q2 going forward from today, that will be a big part. In fact, maybe in next 8-9 days, we are going to cover a lot of lost ground, what we have lost in this month itself. So I think that we'll be covering up and recovering very well in Q2 in last 9 days.
So has this GST reform done anything to your store expansion plans? Considering how the first quarter was and the first half of the second quarter was, and now with the then and now factor, do you believe that you would be trying to go past that 200 store count by the end of the year?
Yes, we in fact, this is a very bullish news as far as our stores are concerned, and we are going all out on this front. We hope to add. In fact, we have been adding more than 25 stores per year every year since last 3, 4, 5, 6 years. So we are in fact ramping up our capex, and we hope to open let's say more than 30 stores, but definitely will be above 200 store count by end of this financial year.
Okay. Sir, if I just broaden the time horizon and say 3 years down the line, what would be the 2 or 3 growth drivers for you? What is the opportunity that you're tapping?
We are, in fact, tapping on the opportunity that for the large population, we are in fact catering to. We'll be surprised that we are catering to almost 32% of entire India's population. And this population generally has remained under-penetrated all the time. So we think we find a very exciting market here, going to such places where nobody was there or it was still untapped. And overall penetration is so low, in fact, in all this region, that we hope that we are going to continue growing 30-35% over next near to medium term.
So with this anticipation, Mr. Sinha, one final question, sir. Does your store count over the next 3 years double from where it currently stands?
I hope so. In fact, everybody is aligned to this, and we are hoping, because all the store, whatever we are opening, they are giving us very good result. And in fact, we are looking towards newer, fresher areas, I'll say, still untapped areas. So I think, yes.
All right, Mr. Sinha, pleasure having you. Thank you so much for sparing time and joining us. Wish you good luck for the festive season and for the rest of the year as well. Aditya Vision there, hopeful that their store count would double over the next 3 years, and of course anticipating a significant recovery in this festive season compared to what the first quarter and the first half of the second quarter turned out to be. Take a short break. On the other side, put the spotlight on the crypto market. Manisha Gupta joins in.
TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back on Crypto Corner. Today we are talking about the asset class, which is crypto or technology, and on how to invest into this and what should you be really looking at as you do in various asset classes. But in case of crypto or virtual digital assets, what are the main points to keep in mind when we are looking at those investments? So the first on my radar really is about the market's trend and prices. A lot of people get attracted into crypto because they've seen higher returns, they've seen prices run up as well. So in case of that, Bitcoin and Ethereum are your major things to watch out for, and this is what set really tones for the entire market there. So if you have these two cryptos surging up, the biggest is the Bitcoin and the second in sense of altcoin is Ethereum. That is when you know that the market really is surging on the higher side. There also are other popular altcoins like Solana, Cardano, Avalanche, etc. There's top 20, by the way, which you can keep an eye on. And if these are rising, that tells you that the overall market cap and the trend is on the higher side. The other point to watch out really is about the regulatory commitments there. Well, this is interesting because it really is about what stance, what country is taking will tell you on how the crypto as an asset class will move. So whether it's about regulations, bans, new crypto laws that are being globally launched is something that will lead the further direction. We've seen what is happening in US. We've seen how the legislations there have been changing. And apart from that, it can be about tax policies, KYC, AML rules that can impact prices and the market sentiment as well. The third thing to keep an eye on is about the technology and the protocol upgrades itself. You remember in the recent days, we've seen Ethereum continue to upgrade its layer 2 scaling solutions, so much so that we've seen improvement in transaction speed, cost, efficiency, etc. These things always work in favor of those coins which are ready to do hard work and improve technology. And then new consensus mechanisms, interoperability and sense of features, all of these are big positives. It also is about DeFi and the NFT trends that the street watches out for. So whether it's about growth or contraction within that space, popular NFT projects that are coming in and the kind of price that people are ready to pay for that also sets a tone. It also is about adoption in case of crypto when it comes to gaming, metaverse, digital art, etc. If there is more interest, the prices are going to go up, and that is your cue to go bullish in the markets there. It also is interesting to watch out in sense of adoption and partnerships. Newer partnerships, integrations, major financial platforms advocating it or adopting it is interesting. Merchant acceptance for payments in crypto also is another thing that the street keeps an eye on. It also is to do with the institutional buying. It has been about family houses buying. Big companies like Alphabet to Samsung to L&T also seem to be getting into crypto, and that is lending credibility there. Watch out for market sentiment. Track social media for real-time sentiments. If everybody's going bullish or bearish, or there is a new move that is trending, you know where to go in that sense. And that isn't just about crypto, but various other asset classes also. Take a look also in sense of security and hacks, especially when it comes to crypto, because this is online, this is blockchain. So any hacks, wallets, vulnerabilities, if it also is about newer security standards, if it's about rug pulls, if it's about something new coming in, it's something that you should be keeping an eye on. This is to be more about cautious in what really are you investing in. And then it is about macro factors. Everything in sense of asset classes does watch macro, and so do virtual digital assets. So whether it's about interest rates, currency moves, anything newer that's happening in sense of geopolitics, safe haven buying, crypto does form a strong part of this as well. What you might want to also watch is the high growth potential in many of these cryptos. Portfolio diversification is one of the reasons that people do get in cryptos within their portfolio. And then it also is about innovations, exposures within DeFi, NFT and Web3 happen for that. And in the recent few months, it also has been inflation hedge that crypto is being seen as. So that is about the various factors. And the reason that you want to have crypto in your portfolio are these. But with that, that's all the time that we have on this segment. Go for a short break. When we come back, we talk about more markets and stock specifics on the other side.
CNBC TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Pull up MCX. There's the flashes on your screen. The PFRDA committee may issue guidelines for trading in commodity derivatives in the next 10 days. That's what sources are telling our colleague Yash. And 0.6% higher on the stock. Remember, just last week, the SEBI chairperson, Tuin Kanta Pandey, had also mentioned about the FPIs and pension funds trading in the commodity derivatives. And that is what had led to the stock moving higher last week as well. And the sources are also saying that the PFRDA does not need any other regulators' approval and will start studying more commodities for investments after gold and silver. So the guidelines are expected in the next 10 days, and as a result of which there has been a significant recovery from the opening lows of for MCX, almost 150 rupees that have been recovered from the lows of the morning. That's MCX as of now. We'll get you more details from Yash in just a bit, but good time to get in some trends from the F&O space. The Nifty, after being quiet for a while, has slightly grinded lower now, 50 points down on the index. Sudarshan is joining in with the latest trends from the F&O desk. Sudarshan.
So the major move is mainly seen in majority of the stocks rather than at the index level. If you look at all the major indices, Nifty is trying to hold on to levels of, around 25,300, but in the last few minutes it has slipped below and currently down almost 0.6%. And the sector which is downgrading, like underperforming and dragging the index, that is the IT after H1B visa issue, and all the stocks, whether you take a mid-cap IT names from Mphasis, LTI, Mindtree, Coforge, Persistent, to large-cap IT names, Tech Mahindra, Infosys, TCS, all the stocks are somewhere down in the range of 4 to 5%. If you talk about the minor support that is coming for financials, and all the GST names basically are being impacted by GST cut, positively impact. Take a look at Hero MotoCorp, Bajaj Auto, Maruti, Mahindra and Mahindra. All these stocks are trading with gains. What does volatility index is indicating? So it's up around 4% because of the major moves that you are seeing in majority of the stocks. Put call ratio has moved higher to 1.04% from Friday's close of 0.97. What does options data indicate? So on the put side, if you take a look, 25,300 and 25,350, both the options are the most active. While for 25,300, premium has slightly come down. 25,350 also, it's almost flat. On the call side also, you'll see 25,300 premium has moved lower to 78 from 108, and for 25,400, it has moved lower to 30 from 53. So what does it indicate? So premium for majority of the options that I've talked about has been flat. So market is expected to remain range bound going forward. So now for Nifty, range will be 25,200 to 25,400. For now, support would be around 25,200. That is the intraday low. Resistance would be 25,330. 25,330. As far as Nifty Bank is concerned, support would be around 55,490 and resistance would be 55,670. That is the 100-day moving average. What about the stocks? Some of the stocks that are saying short covering from insurance pack, that is LIC, and second one is HUDCO. LIC is moving higher also after the positive brokerage note from JP Morgan. And some of the stocks that are saying fresh shorts, and most of the names are from the IT pack. Take a look at LTI, Mindtree, Coforge, Mphasis, Persistent. So overall, it would be like we'll have to take a look what exactly market does. But for now, Nifty would like to hold on to levels around 25,300 because we have a weekly expiry also tomorrow.
Got that. Thank you very much for joining in. Nagraj Shetty from HDFC Securities is now joining in. Nagraj, morning. Index is not doing too much, so let's straight away get to the stock recommendations at this hour.
Hi, good morning, Rima. Yes, index faced resistance after a stellar up move of 1,000 points from 24,400 to 25,400 odd levels. I'm not expecting a bigger reversal on the downside or a sharp decline from here onwards. Market could find support somewhere around 25,100 to 25,000 level. I'm expecting a bounce back from the lows, and eventually Nifty could move above the initial hurdle of around 25,500 levels in the near term. So trend remains bullish, buy and dips are positive for the market. And stocks are concerned, I have two stocks. First one is the BML. Chartically, BML has been in an accumulation phase from the lower level. It has bounced back from the lows, and after showing a sharp up move, it has witnessed a consolidation moment and making an attempt to move up. The overall chart pattern is looking positive. Currently trading around 4462 levels. One can place a stop loss at 4350, and one can expect a target of around 750 levels.
Nagraj, thank you for sparing time and joining us today. Let's cut across to the Network 18 Reforms Reloaded event, and Shireen Bhan is in conversation with the DIPAM secretary.
Ladies and gentlemen, when GST was first announced, let's remember the markets were anxious, businesses were cautious, and households were curious. There was hesitation, there was even resistance, and yet over time, this very reform has helped reshape India's tax system and given businesses the predictability that they had long sought. Confidence followed, not overnight, but steadily, and trust was built brick by brick. Today, ladies and gentlemen, GST 2.0 is more than just a restructuring of slabs. It is a signal that India is ready to simplify and trust its business and its citizens with a system that's designed to fuel consumption, broaden participation, and strengthen confidence. It is fitting that this very day coincides with the date when GST 2.0 officially comes into force, a reform that could well spark a fresh wave of business momentum and festive consumption ahead of Diwali. The timing could not be more critical. The World Trade Organization now projects that global trade could expand by less than 1% in 2025. That is the weakest pace since the pandemic years. At the same time, the European Union is moving ahead with its carbon border adjustment mechanism, a levy that will directly tax exporters from steel to cement, and across Asia, supply chains are being reordered in ways that will decide who rises and who is in fact left behind. India, meanwhile, has reasons for confidence and optimism. GDP expanded 7.8% in the first quarter of FY26, driven by revival in rural demand and steady private investment. Forex reserves have crossed $700 billion. That's a record buffer against global volatility. The IPO market has raised more than 50,000 crore rupees just in the first half of FY25, making India one of the busiest primary markets globally. And yet, equity indices, which have remained volatile and choppy, continue to be driven higher by domestic institutional inflows. Foreign investors have, of course, been skittish. And that is why this summit matters. Reforms Reloaded 2025 is about asking whether policy ambition can translate into lived economic impact. Will GST 2.0 ease the cost of doing business and fuel consumption? That's the number one question on everyone's mind. Will disinvestment and asset monetization finally shift gears after years of debate? Can India match its reform narrative with resilience on the ground and credibility abroad? That is the purpose of Reforms Reloaded 2025. GST may be the trigger, but the canvas stretches much wider, from disinvestment and asset monetization to frontier technology, defense indigenization, renewable energy, and India's evolving role in reshaping globalization. Over the course of today, we will be joined by policymakers, key decision makers, industry leaders, investors, and global voices who are not only shaping these reforms, but are also holding them accountable to their promise. And before we begin, once again, we would like to take a moment to acknowledge those who've made this event possible today. We couldn't have done this without our presenting partner, IDFC First Bank. Thank you very much, Mr. V. Vaidyanathan, for giving us your support and for being here, coming in from Mumbai to be here with us this morning. Our associate partners, ITC, PhonePe, Reliance Industries, and our exchange partner, the National Stock Exchange. Thank you to each one of you. Your support reflects a shared belief that reform is not a one-time event, but a continuous journey that must be told, debated, and delivered. We hope that you enjoy this day of conversation, dialogue, and deliberation. Please keep your feedback coming. Please keep your questions coming. Do tweet, do join and engage with us on social media. Again, once again, ladies and gentlemen, many, many thanks for joining us here this morning.
Thank you, Shireen, for setting the tone for today and requesting you to also please come back on stage. We want to start the day as we are in a time of global shifts, slowing trade abroad, and India stepping up in BRICS and the G20 as well. At home, GST 2.0 is reshaping the Indian economy. The real question, can we speed up reforms to boost investment, competitiveness, and global standing? At the heart of this lies divestment and asset monetization. Are we moving fast enough to take us into that debate? Please welcome Mr. Arunish Chawla, who's the Secretary of Department of Investment and Public Asset Management, with a huge round of applause, ladies and gentlemen. Shri, please.
What better way to kick off Reforms Reloaded with the market-facing department of the Government of India, the Secretary of DPAM right here with us, Mr. Chawla. What a pleasure. Thank you so much for joining us here. Before I talk to you about disinvestment and the disinvestment roadmap, I want to understand from you the broad picture within North Block at this point in time with the rollout of the GST, with the income tax cuts that were given by the government. The clear effort and message seems to be, as we heard from the Prime Minister yesterday in his address to the nation, boost consumption, drive consumption. The budget-making exercise is going to start shortly, Mr. Chawla. How does all of this stack up on balance as you get into the budget-making process?
Thank you. Honourable Finance Minister will speak about it in more detail in the evening. I'll just make two supporting comments. One, our government is providing a balanced support to the economy. And balanced support includes support to private consumption, and which, as you very rightly said, includes both the income tax relief that was given in the budget and this great GST 2.0 reform, which is being rolled out and which was announced by the Honourable Prime Minister, both from the Red Fort and yesterday. Secondly, we have not forgotten investment. We've not forgotten about productive investment and the need to increase the productive capacity of the economy. As you know, the budget this year provided for more than double-digit growth in capex, which includes both budgetary and extra-budgetary resources. And as you know, if you can see the CGA data which came out the first quarter, that investment, public investment through the budgetary sources was on target. Equally important, what is called the extra budgetary resources, where we directly come in and where the public enterprises play a role. The data we have as of end of July, we achieved almost one-third, about 30 to 33% of the yearly target by July itself, which tells you that we have front-loaded reforms. We have kept them on track. And the industry and the commercial side of the government is working on the global value chains, how to revisit them, how to reorient them, so that we can insulate our economy from the global headwinds. I also have one suggestion. We should not get obsessed with individual numbers. India is a growing economy. We are in a phase of growth convergence. And it is how we perform relative to the rest of the world that is what matters.
So which number should we not get obsessed with, sir?
It's the headline number which we all tend to get obsessed about. And the right way of looking at it is, say, in spite of global headwinds, the world is going to grow, say, at 3% or even lower. If we can grow double that in real terms and maybe exceed that, and that is what the early data shows, we should be thrilled. That is my suggestion.
Well, suggestion and point taken, sir. Let me now address the issue of disinvestment and what the government is likely to do as far as the disinvestment roadmap is concerned. You know, I talked about the markets, and the Indian markets have, of course, faced their own degree of volatility on account of the fluctuation of FII inflows, but that's been offset by very strong domestic institutional interest and domestic institutional investment into the stock markets. There really has been, in a way, a democratization of the Indian capital markets that we've seen. How does your department, how does the government intend to leverage what we see happening in the market? What can we expect? More public sector companies doing OFSs? Are we likely to see more IPOs? What can we now realistically expect?
Good question, and I entirely agree with you on the observation. The first dose or the first dose of financial inclusion was Jan Dhan, was Aadhaar, was UPI, what is globally called the India stack. The second big structural change that has come about in our economy is this great democratization of our capital markets. And as you know, the foreign institutional investors keep moving in and out. They have their own sentiments. Last year, they gave us a tough time. And this year as well, you know, in the last few months, there has been great nervousness because of the reasons that you well know. To great comfort and great relief, the domestic institutional investors have become part of our capital markets in a very organic way and in a very democratized way. And if I can just quote you numbers, just say last closing financial year, if the FIIs were maybe slightly negative in the net sense, the domestic institutional investors poured in 6 lakh crores of savings and into the capital markets. So we have moved away from that era where everyone just kept money in fixed deposits and provident funds. And mind you, almost 2/3 of our domestic institutional investments, the mutual funds and the, more high net worth individuals, almost 2/3 of it is just individual investors. And what they poured in as 6 lakh crores is almost twice as the 3-year moving average, which is again twice of the previous 3-year moving average. And this year, they say from January till August, again, as the FIIs in a net withdrew 1 lakh crores, the domestic institutional investors poured in 5 lakh crores. And that is why our capital markets are the best performing world over. We have overcome the headwinds, and you can see they're now stable and looking forward to what today you call reforms reloaded.
So what can we expect as far as your pipeline is concerned, sir, both in terms of IPOs, in terms of public sector enterprises, public sector banks needing to meet the minimum float norms that the regulator has in place? Give us a timeline of what is on the anvil.
You can expect from us honest gratitude to the small investor.
Can you put a number to that, sir? What does that mean exactly?
So essentially what that means is that we started with a few market stake sales at the beginning of the year. We held up a bit in the days of nervousness, but as markets have stabilized, we will bring in value creation opportunities for small investors. We will bring in more OFS, we'll bring in minority stake sales, we'll bring in maybe a few IPOs, and we will speed up this journey. And I will also congratulate and thank CNBC TV18 because you have helped us connect the policy space, the market space, the investors together in such a beautiful manner.
Well, thank you very much for that, and we look forward to being able to continue to do that, sir. But, you know, so the second half of the year, IPOs, minority stake sales, and OFS, do you intend to make that disinvestment target of 47,000 crore rupees, or perhaps this time, for a change, beat the disinvestment target as well?
Fingers crossed, beat it this year.
Beat it this year. You're feeling confident about that?
Absolutely.
IPOs, on the insurance side, are we likely to see IPOs from the insurance companies? Are we likely to see IPOs from the defense space? Because that's a space that the markets are at this point in time fairly excited about. Where could we see the next set of IPOs coming in from the public sector?
It would not be fair for me to name individual companies.
You can give us a sector.
Yes. But broadly speaking, what you said are the right sectors. And in these sectors, you will see various forms of minority stake sales through various methods, the SEBI-approved methods. And we, as you said, have a good target in mind and maybe exceed it so that all these small investors who have reposed their faith in us, we repay the gratitude back to them.
So how do you then respond, sir, to the comments that have come in from many market observers and market watchers who say that, look, the disinvestment story in India is dead?
I would refute that very strongly. We tend to pick up stereotypes very quickly. What is disinvestment needs to be understood very carefully. And if you see the evolution of this policy 25 years ago, when this department of the government was founded, it has been through four phases. The first phase was 1999-2004, which was a learning phase, or you can say an experimental phase. The second phase, that is 4 to 14, was a phase of political constraints or coalition constraints. That is a better word. And of course, the strategic disinvestment took a backseat, but the department continued with minority stake sales. The department continued to engage with the capital markets. The third phase, which is 16 to 21, we would say was the revival phase, when strategic disinvestment was revived. And revived in the right earnest, because you see, and the fourth phase, which is 21 onwards, which is called the Atmanirbhar Bharat PSU policy, is a phase of integrated disinvestment policy. And what that means is that disinvestment and closure are two sides of the same coin. At a micro level, they may look very different, but at a macro level or in a general equilibrium framework, they both create greater space for the private sector. And if you see, as many as 50 public enterprises have been taken up either for disinvestment or closure in the last 50 years. And that has yielded dividends. You see such an exciting private sector manufacturing growth. But we must not forget that public sector also has a fair, bona fide role to play in our economy. There are certain strategic sectors, there are certain public goods, there are certain public services, there are issues of inclusion which are not for profit in nature. That is where, and of course, now in the present global framework, maintaining the security of our global supply chains, of our raw materials, of our minerals, is equally important. And therefore, when we talk about the disinvestment policy today, it means public sector does its job that is due to it, the private sector does what is due to it, and we share wealth and value that public assets create with the people of India, with the citizens of India, and with our small investors.
So let me just push back a little bit on that, because the banking sector, for instance, the expectation was that we would see privatization. That is not the case. In fact, we have the DFS secretary telling us that the government has no intention of bringing down holdings under 51% at this point in time. Telecom, another sector where the government has decided that from a strategic point of view, it does not intend to disinvest. So which are the sectors where strategic disinvestment is likely, where there is still an intent and an appetite to go forward with strategic disinvestment?
I would not like to comment beyond my pay grade.
So this is very much your pay grade. You're going to have to do this.
Okay, let me put it this way. I would not like to, say things which are beyond my immediate domain. But all I can assure you is that all major public sectors, including the financial sector, which is the banks and the financial institutions, are part of our disinvestment framework. You may see one or two big strategic disinvestments, but you may see many more, maybe half a dozen OFS or follow-on offers or different forms of minority stake sales.
So half a dozen minority stake sales by way of OFSs, etc., but one or two strategic disinvestments. Let me guess which one or two of those strategic disinvestments it could possibly be. IDBI Bank, so we're talking about reforms, reloaded and accelerating reforms. It's been a disinvestment in the making for over a decade now. Are we going to close it this financial year?
Hopefully, yes. Honorable Finance Minister said it in an interview recently, and we are working hard day and night to make it happen.
By when will you invite the bids for IDBI Bank?
The only timeline given out in the media is end of the financial year. A lot of things happen and are done outside the media glaze. So let the interested parties wrestle it out.
Speaking of interested parties wrestling it out, sir, would it be fair to assume that the foreign interest is higher than the domestic interest, specifically as far as IDBI Bank is concerned?
No comments.
I'm trying my luck to extract as much as possible from you. So IDBI Bank, of course, as you stated, is being targeted for this financial year. What could the second candidate be, sir, from a strategic disinvestment point of view?
Wait and watch. You will hear the announcement at the right time, and we'll make the announcement through you.
You'll make the announcement to us, so we will hold you to that, sir. But the other important aspect that you spoke of, and I think that's something that the market is also watching very closely, is the government's dividend policy. And perhaps you could shed some light on how you're looking at the dividend policy going forward as well.
Very good question. A fair dividend policy is part of our integrated disinvestment framework, and the reason is almost the same reason as the monetary policy. Essentially, it is the discretion versus rule, which is also called time consistency. And it's a very careful optimization between the investors and the traders. We don't give any targets to the private sector. We allow them to freely operate in the capital markets. For the public sector, we want them to be benchmarks. And so we create that nudge. And over the last 10 years, we have debated this internally. The policy framework has evolved and matured. And we now ensure that public enterprises who have moved bravely onto the capital markets and have won the trust of investors should pay 30% of their profit after tax or 4% of their net worth, whichever is higher, as fair dividends to small investors. And this has picked up. If you see in the last 5 years, the dividends payout by the public sector enterprises has doubled. And even though they occupy only 14% of the market cap in our capital markets, they pay 25% of dividends to the small investors.
So that will continue?
That will continue, and it will they achieved a record landmark last year. Almost 1,20,000 crores was distributed as total dividends, and we hope to exceed it this year.
You hope to exceed that number this year, 1,20,000 crores. IPOs, and I want to go back to that because the last big blockbuster from the government, of course, was the LIC IPO. What's the thinking? What would you like to prioritize in terms of the IPO pipeline? We talked about how strong the appetite has been as far as the primary markets are concerned. What would the government like to prioritize, given the global challenges as well as the appetite in the market from an IPO perspective?
Good. We are doing investor meetings and market research. You should expect that at least some public enterprises in the strategic sector or natural resources space, or maybe their subsidiaries, will be brought out and placed suitably.
So natural resources space. So you've given us a clear heads up there in terms of what the priority is likely to be, sectorally at least at this point in time. Okay, and how soon can we expect you to look at hitting the markets?
End of financial year. Anything before that?
This financial year. So that's the target. And how many are you working towards, sir?
No comments.
Okay, fair enough. You know, Mr. Chawla, I want to take a little segue away from disinvestment to talk about something that I know you've very closely been involved with. I don't know how many people in this room know, but he's, of course, had stints at the IMF, and he's been very closely involved with economic diplomacy as well. As you look at what's playing out at this point in time with tariffs, especially with the ongoing negotiations between India and the US, what do you believe are likely to be the outcomes of these negotiations? How confident do you feel that we will, in fact, be closer to getting some sort of an agreement in the next few weeks?
Those who are not part of negotiations do not comment on it, when particularly they leave those positions.
As an observer.
This engagement will continue. It's very difficult for anyone to predict which way it will go. But my own view is that we should not respond in a knee-jerk fashion, which is what we are doing. We should continue to work on our fundamentals, strengthen our economy, provide balanced support to growth, reorient our value chains, and at the end of it, it will pay us good dividends.
So, a calibrated approach is what you're essentially suggesting. But on the macros, as you look at what's happening, especially as far as the currency markets are concerned, and we've seen a fair degree of volatility there, how do you see the rupee and the move in the rupee also kind of offsetting some of the impact as far as exporters are concerned? But, what you believe the strategy should be there?
It's the domain of the central bank, so I would not give any comment on it. But being the market-facing department, whatever we see and whatever we research, broadly the rupee is aligned with the fundamentals, which is called the real effective rate.
Coming back to asset monetization, and we had that big plan as far as asset monetization was concerned. What can we expect now realistically as far as this financial year is concerned on that front specifically, sir?
As I said, I would reiterate that we are on course to meet our target. We've been planning it since the beginning of the year. We did a few things at the beginning, and, when the headwinds come, we lie down, but we keep ourselves ready. And the moment the fresh breeze comes, we come out and, I would say, give fair returns, and if I may use my language, fair dividends to the investors.
Fair returns and fair dividends. Do you feel a fresh breeze, sir? Is it picking up momentum? Is it getting stronger?
Some major announcements made by the Disinvestment Secretary there. More natural resources linked companies IPOs on the anvil by the end of the financial year. The DIPAM Secretary is also hopeful that the disinvestment target for the year will be exceeded and not met. And there are at least half a dozen OFSs that are lined up, including one or two major strategic disinvestments as well. So important announcements made there by the DIPAM Secretary in conversation with Shireen Bhan at the Network 18 Reforms Reloaded event. With that, we take your leave on this edition of a trading hour. The Nifty still 40 points lower, but the activity lies on specific stocks. From Rima and me, thank you for watching. Halftime report on the other side.
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a decor brand. Live consciously. Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV18 Market Central.
For your daily source of market intelligence and wealth creation with a commitment to doing it right.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh. Mahindra Electric Origin SUVs.
Worrying global cues with US's fresh visa salvo is offset by the optimism over a demand boost following the GST cuts keeps the market in a bind. IT and healthcare are the big drags, while utilities and realty notch gains.
Trump's imposition of an additional $100,000 fee on a US H1B visa application dents sentiments for IT stocks. Several Indian IT players provide updates indicating limited or no impact, but concerns on margin impact and growth lingers.
Prime Minister Modi tags the GST cuts as Bachat Utsav. Industry leaders too see growth getting a fillip across sectors like automobiles, consumer durables, agri, MSMEs, and of course credit.
India and US step up engagement on ties with Commerce Minister Piyush Goyal in America for trade talks, and External Affairs Minister S. Jaishankar set to meet US Secretary of State Marco Rubio later today.
Hello and welcome to Halftime Report live from the CNBC TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a day where we've definitely recovered from the day's low. So we are resilient, and it seems as though the optimism with regards to the GST boost, the rationalization and what the festive season could hold is possibly overpowering all of the concerns coming in with regards to H1B visas. But nonetheless, so as you can see, the Nifty is just about flat at this point in time with a little bit of a negative bias. So down around 42 odd points. We have the Bank Nifty, which is managing to hold its head above the water with a gain of around just about 75 odd points. Overall, screen is looking a bit tepid at this point, but nonetheless, better than what we asked for.
Better than what we asked for. So no complaining on that front, at least. Not much of a Monday blue coming in for the D Street recovery, like Ekta is mentioning as well. But advanced decline ratio, that's what I want to just pull up. As of now, 1,250 stocks that are advancing versus 1,300 odd stocks on the decline side, 1,400 to 1,300. So keep an eye out on the advanced decline ratio as well, and where we're going to see this move, a bit of a subdued day coming in from the broader end of the markets as well. IT pharma clearly seeing a bit more of a pressure today. So that is what we'll keep an eye out on in terms of the updates that come in from the US front. But let's shift focus and talk about GST. The rates, new rates have come into effect from today. And for that, we are joined in our corporate conversation today. We have Amit Agarwal, Group CFO at Raymond, joining us to discuss three focal points that we want to highlight and we'll talk about today. Obviously, GST cuts across the textile value chain coming to around 5%. Though retail side, the 2,500 price point is there. We'll talk about that as well, what it means for the company. Now, obviously, what will be the benefit of these lower input costs that come in for Raymond, while 2,500 and above that retail price, we're seeing that 18% GST, but benefit of lower input costs, as well as festive demand, FTA tailwinds. How is all that going to be shaping up for the company is what we'll be discussing with Mr. Agarwal. Good afternoon, Mr. Agarwal. Thank you so much for joining us on the show. Let's start by talking about the positives for today, right? GST, the rate cuts that have come in as well. And the highlight that comes in, one is obviously the 2,500 rupees price point that's there, right? Above that, it's 18% GST. Firstly, what portfolio of yours, how much of your portfolio currently is coming from, about 2,500 rupees? And also in terms of value chain, what will be the benefit and how are we seeing things now shape up for the company?
Yeah, thank you for having me on the channel. And if I look at it, the entire portfolio in the domestic market, we sell a significant, almost 50% of our portfolio is fabrics, which is clearly at a 5%. And the benefit which has come on the reduction from 12 and 18% on the input cost to 5% is going to benefit, which we have already clearly outlined and we are passing on to the customers. Similarly, in the apparel business, which is another 25-27%, of that, at least 70-75% of the products will come below the 2,500. It is only very few 25% in numbers which is going to come about 2,500, which is primarily the suits and jackets, which are more like 5,000, 7,000 rupees. Where actually you are not seeing that people don't mind paying even a 12% moving up to 18%. But the larger portion of our business comes into the 5%. And that is effective today. We have to pass on the price reductions, changing from 12%, which was on the apparel, to 5%, has already been passed. And actually what we did was, over the last 10 days, we had already did a GST Bachat scheme for all our customers in the retail counters. So that we have already implemented, and we are already seeing a good traction from the customers in the last 10 days as well.
Okay, so you saw traction in the last 10 days as well, right? Because some of the retailers and consumption side were highlighting that maybe there was a bit of a postponement in terms of buying. Was that anything you noticed? And expectation that now you have from the festive season, will you make up for the lost time maybe?
Yeah, so initially what happened from the 15th of August till, let's say, 10th of August, 10th of September, we had seen a little bit dip. And after that, because we had already passed on the benefit to the customers from the apparel side from 12% to 5%, we had seen a pickup in the sales. But you will have always, because of the Shraddh period, slightly slower sales. But what we compared to the last year's short period sales and this year, we see an increase. Now, going forward, obviously, we are all very optimistic about this huge bonanza which has come in the hands of the consumer. As our Pradhan Mantri ji said, that it is actually a 2.5 lakh crore bonanza which is there in the hands of the consumers, is clearly showing the signs, as we have seen very good bookings for the festival as well as the wedding season. So we feel very, very optimistic that we should be able to offset and demonstrate a decent growth compared to the last year.
Okay, so just put some numbers, Amit, on that, and this is Ekta joining into the conversation. If you, if you were talking about, if you had to compare the Shraddh period from last year to this year, and you've passed on the GST benefits, say 10 days ago already, what is the sales growth that you've seen as compared to last year? And when you are talking about this festive season, what's your sense in terms of growth as compared to the previous festive season or last year's festive season? How much are you expecting? How much of it do you think is incrementally boosted by this GST rationalization?
So if I look at it for the Shraddh period, compare like to like last year to this year, I think we have already seen close to 7.5 to 8% growth. And if I take about the whole festive and the wedding season, what we are forecasting anything between 12 to 14%, depending upon product, be it apparel or a fabric, clearly that kind of a growth. Now, it is difficult to point out whether it is going to be exactly only because of the GST or it is the boost in demand for the variety of reasons, be the stronger festive season. But very clearly, these 2.5 lakh crore is going to be a very large contributor in boosting up the demand.
Okay. All right, Amit. Well, we'll definitely touch base with you because now that all of the rationalization is in place, maybe we'll get a sense in terms of what the demand would be in a couple of weeks. Thanks very much for joining in and speaking with us. So that's Raymond Lifestyle. The stock, as you can see, is just about lower by around 0.7%. We need to get back to the GST reforms which have come into effect, and it's in a special address, Prime Minister Narendra Modi called the new reforms a festival of savings. He also said that it will accelerate India's growth story. Let's go across to Shireen Ban in conversation with an esteemed panel to discuss GST 2.0.
Economy is really going to benefit. That's what I feel. In terms of tangible numbers, if you ask me to illustrate it, in India, the middle class accounts for roughly around 50 crore consumer base in the country. And this is coming at a time when consumption was extremely sluggish in urban India, and urban is comprised of middle class. This 50 crore consumer base is expected to go up to around 70 crore by 2030. So huge improvement in the middle class segment in the Indian industry is there. And this improvement or this reforms is going to only improve the consumption. Let me take an example of a 25,000 rupee earning household per month. Now, approximately 1,000 rupees to around 800 rupees on a 25,000 rupees earning household is the impact. So the annual impact, if I look at the income tax reform, direct taxes and indirect taxes, this impact is going to be around 17 to 20,000 rupees on a 1.5 lakh earning household for the whole year. This is substantial, which is going to translate itself in a consumption boost, in my view.
Well, that certainly is the hope. But, you were talking about that 93 paise price point now. And what are you going to do about that? So are we likely to see more changes as far as the grammage is concerned, especially on these low-ticket items?
Yeah, so India reigns with these magical price points, which we call, they are really magical price points. So 1 rupee, 5 rupee, 10 rupee, 15 rupee, 20 rupee price points. And they contribute to good around 40 to 50% of the overall consumption of the entire basket of SKUs that you sell. So sometimes, when a consumer comes to a retail outlet, he says he doesn't want a particular brand. And rural economy is like 60% of the total consumption. So he says, "Mujhe 10 rupees wala pack de dijiye." And he doesn't talk about a brand at all. So therefore, these are magical price points. So these magical price points cannot be breached. And therefore, in the beginning, we are trying to take it down to around 93. But eventually, it will lead to a commensurate grammage increase in these SKUs, yes.
Okay, so grammage increase is what we're likely to see across the board. I'm coming back to you, Mohit, in just a second, but let me get Mr. Vaidyanathan into the conversation as well. All of this is probably or hopefully going to result in increase for credit requirement. At the bank, how are you seeing all of this play itself out? What's the target that you're working with? What's your expectation?
Okay, first of all, I want to tell Santosh something, man. Come on, do better, man. 2 to 4%.
Do better? How much better? How much better do you want him to do?
I mean, it's not 2 to 4%. It looks so low. Come on, Santosh, do better, man. Come on, this is a stage for you, and you should do something better, okay? So that's that. So,
Santosh, are you taking up this challenge? Are you going to be able to do better?
Yeah, the RBI has already reduced interest rate thrice, I believe, this year. So now up to the banks.
Yeah,
reduce more, we go by 10%.
He's thrown the ball back in your court.
The banking system has, of course, reduced interest rates, but you better do more sales activities and create the markets, okay?
He'll definitely offer a better deal to it.
This is a virtuous cycle that needs to move.
So, no, really, first, the GST 2.0 impact itself, let me just say that about ICRA estimates, SBI research estimates, IDS research estimates, all are pointing out to a consumption lift-off of close to about 2 lakh crores. Banking system credit on that could be something like, again, by research, is about 1.7 to 1.8 lakh crores. And that could mean about a 10% increase in a growth rate sense, which means that last year, if whatever the growth rate for the country would be, it would be plus 1% is our real estimate. That's very significant, considering that the banking system overall credit is about 180 lakh crores. So that's quite significant. Secondly, where is the growth going to come from?
Exactly. That's what I was going to come to.
Yes, where is the growth going to come from? So this growth is going to, as you know, the biggest, there are two kinds of cuts have happened here. One is the essential items like food, paneer, milk, etc., which has all come from 5% to 0%. Now, these were consumption items that people are anyway consuming yesterday without the GST of 5%, will consume tomorrow also. Which is a good thing in its own sense in terms of segment it addresses. But the significant one is going to come from the consumption cuts, the one that has come from 28% to 18%. Now, car prices are down like 10%, or will be down 10%. 10% for 10 lakh rupee car is 1 lakh rupees, big money. Let me give you how much it may translate to as an EMI to a normal person.
Yes.
So, if you think of a 10 lakh rupee car, which will now cost 9, assuming a loan amount of say 7 lakh rupees, and EMI earlier would have been say 16,500 rupees, now EMI will be 14,500. So 2,000 rupees per person per month for 60 months is the reduction in people's EMI. On top of this, like Santosh pointed out, interest rate also came down.
Yeah.
So interest around product cost good down, so both things are actually very significant. And I think this is a material moment. And when we said the other factors that government also reduced the income tax rates, so all three things, interest rate, that one, this one put together, I really believe that 27 will be a lift-off year.
27 will be a lift-off year.
Yes, 27 will be a lift-off year.
So, the banking sector has already had a very good run. When you say 27 is going to be a lift-off year, what could that mean in terms of profitability?
Actually, profitability of 27 will be very good in my opinion, because see this 26 is kind of suppressed because of the the repo rate that got passed on, some more will get passed on this quarter, etc. But all that will become base case. The microfinance issue that happened, all that will become base case. So all that will become base case. So 27 will be coming off let me say a low base, so to say. So in a profitability sense, I'd say that not just credit growth should look better. I believe that the profitability also should look meaningfully better next year. At least for our bank, you should expect that we should look meaningfully better in 27 over 26.
That's the headline. V. Vaidyanathan says 27 is going to be a lift-off year, but
meaningful improvement.
Meaningful improvement. But we were talking about interest rates, and I'll get Mohit and Santosh to comment on that as well. We've got the MPC coming up. What's the expectation? Status quo or a cut?
Before you call Santosh in, Santosh should commit to a
He's He's not letting you go. He's not letting you go, Santosh.
I mean, 2 to 4% is so disappointing, Santosh. You have to do better.
Just to clarify,
you don't grow.
No. He's clearly in the market to buy a Mercedes. Right?
Surely. No, but it was on an annualized basis. I still said double-digit growth for the next 4 months and moving on. So, but for the full year effect, I said.
Okay, thank you. That sounds better to us.
Just to clarify.
Okay, fine. Thank you.
But on the MPC, what's the expectation?
No, see, we got to wait and watch actually, because the could come down, could be wait for a while. So this is not there's a bigger important is a cycle. The cycle in which we are in, that's more important.
Yeah, and the cycle suggests that it is definitely accommodative.
And could be coming down also. Now it's anybody's guess. It's 25 basis points. Yes, no, neutral. We are looking at this yearly cycle playing through, and they already 100 basis points cut, CRR cut. Some CRR cut is going to play out this quarter, next quarter. So that's why I feel more bullish about.
So liquidity, ample liquidity in the system.
Liquidity is no problem at all. Deposits also not a problem. At least our bank is growing deposit 20% plus. So deposit is also not a problem. So when you grow deposit, it gives you good license to grow loans. But I can say for the banking system as a whole, I think this is probably the year in which whatever negative we had to factor is factored. I think next year should be better.
Yeah, okay, should be better. Santosh, let me come back to you now. Let's talk a little bit about, since we're talking about the reforms and the road ahead. What we are seeing at this point in time is also a move to try and ink as many FTAs as possible. The EU-India FTA, which has, of course, been long in the making. The expectation is that we could perhaps get to some sort of a conclusion as far as negotiations are concerned by the end of this year. Will that materially change your plans for India, from India?
No, for sure. We as multinationals have always advocated free trade, fundamentally because we feel that the economic growth is significant whenever the borders open up. And it's just not about the tariffs, it's also about harmonizing the regulations, for example, between countries. So, I think Indian automotive industry has also come out of age. So the access to bigger developed markets which has money in their pocket to sell and export grows. As far as we are concerned, surely today more than 90% of the cars we sell in India are locally produced. So they hardly have a 15% tariff when it comes to parts and components. So that won't change. The 5%, which is our CBUs, which is all those exotic cars, the G-Wagons, the Maybachs, there is a lot of expectation and anticipation that prices may come down. But in the real sense, we would say no, because...
You're disappointing him again.
No, we need to see that by this time this materializes. Already there is a 10% gap between the pricing and the euro. Plus, on top of it, from a contribution perspective as well, the challenge for India is we don't get allocations. There is much more demand on these cars. Some of these cars even have waiting period running to an year. So what would improve is customers would get better access to cars much faster. We may get even much more cars allocated to India once the FTAs happens. But in the larger scheme of things, I think two-way trade will go significantly higher. That opens up new opportunities for us as well to look at India differently. We have been 30 years in India. We call it strategic patience, been there. But I think also from numbers, in these 30 years, we sold more than 2 lakh plus Mercedes-Benz. The 1 lakh Mercedes-Benz has been sold in last 6 years. So that's the kind of demand and the uptick now that we see. So an FTA.
So when do you expect to sell the next 1 lakh Mercedes-Benz? How much do you believe you're going to be able to crunch the timeline down to?
It depends on all the forecasts. I think we have to look at all the factors in, and this is where the forex is one aspect where we are not able to put a finger in, and that's will go back to because a 5% increase in price will take us back to pre-GST 2.0 pricing. So we are back to square one. So this is something, and that may happen as early as 1st of Jan next year.
Okay, that's an interesting conversation over there on GST 2.0. A lot of comments coming in from V. Vaidyanathan as well as of Dabur as well as from Mercedes as well. Keep an eye out on that. We'll take you all through more details through the day as well. But on that note, right now, we're going to slip into a very short break. And after the break, we'll get you more on markets, more stock-specific action. So stay tuned in.
I choose a world where we dream, and the limit is the sky, and this world is my home where I'm living living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
विराज रायचन, रायचन स्टील।
स्टील? आपने वरदान स्टील का नाम सुना होगा।
ऑफ कोर्स। आप मिस्टर वरदान के बेटे?
नहीं।
छोटे भाई?
नहीं।
दामाद?
नहीं।
फिर?
शेयर होल्डर।
शेयर होल्डर?
सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Dreaming about me?
Love is to get lost in the look. Unlimit Love B6 Pack 2 starts at 21.9 lakh.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
I choose a world where we dream, and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously. This is Network 18, and you're watching CNBC TV18.
विराज रायचन, रायचन स्टील।
स्टील? आपने वरदान स्टील का नाम सुना होगा।
ऑफ कोर्स। आप मिस्टर वरदान के बेटे?
नहीं।
छोटे भाई?
नहीं।
दामाद?
नहीं।
फिर?
शेयर होल्डर।
शेयर होल्डर?
सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले
विराज रायचन, रायचन स्टील।
स्टील? आपने वरदान स्टील का नाम सुना होगा।
ऑफ कोर्स। आप मिस्टर वरदान के बेटे?
नहीं।
छोटे भाई?
नहीं।
दामाद?
नहीं।
फिर?
शेयर होल्डर।
शेयर होल्डर?
सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome back to Halftime Report on CNBC TV18. As of now, Nifty 25,280 around that mark. When we started the show, it's there only 0.1% of decline, not much of a move coming in here. But in the last 30 odd minutes, we've seen Adani Gas, Adani Transmission, Adani Wilmar, these Adani names pick up some bit of a pace. And other than that, Vedant Fashions keep an eye out on that. But what's happening in the world of F&O? What are we keeping an eye out on this afternoon? Let's go across to Nigel for giving us this detail.
Well, a quick couple of points with regard to what's going on in the F&O market. First, the Nifty is down close on 40 points, but we have defended the 25,225 odd mark, which is good news. So we have come off the low, and the Nifty Bank is trying to do some part of the heavy lifting. However, the IT index is still under pressure, but keep in mind that's recovered close to 100% from the low point of the day. On the Nifty futures market itself, there appears there is some lightening of position. So some unwinding of the longs that we saw even on Friday, even in today's trading session. Moving to the options data though, the 25,300 call, well, that's seeing a good amount of open interest build up out there. So clearly the writers believe that they can defend this level, and just take a look at the premium. From around 110 rupees, it's come down to around 60 rupees. So those writers, they want to defend the higher levels. Moving on to the put side as well, there is an equivalent amount of action at around the 25,300 put, but just take a look at the premium. It's more or less flattish, telling you there are signs of writing even at this strike. But the indication is that the 25,250 put, well, there's a good amount of open interest built up out there. And take a look at the premium. You've got the direction right, but yet you're not making money. Telling you there is aggressive writing being seen at around this 25,250 odd level, which is telling you the 25,200 mark in all probability, that's the mark you'll want to get defended from a bullish perspective. Moving to stocks that are moving around today, clearly there's a big move that we are seeing on, Muthoot Finance. Gold prices have been strong, and there is fresh buying that we're seeing on this particular counter. However, a couple of other counters, that were getting a lot of shots in the system, suddenly they're getting squeezed out. Case in point being Hutco as well as NBCC. Both those two stocks are up between 3 to around 5%, and the open interest is sharply lower. However, since it's midway through the trading session, there are two stocks that we'll be looking at, particularly getting into the final hour of trade. One is Angel One. There's a considerable amount of unwinding that we're seeing on this strike. So by the end of today, maybe this stock could move out of the F&O band. So that's the one that I'm looking at. And RBL Bank, that's come out of the F&O band just from today itself, but open interest build-up is massive. In all probability, this goes back into the F&O band. Clearly, the street is sensing some kind of activity out here. And we saw the shorts getting a little bit nervous. Now you're seeing big loading on both sides. So RBL Bank is one that could possibly move into the F&O band. Back to you.
Okay, all right, Nigel, thanks very much for that. Well, we need to take a break with the news that the markets are just about consolidating at this point in time. We'll be back with Manisha Gupta, our commodities editor, and she'll be talking to Manish Bandlish, who's the managing director of Mother Dairy. Stay tuned.
I choose a world where we dream, and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
CNBC TV18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
I choose a world where we dream, and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
पैसा लगाना है तो सेंचुरी प्लाइज क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Trading day profitable.
Welcome back, and joining us on the show now is Mr. Manish Bandle. He's MD at Mother's Dairy. Manish, I thank you so much for joining in, and congratulations, because as it is the day when GST is being passed on to the consumers, you already have come out with a list on what really are the price changes here. Is there a lot of difference? And it is clearly across categories. You're not just in dairy, you are into value addition, horticulture products, you're into pickles and jams and safal matar, and there's just so much to you. How have the price changes reflecting today?
Hi, Manisha, and thank you for having me on the show. Yes, it's been 2 weeks of hectic work in our system because due to the great initiative taken by the government of India, I think there's a huge change in the prices that we have done for more than 150 SKUs and products in our system. And as you rightly said, we don't only sell dairy. We also have safal and we also have dhara. So yes, in safal, for example, in the frozen range of French fries and other products, similarly for safal pickle, mango pickle, etc., there have been price reductions that we have taken in the last few days. We also have tomato puree. We recently launched coconut water, which was being sold at 55 earlier. Now we brought it down to 50. So these kind of changes have been done, and I'm happy that they've got implemented across multiple channels as of today morning, and we have been checking across our booths and also into other retail channels. So yes, there will be some teething issues initially, but I think more or less 90% plus execution is happening on the ground.
Manisha, as you said, the last 2 weeks clearly must have been hectic, but would you say, as you said, it's the shortest time possible, and you've said you've done it across board, across booth and various omni channels. What is the response right now, and would you say this will lead to the festival demand really increasing going ahead?
Yes, I mean, being the first day at our booth, there are a lot of consumers who are coming and seeing the real effect in Delhi, especially, and whoever we have talked to, the consumers especially, they seem to be happy. And our booth concessionaires have been trained to handle all the queries, so they are passing on the discounts or the new MRP to the consumer. Since it's the start of the festival season, as you rightly said, today is a very big day for the, especially in the north and other locations as well. I think this will give a lot of relief and benefit to the consumer, especially in the categories like butter, paneer, and ghee, for example. There have been significant reductions. Butter, for example, from 305 has been brought down to 285 on a 500-gram pack. That's a significant reduction if you see from a consumer point of view. On ghee, again, 30 to 40 rupees per kg have been reduced. So these are good benefits which are being passed on to the consumer right before the festival season.
What is the kind of demand growth are you anticipating this festival season? We always see a demand growth during festivals, and now especially with the way the prices have come down, as you gave us an example of butter, etc. Are you looking at a better demand growth, and across what categories?
See, there's one micro view and there's a macro view. If I take both of them, then in the micro, yes, in the season, we normally see 10 to 15% extra jump than your normal base, because people start consuming more. Ghar mein, you have a lot of mithai being made and so on and so forth. So that jump definitely will happen. And I'm very sure with reduced prices, people will be much happier. I think if you look at the overall macro view of the economy, we've been growing at around 7% plus in the last first quarter. With more disposable income in the customer's hands, they will definitely choose certain categories in which they want to invest, either in the household consumption or other investments that they typically wanted to take. So I think overall, as an economy and industry, we will benefit out of it. The dairy ecosystem definitely will benefit out of it if the demand increases in the medium term, because then there'll be more demand of our products. Our farmers, which we connect with almost 10 lakh farmers across India, will start getting benefited out of it, because then we'll be asking for more milk from them. So I think it's a good step in the dairy ecosystem and overall economy as a whole.
Okay, all right, Mr. Manish, as well as Manisha, thanks very much for joining in and taking us through that conversation. In fact, we're going to extend the conversation about GST and the impact on consumption on the other side of this short break. We'll be talking to JP Morgan on the other side, so stay tuned for that. Welcome back. We have Latika Chopra, Executive Director, India Consumer Research, JP Morgan, now joining in to discuss what she thinks is the impact of the GST rationalization on discretionary as well as staples. Latika, thank you very much for taking the time out. So that is the first question. How much do you see this GST rationalization boosting demand in the entire consumer space, and how much do you think it's probably going to boost demand in staples vis-a-vis discretionary?
Hi, thank you for having me on the show. Well, before I get into the GST benefits, just taking a step back, consumption growth in India has been broadly underwhelming in the recent years for a variety of reasons. And, even prior to the GST announcement, since the beginning of this year, we have seen multiple policy measures, trying to revive consumption, be it, moderating food inflation, be it income tax cuts, various state government stimulus coming through. And now, of course, GST is going to be a significant enabler, as this is going to drive end consumer prices for key products to come down. If you look at starting today, most of the companies are landing low-price products into the market. There are very visible advertisements across the board, conveying to the consumers how the products are getting cheaper. We are cautiously optimistic about demand revival for the broader consumer space. We think you are going to see the benefits of lower prices to flow in gradually in the consumer homes as the current pantry of products expires. Of course, the impact is going to vary differently across different product categories. Clearly, there are certain product categories, particularly in the food segment, where price cuts have been more substantial and which are going to see the benefit of better price demand elasticity. Two, we think this is going to induce or could induce a fairly good amount of premiumization over time as premium SKUs become more affordable. Thirdly, for branded goods, it does improve their competitive positioning or pricing versus the unbranded players. And lastly, particularly for the price point packs, we would expect volume grammage increases to boost consumption. So there are going to be these varied impacts which will flow through. To your question on discretionary versus staples, we think large ticket discretionary probably will see the benefit sooner, particularly with the festive boost that we are going to see. So in durable categories, for example, air conditioners, large screen televisions, clearly could benefit, sooner. Then we have low ticket discretionary apparel, footwear, certain household goods, which should also see the benefits coming through. And within staples, we think packaged food categories, particularly where, portfolios are more aligned to price point packs and also where companies where a larger chunk of their portfolio benefits from lower prices stand to gain.
Right. Latika, good afternoon. This is Vinny joining in the conversation. Just a short while ago, we had Mohit Malhotra of Dabur as well, who said that around a 500 to 600 basis point demand boost is what they are expecting to see, right? Is that something that one could watch out for from the staple side of the category? And what is the volume recovery now one could actually see, or the expectation that you all are penciling in for the second half of the year?
Sure. See, the impact in terms of percentages would really depend on the extent, would vary differently across companies, because there are a certain set of categories which have seen these GST rate reductions and hence, price cuts. And of course, the broader consumption also gets a boost. So these percentage points will depend on the percentage of portfolio which gets affected by lower price points. And also the salience of price point packs would vary as per companies. So for some companies, this quantum could be much lower. For some companies, particularly in the food categories, this quantum could be significantly higher. What we think is that the volume growth for the broader FMCG sector should see a gradual boost. So we are hoping for volume growth numbers to improve towards mid to high single digit as we progress towards the second half of this fiscal year. Clearly, the December quarter would be the first quarter to keep an eye on what kind of boost comes through. We would also think that initially companies have passed on all the benefits to the consumer, and even prior to the GST cut, there was a willingness among consumer companies to push towards volume growth, right? If you look at the narratives of companies so far, till the June quarter, rural has already started to trend better. It's urban consumption, which is still a somewhat weak. I think clear signs of revival are still awaited. So the next few months are going to give us the right trajectory of how substantial the recovery in volume growth would be, but we would definitely expect a gradual improvement towards mid to high single-digit volume growth, varying across the companies.
Okay, all right, Latika, we're going to leave it on that note. Mid to high single-digit volume growth is what you are expecting in terms of recovery going forward. Thanks very much for joining in and speaking with us and giving us your perspective in the consumption space. Short conversation there, but some important numbers coming through from JPM. We'll take a short break. We'll get you more in the markets. Lots of stocks in focus. We'll be back.
Satwik Green Energy Limited proposes an initial public offering of its equity shares. The 100% book build offer is being offered at a price band of rupees 442 to rupees 465 per equity share of face value of rupees 2 each. Offer opens on Friday, September 19th, 2025. Offer closes on Tuesday, September 23rd, 2025. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, the SEBI, the BRLMs, and the stock exchanges.
आइसलैंड ट्रिप के लिए स्वेटर वहीं से ले लेंगे ना? हाँ, क्या?
Welcome back. Well, a couple of stocks are showing some amount of momentum on the upside in the broader market. So just want to point out that MK Global Finance, in fact, is showing a good amount of momentum. That stock, in fact, should come up for you. It is in circuit today. So MK Global Finance, as you can see, is up around 20% at this point in time. The other stocks which are showing some amount of momentum is from the broader markets also. So we do have NetWeb, which is now up around 6% on the back of that order win. We do have Z Entertainment, which is showing a little bit of momentum today. Remember, it's not done anything for the year, but today that stock is up around 4%. And even Muthoot Finance, not too bad, up around 2.8% for that particular stock. We'll do one thing. We'll take a break and be back with more. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. Nifty is about 25,300 levels, almost in that flat line, inching towards the green side. Let's keep an eye out on that. We have shipping stocks that are also buzzing in trade today, whether you look at a Garden Reach Shipbuilders, Shipping Corporation of India, Cochin Shipyard, all these stocks in focus. A lot of announcement coming from the government side, and for Shipping Corporation of India, they've signed an MOU also with HPCL, BPCL and IOCL to build and operate vessels. So all these shipping names are something that we're keeping an eye out on. But recovery in the market is what we'll be keeping an eye out on. With that, we're going to wind down this edition of Halftime Report. Thank you so much for tuning in. Up next to Business Lunch.
देश Worrying global cues with US's fresh visa salvo is offset by optimism over a demand boost following GST cuts, keeping the market in a bind. IT and healthcare are the big drags, while utilities and realty notch gains. Trump's imposition of an additional $100,000 fee on new US H1B visa applications dents sentiment for IT stocks. Several Indian players provide updates indicating limited or no impact, but concerns on margin impact and growth linger. Prime Minister Modi tags the GST cuts as Bachat Utsav. Industry leaders too see growth getting a fillip across sectors like automobiles, consumer durables, agriculture, MSMEs, and of course, credit. India and US step up engagement on ties with Commerce Minister Piyush Goyal in America for trade talks, and External Affairs Minister S. Jaishankar set to meet US Secretary of State Marco Rubio later today. DIPAM Secretary Arunish Chawla expects to beat the divestment target for FY26. He adds that all major PSUs are part of the divestment framework, and 1 to 2 strategic divestments and listing of some PSU subsidiaries are on the cards. Well, hello and welcome to Business Lunch live from the CNBC TV18 Motilal Oswal studio. I'm Vamakshi Doria, and we're seeing a bit of recovery as far as the markets are concerned. The Nifty, was at the day's lowest point, was at 25,212. We've seen the Nifty now linger around that same mark, so near 100-point recovery is what the Nifty has posted. Apart from that, when we look at the broader end of the market, that has not been doing well because the advanced decline ratio is largely in favor of the declines. The Midcap index, of course, has now moved into the green. If you can see around 11 a.m., the advanced decline ratio lines crisscrossed. So far, it's almost 1:1, but the declines outnumbering the advances. The small cap index will also come up for you on the screen, and that is where the pain is. The mid cap end of the market, though, is doing quite well. The small cap index, as you can see, is down almost 79 points. Since the morning, that index has not seen any recovery so far. Now, in terms of sectors, what's actually pushing the Nifty lower is of course, the IT pack. Of course, we've seen some bit of recovery creep in there as well. Take a look at some stocks like LTI Mindtree, Persistent Systems. We've seen a near 2% recovery from the day's lowest point in these counters. But today is all about September 22. The new GST era has come into effect from today. Majority of goods and services will now be taxed at 5% and 18%. Meanwhile, ultra-luxury items will be taxed at 40%. Now, in a special address, Prime Minister Narendra Modi called the new reforms a festival of savings. He also said that it will accelerate India's growth story. Listen in.
ये रिफॉर्म भारत की ग्रोथ स्टोरी को एक्सेलरेट करेंगे, कारोबार को और आसान बनाएंगे, निवेश को और आकर्षक बनाएंगे और हर राज्य को विकास की दौड़ में बराबरी का साथी बनाएंगे.
Well, Union Home Minister Amit Shah, in an exclusive conversation with Network 18 Group Editor-in-Chief Rahul Joshi, said the GST 2.0 reforms will be remembered as one of the greatest in the history of the country. Here is what he had to say.
मैं मानता हूं ये बहुत बड़ा कदम है और इससे जनता का भरोसा बढ़ा है कि अगर हम टैक्स भरकर सरकार की नेट को बड़ा करते हैं तो सरकार टैक्स की कटौती कर फायदा जनता को ही पहुंचाएगी. और ये भरोसा आज़ादी से अब तक अदृश्य था. पहली बार वो दिखाई पड़ता है कि कोई भी सरकार अपने बढ़े हुए टैक्स को ये कहकर प्रोत्साहित करेगी कि भाई आप टैक्स भर रहे हो तो अब हम टैक्स कम करेंगे, तो ज़्यादा से ज़्यादा लोग टैक्स के नेट में भी आएंगे. मुझे विश्वास है इनकम भी कम नहीं होगी, इन्वेस्टमेंट बढ़ेगा, बाजार में एक प्रकार से तेजी भी आएगी और लोगों को सस्ता भी मिलेगा और यहाँ उत्पादन की गतिविधियाँ भी बढ़ेगी और देश की निकास भी बढ़ेगी.
Well, new GST rates have now kicked in and several auto companies expect bumper footfalls. Our colleague Abhimanyu joins us from Mahindra showroom in New Delhi with more details. Abhimanyu?
Navratri has begun and so has the festive season. The GST cut, which was implemented by the GST Council, has finally come into effect, and prices of all automobiles across India, across segments, have come down. In some cases, they have even been reduced by auto dealers and auto companies much beyond the relief which has been given to customers as far as the tax reduction is concerned. So there has been a significant cost reduction, price reduction as far as several vehicles across segments are concerned. And our companies, auto dealers, they are looking to cash in the sentiment within the aspirational middle class, within those people who currently either own two-wheelers or do not own any vehicle, who are trying to buy a small car. So that's the most price-sensitive segment which they are targeting. Obviously, as far as SUVs are concerned, they are also a part of the list, since there has been a significant cost reduction as far as price of SUVs is concerned. We are currently standing at a Mahindra showroom in New Delhi, where there has been a significant cost reduction which has been witnessed. Speaking about Mahindra Thar, the cost reduction has been around rupees 1.2 lakhs. For Mahindra XUV, the cost reduction has been between rupees 1.30 lakhs to rupees 1.70 lakhs. And for Mahindra Scorpio, it has been around rupees 1.70 lakhs. Now, auto dealerships, auto companies are expecting people to come out in huge numbers in the next few days, in the next few weeks, and have already kept an inventory of around 90 days as far as cashing in the festive season, the festive fervor is concerned. They're expecting bumper sales to the tune of double-digit rise in overall sales in the next few days and weeks. They are trying to cash in onto several festivals like Navratri, Dussehra, Diwali, Chhath Puja, and subsequently the festive season is expected to stretch right till the new year. So the festive fervor is expected to hit the markets, and not just in terms of footfalls, but also in terms of large purchases.
Absolutely, Abhimanyu. We'll be watching out for that. But take a short break then. We'll get you more news and updates on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC TV18. Let us now focus on the other big story of the day. The United States has raised the annual H1B visa fees to 1 lakh USD per applicant. Reema is here to tell us more. Reema?
Thanks so much for that. So IT stocks have been a bit edgy on the back of this $100,000 H1B visa fee hike. Let's get to the stock-specific impact. So a lot of companies, mid-cap companies, have intimated the exchanges about the potential impact. So outlining that, First Source, no impact. They've not sponsored any H1B visa. Coforge says only 25 new H1B visa petitions last year. Of that, 63 were approved. Cyient says only 6. Emphasis says 130 new H1B filings in 2025. Hexaware says we've been trying to bring down our dependence on H1B visa. Last year, there were no H1B visa applications filed by the company. Persistent hasn't put out a number, but they're saying we do not expect any significant impact on the operations of financials. But in a nutshell, what the numbers tell us is that companies have been reducing their dependence. Only a fraction of the overall employee base is sent to the US on the back of H1B visa, and therefore they believe the impact is not going to be manageable. From the large cap space, we haven't heard, but Bank of America, in its analysis, says Tech Mahindra will be most exposed. CLSA says LTI Mindtree Persistent could see the highest impact, while TCS could be the lowest at 1%. But on the whole, the EPS impact is seen in low single digits. So CLSA says not more than 6%, and that is assuming it's status quo, it's ceteris paribus. Everything continues as such, and the companies bear the entire burden. But that's not that's not a likelihood. In reality, the companies could look at sending fewer people on H1B visa, increasing the local talent hiring, increasing offshoring, increasing onshoring. So therefore, the actual impact could be a lot more limited.
All right. Thank you so much for bringing us all of those details, Reema. You've had a busy weekend. But meanwhile, a Financial Times report says that the United Kingdom is exploring proposals to abolish some visa fees for top global talents. British Prime Minister Keir Starmer's Global Talent Task Force is reportedly working on ideas to attract the world's best scientists, academics and digital experts to the country. Now, the report also says that the visa cost will be reduced to zero for those who have attended the world's top 5 universities or have won prestigious prizes. On that note, let's slip into a very short break, then we'll get you more news and updates on the other side, so stay tuned.
7 p.m.
Thanks for staying tuned into Business Lunch. Now, in conversation with CNBC TV18, Prime Minister's Economic Advisory Council Chairman Mahendra Dev outlines a 4-part plan to help Indian industry manage the impact of US tariffs. Sapna is here with all of those details. Sapna?
Well, we did have the good fortune to catch up with the chairman to the Economic Advisory Council to the Prime Minister, Professor S. Mahendra Dev. And of course, starting off first with the US tariffs, there is a fourfold strategy that India is following. We'll probably see the results in the coming weeks. That's one aspect. Second, of course, dwelling on the domestic economy, here the ESC-PM is extremely clear that 6.5% growth rate is achievable for the current financial year. India's growth rate is not going to be lower than that. H2 is going to be much better in terms of growth numbers. Third, of course, the Prime Minister is indeed focusing on the next generation reforms, mainly on deregulation and ease of doing business. There are two important government panels which are already underway. We'll have to wait and watch and see what comes out in terms of the final recommendations. Third, of course, in terms of the MPC, what can we expect in terms of interest rates going forward? Here, the ACPM probably feels that the full transmission of the earlier rate cuts have not really happened. So we'll have to wait and watch and see whether there's another rate cut at all by the MPC or not. Of course, that's a call to be taken by the MPC, of course. Last but not the least, also in terms of the discussion paper that has been put out by the Reserve Bank of India in terms of revisiting the inflation band, or rather the flexible inflation targeting framework. Well, here the ESC-PM is extremely clear. They think that the 4% mark should not be tinkered with at all. There should be a status quo as far as that framework is concerned.
All right, thank you, Sapna, for getting us all of those details. That's all we have in Business Lunch. But before we let you go, take a look at Dr. Reddy's as well as Nestle. Both of these counters have seen a fair bit of profit taking for now. You know, they're off almost 1% from the day's highest point. The Nifty has managed to slip further. Some recovery has been sold into. But that's all we have on this edition of Business Lunch. Don't go anywhere. Midcap Radar up next.
कम
Final 2 hours of the first trading day of the week. You're watching Midcap Radar. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormus Fatakia. With me is Vivek Iyer. Vivek, good afternoon. It's a quiet day for the markets. We've been in a very narrow range on the index despite the underperformance from the IT names. But the real action lies in the broader markets with a lot of these stock-specific moves.
Good afternoon, Hormus. You're absolutely right. So when we came into trade today, we actually anticipated quite a sharp cut, especially given the fact that the weightage of the IT within the Nifty is quite significant. But despite that, the other pockets of the market have actually held up quite strongly. And like you mentioned, if you look at the Nifty Midcap and the Nifty Small Cap Index, there has been significant recovery from the day's lowest points to actually ensure that there is a significant amount of improvement as far as the advanced decline ratio is concerned. What are the sectors that are doing quite well? The metal stocks are ones that are seeing significant buying action. So look at names like Hindustan Copper. That particular stock in the last couple of weeks has seen significant improvement and significant momentum. So that stock had almost 7% in the session today. And what's not doing so well? Well, look at the Nifty IT. Hormus, the entire IT pack, including the mid-cap IT names, names like LTIM, names like Emphasis, Persistent, Coforge, and even some of the smaller names, all of them have taken quite a bit of a knock in the session today.
And despite clarifying the fact that there is no material impact on their businesses, is the fact that they're still, be it large cap IT or be it mid cap IT, all of them trading with sharp cuts in today's session. But these are the headlines that we are tracking at 1:30 this afternoon. Worrying global cues with the US's fresh visa salvo is offset by optimism over a demand boost following the GST cuts keep the market in a bind. IT, healthcare and pharma are the big drags, while metals and realty notch some gains. The mid-caps move in line with the benchmarks.
Shares of IT stocks trade under pressure and are the top losers on the Nifty after the Trump administration raises H1B visa application fees to $100,000. Coforge, Persistence and Emphasis, among others, take a hit.
Volta shares are under pressure after muted second quarter commentary in an analyst meet. The company says margins will see an uptick from the fourth quarter as channel support will likely extend till Q3 of FY26.
Swiggy shares slip in trade following a downgrade from JM Financial to reduce from a hold rating, citing balance share concerns. The brokerage, however, raised its target price to 440 rupees versus 420 rupees earlier.
Hindustan Copper share have surged after the company signed an MOU with Oil India to collaborate on exploration and development of critical and strategic minerals, including copper. Additionally, on the 19th of September, the company and Jamshedpur District Commissioner executed a Rakha mining lease deed for over 20 years.
Well, it's the mid-cap end of the market that we are focused on, and some of the mid-cap stocks now losing a little bit of sheen from the day's highest point. Have a look at names like HAL, have a look at 361, some of the stocks from the F&O basket that are now trading under and with cuts. But it's a good time to welcome Ruchit Jain from Motilal Oswal Financial Services for a quick technical check on the market. Good afternoon, Ruchit. Thank you so much for joining us. Well, what do you make of the markets at current levels? Very tight range. Do you see it breaking out of the range?
Yeah, hi, very good afternoon. Well, if you look at the broader trend for the market, it has been positive over the last couple of weeks. But we believe that on the shorter time frame chart, the momentum readings are a bit overbought, and this could lead to some short-term consolidation or minor pullback moves in the index. But that does not change the broader trend. So we are advising our customers to focus more on a thematic or a sectoral approach where we can see that overall strength of the buying interest is quite there. So the trend for the market seems positive. 25,200, 25,180 is the range where a good support for Nifty is placed. And in case if you get any dip towards that range, that would be a good buying opportunity for the index. So for the index traders, buy on dip should be the strategy to get in. But yes, one who is very strong, one who is stock specific, then I think there are a lot of good opportunities if you pick the right sector and the right stocks even at current levels.
What about specific stocks, Ruchit?
Yeah, a couple of recommendations. One is the PSU banking theme that we are looking to play on the long side. After a consolidation of about 3 months, we have seen a good breakout in Nifty PSU Bank Index last week. Bank of Baroda within this basket is looking very positive, where the channel breakout has been seen earlier. Whenever the stock used to come around 250, that it was facing selling pressure. But finally, we have seen a breakout beyond this level. So keeping a stop loss below 242, short-term traders can look for buying opportunities in Bank of Baroda for potential targets around 267. And Grasim is another name that is looking very positive from a positional perspective. A high top, high bottom structure. I think after post the recent GST reforms announcement, the cement space has not yet seen that kind of up move which should have been. So the risk reward ratio is still favorable over there. So I think Grasim one can look for trading on the long side at current levels with stop loss below 2,800 for potential short-term targets around 3,050.
Okay, Ruchit, thank you so much for joining us, giving us a sense of your view on the market as well as your individual trading calls. Well, now on to a CNBC TV18 exclusive. PFRDA may soon allow pension money into commodities. First up on the list may be gold and silver. Let's listen in to PFRDA's chairman, Mr. S. Raman, explain the roadmap ahead.
There is a demand for commodities, and that is really a demand for gold and silver. I think that's important because it's a very good diversification. So from, I would say, more of a safety point of view rather than a return point of view. We have a system of an investment guideline which goes through a committee, and that committee is working on it. We have the benefit of another committee which has looked into the pool corpus, and therefore we've got some excellent recommendations from there. So I think we're putting it together, and we will come out with a more enlarged list of instruments that can be invested in too. The investment guidelines will probably happen, I would say 30, 45 days, something like that, because it's a process and then it goes to the board, and therefore it will take its... But the idea is to put it out quickly because, we would like the pension funds to be able to design schemes in a better way.
That was the PFRDA chairman in an exclusive conversation with CNBC TV18. Let's now go across to Yash to understand the operationalization of this said move. Yash.
Well, the said move would be quite unprecedented because never in the past have we had pensions funds trading in the commodities market. What we've been given to understand, in continuation to what the PFRDA chairman spoke about, is that the PFRDA's investment committee is likely to issue the guidelines for commodity derivatives trading for pension funds in about the next 10 days, which is in the current month itself. Once those guidelines have been submitted by the investment committee of PFRDA, those guidelines then will go to the board of PFRDA, which is scheduled to meet in the month of October, and that is when it is likely that the PFRDA board may approve investing or rather trading when it comes to commodity derivatives market. Now, once the board approves, allowing PFRDA or pension schemes to trade in commodity derivatives market, then would be new schemes which would be launched, which would come with the feature of, trading in commodity derivatives market, that being the underlying activity of those schemes and asking subscribers to subscribe to it. Also, important clarity, what we picked up is that PFRDA would not require any regulator's approval to start trading in commodity derivatives market like the SEBI or RBI. It can by its own self-approve and start those investments in commodity derivatives market. They would be starting with gold and silver, but would be studying other commodities as well as far as those investments are concerned.
Yash, thank you for those updates there. By the way, the index still is in a very narrow range though, 50 points lower for the index, but the real action, as we have been highlighting, lies in the broader markets. And which are those broader market movers? Vivek has walked across to the wall to tell us just that, Vivek.
Well, that's right. So look at the broader end of the markets. A significant recovery now again near the flat line. But individual stocks are the ones in focus. First on our list today is Borosil Renewables. After a while, this particular stock has perked up and significantly perked up higher by almost 10% on good volumes. So have a look at Garden Reach Shipbuilders, order win cheer coming in for that particular name. And along with that, some of the other shipbuilders too doing quite well in the session. Hindustan Copper last week, it did see significant up move in this particular name. An extension of an important mining lease ensuring that this stock higher by almost 6% today. Pyramid Enterprises is the top gainer as far as the mid-cap index is concerned. And data center play, if you could call it that, is Anantraj higher by another 6%. On the other hand, look at some of the laggards, and you cannot look past the entire IT pack. Have a look at all of the mid-cap IT names as well. Persistent, Zensar, Coforge, all of them under significant pressure, down anywhere over 3% up to 6-7% as well. Have a look at Swiggy. Now, this particular stock under pressure, an important downgrade coming in from JM Financial. They worry about balance sheet, and they also worry about the fact that the company may not have enough cash going forward. So Swiggy is the other stock on the radar that's under a bit of pressure today. Now, moving on, Voltas, have a look at this name. They had an analyst meet over the weekend. What basically transpired was that the management has indicated to the street that Q2 may be slightly muted given the extended monsoons, high inventory, down by 3%. And have a look at the pharma pack. All of these names under a bit of pressure today. Ipca Labs, Mankind, especially Glenmark Pharma within the F&O pack. That particular stock has seen significant selling pressure, especially in the last couple of trading sessions.
Indeed, Vivek, thank you for that, and can't, of course, also not take your eyes off these Adani Group names as well. And take a look at Adani Power, that's up 20. Adani Total Gas is up 18, and Adani Green Energy is up 9% now in today's trading session. Adani Power, of course, trading adjusted for its stock split, 18% higher for Adani Total Gas, and Adani Energy Solutions too, trading gains of around 6 to 6.5% as well. Take a short break. On the other side, Atul Tiwari, the Executive Director of India Industrials, Electric, Utilities and Infrastructure at JP Morgan, joins in on the other side.
Welcome back to Midcap Radar. Well, as promised, Atul Tiwari, Executive Director, India Industrials, Electric Utilities and Infrastructure from JP Morgan joins us now. Thank you so much, Atul, for joining us. Well, first up, today is the day in which you actually see the mega GST reforms come into effect. Now, while this is extremely positive news as far as the consumption sector is concerned, there are worries that this could take away from the pie that earlier industrial capex was enjoying. Your thoughts on this issue?
Yeah, so yes, those worries are there, but our view is that over medium term, the broader capex in India should be able to grow in line with nominal GDP at about 10%. And the reason is that the overall policy focus of government continues, on infrastructure creation. Post-COVID, for 2-3 years, we saw very strong government capex. In a couple of years, the capex grew even 18-20% year on year. I think that era is behind us for some time. However, 10% kind of growth should be achievable given the need to create infrastructure, some bit of demand creation that will happen because of these tax cuts as well as government policy focus. In addition to that, there are large parts of the capex which are driven by private sector balance sheet, in particular the power value chain capex, both on thermal power side, renewable side and transmission side, and that part of the capex, because it is being funded through private balance sheet, will remain intact. So overall, because of these factors, we think that about 10% kind of overall capex growth should be achievable over medium term.
Atul, good afternoon. Thank you for joining in. There is this general chatter on the street that funds from capex is now moving to consumption, considering the recent reforms that we have seen on the GST front. Does that also drive a little bit of concern with regards to the fact that this might lead to a prolonged period of underperformance, especially considering the fact that all of these names have run up significantly over the last year or two?
Yeah. So actually, if you look at the some of the near-term plan that the government has put out and some of the data that has come out. So for this year, central government's budgeted capex growth is about 10-11% already. Obviously, this is on a low base of last year. So the government's intent is to grow capex 10% this year. And actually, if you look at some of the early data that has come out so far in this financial year, in the first quarter, the capex growth has been quite strong at about 50% year on year, though on a low base because last year was an election year. So it does look like to us that while yes, there is some consumption stimulus and some money is being diverted to that, but broadly a 10% kind of capex growth over medium term should be achievable. In the year of transition, we could have a slightly lower growth than that, but we have to keep in mind that we are already 1 year into the slowdown. So this capex slowdown kind of started early next year. And given the developmental needs of the country, we think that over medium term we should get back to about 10% growth path.
Right. Atul, earlier this month on September 9th, there was a very interesting report from your stable stating that you're expecting capex growth to bottom out at 10%. In fact, there are quite a few stocks on which you are positive as well. Now, within this entire space, where are you most positive on? Where do you see exceptionally large order inflow? Especially, do you see some of the Saudi-related capex to continue for some of our players that are exposed to the Middle East?
Yeah, so broadly, from the top-down perspective, where we see the pockets of opportunity, in this year of consolidation and in this new era where capex grows at 10%. We think that the power-linked capex will continue to grow. So on the power generation side, on power transmission side, we will continue to see very strong activity, and the players which are exposed to that, will continue to benefit. In addition, yes, in Middle East, broadly, we are seeing, very strong capex activity. Till about last year, that activity, was concentrated in, countries like Saudi Arabia, but we have seen in the order inflows of some of the larger names where the activity has expanded beyond Saudi Arabia, and companies have got order from Qatar and Kuwait and other places as well. So we think that that's obviously an area of very strong activity in addition to the power capex in India on infrastructure side. And then obviously, we also see the defense capex in India as a structural growth story, obviously driven by government policy focus as well as government budget. So these three parts of the capex bucket will continue to grow for quite some time.
Understood that. Thank you so much for joining us. We hope to get you on the show to have a slightly longer chat than this time around. But thank you so much once again and for highlighting the key capex beneficiaries, especially as some worries spill over into this particular theme. But we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
I choose a world where we dream and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
This is Network 18 and you're watching CNBC TV18.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
I choose a world where we dream and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
विराज रायचन, रायचन स्टील।
स्टील? आपने वरदान स्टील का नाम सुना होगा।
Of course. आप मिस्टर वरदान के बेटे हैं?
नहीं।
छोटे भाई?
नहीं नहीं।
दामाद?
नहीं।
फिर?
शेयर होल्डर।
शेयर होल्डर?
सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड में मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
I choose a world where we dream and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
Seven p.m.
Welcome back. Grinding slightly lower is the index now, 60 points down on the Nifty, still holding on to that 25,250, 25,300 support zone, at least as of now. We are counting down to the final 90 minutes of the trading session, but there are plenty of movers in the broader markets, both on the upside and on the downside, that are grabbing eyeballs. But with that, we take your leave on this edition of Midcap Radar. From Vivek and me, thank you for watching, and more news and updates continue on the other side.
Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
This is Network 18 and you're watching CNBC TV18.
Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh. Mahindra Electric Origin SUVs.
Headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
Well, the markets, of course, under pressure. We're down about 70 odd points. We are starting closing bell a little early because we'll be shortly joined by a special guest on the program from the auto space, one of the leaders in the auto space. So that's a bit of a teaser. Otherwise, not very much happening. This is closing bell, half an hour early. We are coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Ekta. Guys, hi, afternoon.
Hi, Prashant. Hi, Nigel. Well, little bit of pressure which has actually seeped in, I'd say, for the broader markets especially. So the mid-caps are taking a little bit of a hit now as compared to earlier where it was largely resilient.
Well, that's right. The Midcap actually index has come in for some profit taking. Some of those stocks have come off the top. So the Midcap index is one indicator, and the other one is the crisscross lines. You know, we had way more number of stocks that are advancing than declining, and now that in fact has turned around. So you have way more number of stocks that are declining in comparison to the number of stocks advancing. I still say it's par for the course on the closing basis. 25,200 is what you want to hold on to.
Absolutely, and Friday was a negative day. Today is a negative day, but prior to that, you had a 1,000-point move in about 14 odd trading sessions. The banks index was up for 12 straight sessions. So the backdrop, the very near-term backdrop, has not been bad at all. Not very much by way of recovery in IT stocks, and of course that's been the talking point. A lot of hand-wringing anxiety over the weekend with regards to this entire H1B issue. No real recovery. 2.5%, 3%, 4% kind of cuts across the board. If you look at large cap IT stocks and actually even some of the mid-tier IT names as well. The other index which is actually selling off and a bit under pressure is the pharmaceutical space. So I think you've got a bit of cut there. So 1.33% of the Nifty Pharma index is what you have. On the upside, I mean, is there an index? Not very much. Energy as a space is up about 1%. The metals index is up about 3%, 0.75%. But one pack which is doing exceptionally well is the Adani pack. You look at the green, Total, Energy Solutions, Power, 8, 9, 10, 20% actually in the case of Adani Power. So some intel coming up on pretty much all these areas as we kind of go along. But I teased out the auto industry leader who's with us, and he's very much in the studios with us. Anish Shah is MD CEO, Mahindra & Mahindra. Anish, great to have you with us here. Thank you very much.
Pleasure being here as always.
You made the trek. It's a short trek, but you made it, so grateful.
Lots of rain today. It's always good.
What's been the feedback? And today is the day the Navratri festive period starts. GST cuts are effective. You're one of the leaders in the auto space, Anish, especially in the premium SUV segments, etc. So, and you announced the cut earlier, right? I mean, you passed it on. You didn't wait for this Monday. So overall, how's it adding up? How's it shaping up? Numbers would be great, or a feel would be great.
So the feel is very positive, obviously. And yes, you're right. We did pass the cuts on starting September 6th itself.
Indeed.
We saw this as a major positive from the government. And I'm going to focus more on the macro aspect, because to me, that is the most important part of this. Yes, we will see greater demand through the festival period. We will see greater demand going forward as well, just because of the price elasticity curve. But from a macro standpoint, the part that is most interesting from our standpoint is that this is a major change in sentiment as well. And one of the steps that we see that will take India to an 8 to 10% GDP growth annually for the next 20 years is what we believe.
Wow.
And there are a number of steps that have been taken before. These are all building blocks. And this is one of those building blocks, but an important one. And our investments are focused today is based on what we see of India's growth and the path towards what has been outlined as a very ambitious target of Viksit Bharat. But that's one that I do feel is highly achievable. And this is, in a sense, a proof point that takes us towards that.
So GST cut is the third of the measures, right? You had the income tax cut. I mean, the Reserve Bank has been on a...
That's right.
Hopefully, there's more easing coming. And of course, now you've got GST cuts. So you're saying this is... the finance minister alluded to this as well, that we've done enough and now the private sector should kind of start to... I mean, there should be no constraints. I think that was the phrase that was used to kind of go out, invest. And you have been in that sense.
Yes, and we have quadruple capacity, so yeah, we are playing our part on that front.
Growth solves most problems, right? In that sense, Anish. And you think this sets the stage for a durable recovery in growth on the consumption side, and of course, in turn, creating more capacity, creating the need for more capacities as well.
This clearly sets the stage because it is a significant step forward. It's not just about the reduction in rates; it's also about simplification.
Yes,
and that's one thing that's going to help tremendously.
So, Anish, hi, welcome to the show. Good to see you in the studio. Just narrowing in, however, on a little bit on the near term, because you said that you passed on the rate cuts on the 6th of September. It's the 22nd of September. What has demand been like in these couple of days?
So it's a Shraddh period, so typically demand is lower in the Shraddh period in any case. Overall, it's been positive.
If you had to compare it on a like-to-like basis?
I'd say definitely positive, but also remember that our vehicles have been selling like hotcakes for a long time. Right? So at the start of this year, we had promised mid to high teens growth in SUVs. Last year, we grew 20% in SUVs. So we have been growing really well.
Do you think you can exceed your guidance because of this?
We feel we can, but new guidance will have to wait till our next analyst meeting, by which time we will get a better sense of where things are going. But it is clearly positive. A price reduction will enhance demand, and from that standpoint, it is positive.
Well, good to have you in the studio, Mr. Shah. And everyone's quite optimistic that we are bracing for practically one of the best 30 to 45 days, because all the factors are aligned together, right? The end of Shraddh period, 1 month ahead of Diwali. You have the GST rationalization, income tax cuts. What more do you want? Perfect time. Do you think we are bracing for the best 30 days possibly in the history?
As I look at it, and I tell our businesses, every period should be the best ever, because that's the path we're going on. So
this is going to be better than the previous best.
So it has to be better than the previous best, and next year has to be better than this one. So we've in fact, we had some of our businesses talking about best ever quarter. So I said we should not say that, because every quarter has to be the best ever quarter.
Okay, and what about, y'all already, cut prices immediately and pushed it on to the customer. So they were lucky from September 6th, as you said. So you don't have any problem with regard to the inventory or any kind of hiccups on that front?
No hiccups on that front. I think that's all planned. Yes, some effort that went into it, but we are in good shape at this point.
Let's talk about it segment-wise then. On tractors itself, there has been some rationalization with regard to GST. But as this, tractor demand was reasonably strong. Every time we speak, you talk about how you're gaining market share, you're growing better than the industry. And the feedback was that on ground as well, demand was pretty okay. So how does this change things then?
This will again further enhance demand, because you've got a reduction in price. But that's also the reason why, Nigel, I look for this as more a long-term play rather than a short-term play.
Indeed.
It's much more than what will happen in the next 45 days or the next quarter or the next year. This is something that, in a sense, is a fundamental reset. And that allows for customers to get goods at a cheaper price. It allows for a simplification in the entire process, which is very important for all companies. And that's going to stand India in very good stead. Yes, I can't take away the short-term gains. There will be benefits that accrue to everyone in the short term. But that, in some ways, I think the long term is more important than the short term.
You made a very, very good point, Mr. Shah, because before Prashant takes away, the need of the hour was to push forward some kind of consumption boost, and that's been done. There were some rough edges as well on the GST front, which are gradually getting ironed out. And I think the path ahead is clearly pointing to much better times.
Absolutely. Anish, so again, I'm not, setting you up for giving us numbers. 1st of October we should expect when you post numbers for the month of September, it should be
again, I'm not getting into numbers month over month, because there are multiple factors that come in. Shraddh days this year are different from those days last year, and so on. So multiple factors that come in. But as I would look at it overall, it is a positive trend.
Okay. Which of your businesses, and the auto business is one, right? But you're exposed to other segments in the economy as well. And you said you see this as a bigger, broader macro kind of a positive. Where will this show up in your businesses within the group?
I would say across multiple businesses, because we would expect the farm business, as Nigel mentioned as well, to benefit from it. Tractor, farm equipment, and overall, as you have more money in pockets of consumers as a result of the savings they have from lower GST, that will go across multiple other categories. So as we think about our holidays business, and across the board, we would expect a lot more consumption. Our two-wheelers business will benefit a lot from it, Classic Legends, and that's one has also seen some benefit.
On the lending side, there's a fair bit of exposure to autos as well. I mean, I think there also perhaps is a bit of a pickup.
That's correct. That's correct. That will benefit the lending business as well. So, as you look at the economy, and we represent the economy largely, we should see benefits across all sectors.
Just wanted to actually narrow down on that compensation cess issue. Any clarity on that?
There isn't clarity on that as yet, but that's something we will deal with as we go on. These are some of the things that will happen in the short term, and not something that really worries us from that perspective.
Okay. All right. You did mention, obviously where we are going in terms of growth. What does that do in terms of launches for M&M? Are you preponing launches? Are you probably getting a little more aggressive in terms of launches? Where are we going to see those categories come through, and what do we expect?
So we have gotten very aggressive, not just in the recent past, but over the last few years in terms of launches that we've done. We've talked about our Vision platform recently, and that's one that is a platform that's fungible across multiple powertrains. We've revealed 4 different vehicles that we will launch with that. In addition, there will be more on the electric side. There will be other vehicles on the ICE side. So we have a very strong portfolio for launch over the next 3 to 5 years.
Anish, over the weekend, I don't think we can ignore the news flow, right? Maybe as someone put it, I was talking to James Sullivan of JP Morgan at the conference. He said, well, we have to wait and see if this is the first salvo and which hits services, in that sense, the entire visa bit. How do you think about this, Anish? And is there still negotiation? And the Commerce Minister is in the US, for example. Just your thoughts on how this pans out.
So if we look back about 5 or 6 years ago, there was a focus on H1B and talk about curtailing H1B. At that time, Tech Mahindra, our IT services firm, had actually pivoted to hiring a lot more local workers in the US with citizenship or green cards. And today, the vast majority of our workers in the US are citizens or green card holders. This is something that impacts all companies in the US, because many of them are hiring folks with H1B. It impacts all the tech companies in some ways even more. So this is not something that's related only to the Indian tech companies. It's a much, much bigger impact in that sense.
Actually, someone said it impacts Indians, but it impacts American companies more in that sense. Because
it impacts American companies a lot more. But let me give you a different perspective on this. Think about this from the Indian economy standpoint. The work has to be done somewhere. If the work is done in India and offshored, and now we have capabilities to do all of that, you're going to have more people stay in India, spend in India, and add to the Indian economy.
That's the hope, right? Absolutely, that's the hope. And hope we're able to provide that ecosystem here in India for that to happen. But, global...
That we can provide today.
Yeah.
Right? We have the capabilities to do that. And there are, many of our peer companies as well that have the capability to do that.
Global capability centers is something somebody was telling me. I mean, we are opening 2 new global capability centers every week in India. I mean, the larger ones are here. The smaller ones is what I'm talking about. But 2 every week. And maybe the trend accelerates because of all of this.
That's great, because the work has to be done somewhere, and we have the capability to do that work very well.
You briefly mentioned Classic Legends. Obviously, that's very, very small. But, and I went in the last 10 days and tested the BSA 650.
And what do you think of it?
I thought it was beautiful,
yes.
And I've been a loyalist to the other brand that sells the 650 odd. But there were very good offers out there, because the rate effective today goes up by 30 to 40,000 rupees, depending on which bike, the BSA 650 or even the ST 350. Did you all see a lot of pre-buying ahead of this hike on that 650 category, 350 category?
I'm not aware of the specific numbers there, so I can't comment on that. But what I can tell you is that the products that we've had have been outstanding. We've won a number of product awards, as well as the demand we're seeing for those products now is very good. So we've got a business today that is ready to compete and do very well against some established players in that market.
Just quickly, Anish, we've been talking about the domestic market. What about the international side of the business? You all are looking to enter the UK. What are the plans there? What is the timeline that we're expecting?
So we are first focusing on markets that are ones where we've had a presence for auto in particular, which is South Africa, Australia, Chile, and the markets around India. We will then look at the UK on the back of the trade agreement. So the FTA kicks in about 2 years from now, so our planning process will start in some time. We have very good products that are competing with the best in the world today, and that is what will take us forward. With some of our ICE products, we're doing very well today in South Africa and Australia, and have gotten meaningful market share gains in those markets as well. So our approach is consistent with everything we've done, which is pick certain areas, do very well in those areas, and then move on to the next space. In farm, it's a different set of countries because that's about Brazil, about Turkey, the US, where we've got a strong presence from a farm business standpoint. And those are the largest markets for tractors worldwide. And we continue to see good gains in market share and are well positioned in many of those markets.
Well, Mr. Shah, final question from my end before I let you go. In the government, the last few measures that they've taken, clearly they've done a bit of a pivot. The last few years were more focused on capex. Now there's a lot of focus on consumption. And you have said y'all are doing your bit with regard to capex spend as well. But do you think for an industry on the whole that capex spend, a little bit of a pullback could be a bit of a hurdle, and private capex now needs to come about and do the heavy lifting from here on, because the government has done its bit on the capex spends?
See, private capex is really a function of consumption. So as consumption increases,
they will have to.
Not just have to, we would want to, because that's what you need to be able to deliver the products to be able to grow. And the reason we've quadrupled our capacity in auto is because of the demand we saw. And as we continue to see demand, we'll continue to look at putting in more capacity. So it's really a function of consumption. So I think it plays very well in the current economic scenario.
We've got to get the cycle rolling, and then it becomes a positive, virtuous cycle. Anish, thank you very much for dropping by. It's always great speaking with you. Thank you.
Likewise. Thank you.
Thank you.
Thanks very much. Well, that is Anish Shah at Mahindra & Mahindra running us through, of course, what his group is going to see in terms of benefits across businesses, across a range of businesses. But of course, the larger point being that this is a macro positive, and it should enable, provide at least the visibility of more durable, longer run growth for India itself. So, higher growth, I think that's essentially what everyone is wanting here in markets and otherwise as well. Staying with auto, this is Rakesh Sharma, Executive Director at Bajaj Auto. We spoke with him earlier, and he put some numbers out as well. It's basically said in the 150cc segment, average benefit should be about 20,000 rupees for customers post this GST cut. Listen in.
There has been, in the last 1 week, a very healthy uptick for inquiries, and most people, particularly in the festive states, wait for the Navratris to begin so that they can take deliveries in the auspicious period. In addition, as part of the festive spirit, we've made it attractive, particularly for those people who are going to take finance, and we believe that this cut should see better penetration of financing. So there is a little bit of schemes on processing fees, etc., for customers who are going to be taking finance. So they will see an attractive offer over there. I think it should be buoyant times. I think most importantly, it will reverse the declining trend which the industry was facing. So I think that this reform is going to be quite a point of quite an inflection point, because it hopefully will reverse the negative year-to-date trend into a positive one as we go forward, not just in the season, but hopefully beyond the festive season in Q4 as well. Year started, all of us were expecting around 5 to 6% growth, because FY25 had closed at 6%, but slightly unexpectedly, for reasons of inflation, caution in the financing segment, we found that the industry actually degrew. And that is exactly what I said. But because of this change, the substantial benefit which the government has passed on to the customer, both in terms of both quantitatively and qualitatively, I think it will push the industry to reverse the negative trend and get a positive zone.
I choose a world where we dream, and the limit is the sky. And this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a decor brand. Live consciously.
विराज रायचन, रायचन स्टील।
स्टील? आपने वरदान स्टील का नाम सुना होगा?
ऑफ कोर्स। आप मिस्टर वरदान के बेटे हैं?
नहीं।
छोटे भाई?
नहीं।
दामाद?
नहीं।
फिर?
शेयर होल्डर।
शेयर होल्डर?
सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Welcome back. Well, for the Bank Nifty, it's showing a little bit of green right now, so nothing really to write home about. It's just about higher by around 15 odd points. Separately, just want to point out that it is a couple of these pharma stocks. So the Nifty Pharma Index itself is down around 1.2%. But if you look at a couple of these broader market stocks, Sai Life Sciences, for example, that CDMO player is down around 4 odd percent at this point. Granules India is down around 3.5 odd percent. Aarti Pharma is the other one, which is showing some amount of downside. And even Piramal Pharma, in fact, a couple of them, the commonality is that a couple of them are CDMO companies. So let's see, maybe there's some amount of profit booking coming in specifically within that space. But let's now focus on the other big story of the day. The United States has raised the annual H1B visa fees to $1 lakh US dollars per applicant. Rima has been following the story the entire weekend. She's here with more. Rima.
Thanks so much for that. So IT stocks have been a bit edgy on the back of this $100,000 H1B visa fee hike. Let's get to the stock-specific impact. So a lot of companies, mid-cap companies, have intimated the exchanges about the potential impact. So outlining that, First Source, no impact. They've not sponsored any H1B visa. Coforge says only 25 new H1B visa petitions last year. Of that, 63 were approved. Cyient says only 6. Emphasis says 130 new H1B filings in 2025. Hexaware says we've been trying to bring down our dependence on H1B visa. Last year, there were no H1B visa applications filed by the company. Persistent hasn't put out a number, but they're saying we do not expect any significant impact on the operations of financials. But in a nutshell, what the numbers tell us is that companies have been reducing their dependence. Only a fraction of the overall employee base is sent to the US on the back of H1B visa, and therefore they believe the impact is not going to be manageable. From the large cap space, we haven't heard, but Bank of America, in its analysis, says Tech Mahindra will be most exposed. CLSA says LTI Mindtree Persistent could see the highest impact, while TCS could be the lowest at 1%. But on the whole, the EPS impact is seen in low single digits. So CLSA says not more than 6%, and that is assuming it's status quo, it's ceteris paribus. Everything continues as such, and the companies bear the entire burden. But that's not that's not a likelihood. In reality, the companies could look at sending fewer people on H1B visa, increasing the local talent hiring, increasing offshoring, increasing onshoring. So therefore, the actual impact could be a lot more limited.
Thanks a lot for that, Rima. Well, in fact, earlier we spoke to Vikas Jain, CFO of Hexaware Tech, and Mr. Ganesh Natarajan, the former CEO of Zensar Technologies, to discuss the impact of H1B visa order. What would it have in terms of company as well as the industry? Let's listen in to what they had to tell us.
$100,000 per visa is going to make the overall financials not stack up. I think what's going to happen from an industry perspective, everyone is trying to understand the impact of it, but my take is the companies will impose immediate travel restrictions, and it's going to be something like what we saw immediately post-pandemic, where there is going to be an immediate travel ban. Companies are going to urge US-based employees not to leave the country and advising new employees to avoid travel until there is more clarity. In the medium term, I definitely see that deal decisions may take longer to close as companies will evaluate the implications of this order, both from where to deliver from and the commercial implications.
Clearly, there will be a dampening effect on that. But will it affect the mid-tier and the large tier? As you already said, and all your commentary has already revealed that there's not too much of impact. But certainly for small companies which are relying on sending a bunch of people to the US, there will be an impact. So I think not very negative, but I would say certainly there will be some impact. Yes, there could be some projects which definitely need proximity to the customer, which might get postponed or even cancelled. So I would not say there will be no impact. There will be some changes to client directions in terms of how they do it.
All right. Well, on that note, we'll need to take a short break, but more market talk, lots more stocks on the other side. Stay tuned.
Welcome back. Well, the markets have come in for a fresh bout of selling, actually. And the problem this time around is the big boy Reliance Industries. Pull up the intraday chart. That's taken a bit of a leg down. And when that heavyweight moves down, that's what's taken the markets a little bit lower as we speak. The Nifty Bank as well, that was doing a relative outperformance. That slipped a little bit. So keep an eye out on that one. And the other one is Asian Paints, that I remember was trading in the green. That's moved into the red as well. Not a large weight, but that as well, moving to the low point of the day. Gives you a bit of an uncomfortable feeling. But let's see, we're still holding on to the 25,200 mark. By the end of today, you'll want us to be substantially off that mark. Midesh Thakur is back with us. Midesh, last few minutes, some kind of profit taking is what we're seeing on the index. That 25,500 mark clearly is a bit of a resistance mark. But on the downside, at what level would you be looking to chip in, or do you think this market wants to correct a little bit more?
So I think, one, we had the bounce back during the day and kind of got sold into. That's, for me, not a very positive sign, because we did hit that 25,250 odd zone, then bounce back from there. Then again back to the near the day's low, which means that there's a good chance that we might see 25,150, 140 zones being tested. So wait it out in case you want to get into long side of the trade, so on the index. But on stock side, I have a buy call on NTPC. It's a conditional buy. It's trying to break on the upside. So buy about 341 with a stop at 337.5. Look for target of around 349 to about 350. And one sell call, that's Voltas, which is a sell with a stop just about 1391 for a target of around 1330.
Got it. Okay, all right. Thanks a lot, Midesh, for joining in. We'll keep coming back to you as the show progresses. Deepan Mehta, Director at Elixir Equities, joins us on the show. Hi, Deepan. Good to see you. What's the view on the tech stocks? Clearly that's the problem pocket of the market. Most of the notes suggest that it's a mildly negative to a neutral impact on tech companies. But yet that index is down closer around 3%. Do you think it's presenting a buying opportunity, or do you think there's too much uncertainty? No growth, you don't know what Trump's going to do next, and still spends have to pick up. Your take?
Rajat, good afternoon, and thank you for having me on your show. As if the problems weren't enough for the tech industry. And now this one more salvo has been fired by President Trump. And, it opens a Pandora's box, because who knows, this can, certainly be including even existing visas or even renewals. Renewals anyway are covered. And all right, the companies are putting up a brave face saying that they're not going to be impacted, and, the marginal effect is there on the financials. But one thought that comes to my mind is that certainly the flexibility of these IT companies does get impacted. And especially when you want to start new projects, then offshore first has to be on-site and then offshore. So that may cause some disturbances or some challenges over there. But broadly, I think it's not great for the IT industry, and certainly a big sentiment dampener from an investor's perspective. And yet there is no clarity on when the revenues will start to pick up. I still feel the entire IT industry, the large cap ones, most of mid cap, are in a secular slowdown, slow growth zone, and there's nothing I can visualize or imagine which will take them out of it also.
Nipan, hi, welcome to the show. Well, a lot of the pharma stocks are lower today. Is the market sensing that if they acted a little bit on IT, maybe pharmaceuticals is next, the CDMO plays are maybe under threat?
Yeah, I think so. That also could be playing on the minds. But, I'm not that pessimistic on CDMO companies. They will be able to manage and pass on because they're basically low volume, high value products. And they've got certain greater dynamics in terms of China plus one, and dependencies also are higher. So I don't think that CDMO per se may get impacted. But yeah, I think pure generic companies, who knows? I mean, this was the boat or the blue, was it not? I mean, and year through the president has been saying that he's going to impose customs duty tariffs on pharma products. So I think it's an ongoing saga, and I don't think there's any end to it. Investors are just kind of losing patience and avoiding everything which has got export revenues. Better to focus on Indian companies. We've got a fabulous GST cut in play. I saw the interview of Mr. Anisha. He's sounding so optimistic and positive, and they have their fingers in so many pies. So I think investors will move away from export-oriented businesses and look for good stories within the India play.
By the way, market breadth has completely become quite poor. So 1,850 stocks on the NSE are lower and about 1,200 stocks are higher. So that's not all that great at this point in time. Deepan, one name we kind of sort of don't talk about very much, but which has been buzzing for 2 days in a row, the Adani Group. Look at Adani Power, almost I think what 35-40% in two sessions flat. There was a Morgan initiation I think on Friday. And the story generally has been whether there'll be diversification in shareholding with more institutions participating, etc. Any thoughts and anything you track your own?
Yeah, Prashant, good afternoon. I think certainly this SEBI giving them a clean sheet has improved the sentiment in Adani Group companies and institutional investors, domestic and foreign. This may be one of the criteria for investing in a company. And now that uncertainty is done with, certainly they can attract more institutional flows. Adani Power, I think, also benefits from amongst the cheaper valuations as compared to some of the other Adani Group companies. And overall, I think there is certainly an improvement in the sentiment for power companies which are producing power from the traditional sources, be it coal or thermal. The general impression now is that both will coexist, and you need to invest also in the thermal power plants. And Adani Power, from that point of view, I think is one of the largest players over there. The biggest asset, over there in Gujarat, they have managed to turn it around as well. So I think sentimentally better, and valuation-wise, it is attractive compared to some of the other Adani Group companies. But as a measure of disclosure, we're very positive on Adani Port and SEZ, and we do feel that some of the new acquisitions will start contribute meaningfully going ahead also. And as and when trade picks up, these are great operating businesses, and they can certainly report good revenues and profits going forward.
The company, there was positive news on it today as well.
Yeah, you're right. I think it's a company we've kind of missed out. I wish we had bought it earlier. But, it's in a nice sweet spot. And, their order book position is certainly swelling. They're amongst the few producers of these servers which are in a lot of demand. And they've got great track record as well. A lot of awards also in terms of supercomputer that they have produced. So, and the company been around for a long, long time, invested a lot in R&D. This is what Indian tech companies have to do. This network certainly is a perfect example of that. And since there are very few of this, there's a scarcity of stock, which is why this is trading at some P multiple, I think 130 trailing 12 month. I don't know, I've lost count also. But look, we should be patient over here. I've seen many times that these P multiples, they tend to compress because of higher earnings. So give it some time. I think when it comes into some reasonable level, then certainly one could look at it. But right now, I think a lot of the positives have got priced in. No point getting onto a running train like this.
Okay, all right. Deepan, stay with us. Let's hop across to Nimesh. She's here to tell us that Standard Brokerage report. Nimesh, take it away.
Hi, Nigel. Today's Standard was an insurance companies. JP Morgan has today put out a note and they've upgraded a couple of those names. But the first name is HDFC Life. They've upgraded the stock to overweight from neutral, and they've raised the target price sharply to 980 versus 750 earlier. The other name is GIC. There they've upgraded the stock. It's technically a double upgrade from underweight to overweight. And on that stock, they've raised the target price to 480 now versus the earlier target price of 197. LIC remains the top pick in the insurance names, and there they have a target price of 11,052. Now, for the sector, JP Morgan believes that the compounding momentum is likely to persist. We saw the similar pattern in the last 5 years, and that's going to continue over the next few years as well. And that will underpin further balance sheet spending for most of these insurance names. They are forecasting a 15% new business value growth for the life insurance businesses and nearly 12% book value growth for the non-life companies in the next 3 years. So that's the kind of growth they're going to witness. For the very near-term catalyst, JP Morgan says that any clarity on the GST-related tax products strategies could be a very, very short-term catalyst for these companies to outperform from here on. So a big upgrade, especially on HDFC Life, which is almost at an all-time high, and on GIC, a technical double upgrade to an overweight from underweight, with sharply target price raised to 480.
Okay, all right, Nimesh. Thanks very much for that. So that's Dipan. Coming back to you, what's your sense in terms of a couple of these auto stocks? I was just reading a report by JP Morgan. They've upgraded the auto sector to neutral. We had Anish Shah just from M&M, talk about how he's extremely bullish in terms of the longer-term prospects of the auto space. What's your sense? Would you be a buyer at current levels?
Yeah, I would be overweight, certainly auto, and we are also as a measure of disclosure. And in our analysis, I think Hero MotoCorp and Maruti, of course, instantly benefit because they're entry-level players, and price-sensitive sections will certainly look at their products. But longer term, I think M&M and Eicher Motor clearly remain our favorites, but definitely I think there's a good trading rally. By trading, I think 3 to 6 month type of an investment horizon, if you have in Hero MotoCorp and Maruti, they may report good numbers. Not September, but definitely December quarter numbers, which come in Jan, may be quite impressive. And a lot of operating leverage will come into play. Material costs are generally stable. So I think that these two companies, good trading rallies next 3 to 4 months. But core holdings of ours, as a measure of disclosure, are in M&M and Eicher, which are on a fabulous run.
Absolutely. Just a quick, Deepan, stay on. I want to just play out this one soundbite, and I had the opportunity to interview the PFRD, that is the Pension Fund Regulatory Authority Chairman. And we, of course, spoke about a variety of things, but this is directly related to one name, which is MCX, and I wanted your thoughts there. So the PFRD chairman essentially saying that pension funds have come to them, asking them whether the regulator is going to allow them to invest pension money into commodities. Well, they said, well, perhaps it is on the agenda, and it should move forward in the next 35 to 45 days. Gold and silver are two commodities that they're looking at first up. Listen in.
There is a demand for commodities, and that is really a demand for gold and silver. I think that's important because it's a very good diversification. So from, I would say, more of a safety point of view rather than a return point of view. We have a system of an investment guideline which goes through a committee, and that committee is working on it. We have the benefit of another committee which has looked into the pool corpus, and therefore we've got some excellent recommendations from there. So I think we're putting it together, and we will come out with a more enlarged list of instruments that can be invested in too. The investment guidelines will probably happen, I would say 30, 45 days, something like that, because it's a process, and then it goes to the board, and therefore it will take its... But the idea is to put it out quickly, because, we would like the pension funds to be able to design schemes in a better way.
With MCX, there's, of course, that proposal of FPIs, allowing FPIs. But this is, of course, pension local money, which doesn't need any other regulatory approval. It is up to the PFRDA, as you heard from the chairman there. Deepan, any thoughts? MCX?
Yeah, Prashant, first a disclosure. So we have invested in MCX for our clients and our PMS schemes as well. And certainly, I think it's the best exchange to be invested in at this point of time. And their journey on the option side has just about started, and that can certainly grow very well. A lot of options traders on BSE and NSE are now taking higher and higher positions on the MCX as well. And look, whenever your main products, the main counter, there's a bull market like we are seeing in gold, then the exchange certainly is going to benefit. We have seen that in BSE, NSE, so why not in MCX as well? And valuation still reasonable, around 66 times or so. So I would say that amongst all the kind of exchanges, this is one of the best to be invested in. But look, our views are biased because we have an investment position. But nonetheless, it's a great operating leverage play. And a lot of the problems, technology problems, platform problems, association with financial technology is all behind them. So I think prospects look good.
Okay, all right. Well, Deepan, we appreciate you joining in and giving us your view on a lot of those stocks. Have a good evening, and we'll chat up with you as the week progresses. By the way, before we slip into that break, take a look at the Nifty. The Nifty actually broke the 25,200 mark with ease. We moved lower, and the chart is telling you the picture. Reliance Industries is a stock that came in for profit taking. Another big name is Grasim. That as well has moved to the low point of the day. So let's get the intraday chart out there. Pull up the metal index actually, because that's been doing very, very well. There appears someone is taking some good money off the table. The metal index as well, from being a relative outperformer, has now slipped. You have JSW Steel that's moved to the low point of the day. Tata Steel as well has slipped a little bit. So I think we should get both those two stocks up for you. And even the auto pack, whether you look at, let's pull up the auto index. Bajaj Auto, I recall the stock was up more than 2%. That as well, has slipped. Just take a look at the auto index. So there is a bout of profit taking that we are seeing on the index itself. And for the time being, the Nifty is holding below the 25,200 odd mark. We'll take that break. We come back. Amit Gupta is waiting for us on the other side.
Okay, welcome back. Let's get you and put the spotlight on the top movers in the market right now. Market's made a move, right? But on the downside, that is. Although, that move is reversing a little bit, is it? Yes. I think it is, right? The low has been made at 25,150 and we've bounced about 40 points off that, 25,190 already. So this is, of course, a developing story with about 40 minutes to close. Hormuz is standing by with a spotlight on those movers. Hormuz, over to you.
Markets may have fallen to the lows of the day, but what has not fallen are a lot of these broader market names, and they're moving on extremely high volumes. Now take a look at John Cockerell India. This is nearing a 20% circuit in today's sessions, the fifth straight day of gains for this stock. And in the last 5 sessions, the stock has gone up 40% and trading at a 52-week high, maybe even a record high in today's session. And today's volumes on the stock are the highest going all the way back to October of 2007, and we have had almost well over 2 lakh shares that have traded in today's session. The 20-day average is only 7,500, and since the start of 2020 the stock has gone up almost 6x in value. So that's John Cockerell for you. Chemcon Specialty is the other one, is the biggest single day gain and the highest volumes that you've seen since August of 22. It snapped a 5-day losing streak today with this 13% advance, and today's session we've seen well over 18.5 lakh shares being traded compared to the 20-day average of less than a lakh in today's trade. The stock has turned positive for 2025 but has a dubious distinction of never having delivered positive annual returns ever since it listed back in 2020, and even after this move the stock remains well below its IPO price of 340. The other one on the list today is Tinna Rubber and Infra. The stock has seen its biggest single-day gain since Jan of 24. The volumes are the highest since Jan of 22. And today's session, we have had over 5 lakh shares being traded. And look at the 20-day average here. The 20-day average is only 15,000 shares. And the stock is down 30% so far this year. But take a look at the previous year returns. And starting 2020, it's been 4 years. In 2021, the stock was up over 5x. And in the rest of the remaining years, the stock has almost tripled every single year in value. And even in the funds bit, Bank of India small cap fund has close to 1.5% worth of stake in this company. And lastly, a PSU name on the list today, State Trading Corporation. They had the biggest single day gain and volume since July last year. We've had 25 lakh shares being traded today. The 20-day average is just 10,000 shares, and it's broken above all key moving averages. But mind you, very little float in the market because the government stake is at 90%. So a lot of these movers in the broader markets continuing to move on very, very strong volumes.
Well, interesting names as always. Tinna Rubber is 2021 was basically, the low was $15 and it closed at about 87, and so it's a 10-bagger in what, 3 years, 3.5 years. So that's and of course today is coming up with very, very large volumes, as Hormuz pointed out. So that's the overall kind of picture on a few of these very, very big moves. Amit Gupta is with us, Head of Equities, PMS, Motilal Oswal Private Wealth. Amit, good to have you here. Thank you very much for joining us. So direction from here, Amit, before we get into individual names, etc. You've had a nice move from 24,400 lows to about 25,400, giving back some now. What is your sense near term?
I think one parameter, if you look at, in the last 1 year, we have underperformed the emerging markets. So we have not gone anywhere. In fact, we were more consolidating, just flat to positive, and the emerging markets have given in excess of 20% of returns. In fact, in some cases, it is 40-45% returns also. So if you look at historically, whenever Nifty premium vis-a-vis MSCI emerging market premium comes down to close to 50%, it becomes a good buy. And so whenever it goes to 90% around, then it is definitely in excess. So the FIIs who are looking to putting money in emerging markets when the dollar is weak, then they find opportunities in other markets. But when it has come down to 50%, considering our inherent strength, I think it becomes a good market. So my sense is it may be consolidating, but you will see more ideas coming in. And why it is consolidating? Because the earnings growth somehow is not growing. I mean, you can expect banks to, not to have too much of profitability growth in financial year 26, because the NIMS compression actually is continuously there. This quarter also will be there. Last quarter may be relatively better, and then you will see some upside movement also coming up. So technology already under pressure. So for 50-55% market is actually deprived of some growth in earnings right now. So index may be consolidating, but opportunities are coming in stock specific. I think there we need to focus more.
Okay. Amit, hi, welcome to the show. Any specific sectors or stocks that you can talk about when you're talking about these opportunities?
See, right now I heard you were talking about MCX from the commodity space because gold has moved up and options volumes picking up. So that is, if you look at in the commodity space only, because dollar has come down, right? So there has been an interest rate cut situation coming up in US, maybe 3 rate cuts, one already there and then coming 2 more maybe there. So in that case, I think commodities to some extent can start seeing a surge. But one of those commodities which I think maybe a next good investment is copper. Because if you see it is definitely a high deficit in copper, which is going to be there going forward. In fact, there is a United Nations Trade Union, estimate that in coming decade, more than 80 copper mines are required, and it takes 15 to 25 years for these mines to get operational. So you can expect that some more severe deficit maybe there, prices can remain firm, and it is needed everywhere. I mean, you look at from power transmission to electric vehicles, to defense, to electronics, renewables, you need it everywhere. India is doing reforms in all these places. So that's why India, I think, will start looking at more mining in this space. Obviously, critical minerals is already there on the radar of the government. So some companies like Hindustan Copper and all, which have already declared triple capex actually here, with the surge in copper, obviously the benefit will come there. If you look at electric vehicles and compare with the traditional vehicles, almost 4 times extra copper requirement is there in those vehicles. So I think a good trend building up in that space. And despite this volatility, because they don't have any major weight in the index, they are not part of index, I think they can be good movers.
Hindustan Copper, Amit, it's a double-edged sword at times, right? Because all these fundamentals that you stated, the people are talking about it as well. The stock, though, suddenly whipsawed investors. 350 rupees became 250 rupees. And then, in fact, now it's pulling back a little bit. So you think it's good even after the recent run? I think it's ballpark close to 300 rupees on Hindustan Copper.
So I think you need to look at those segments which have remained underperformer for quite some time now. Valuations have become better, and they are looking for some triggers. And I think this is where these triggers are coming in. So my sense is dollar depreciating, definitely it will bring some triggers to the commodity space. And if you look at from the China perspective also, so they have already seen excessive production in metals and chemicals before, but now we have seen some sign of production cuts because there is the demand, the domestic demand is not growing so high. So in that case, some reversals actually definitely are going to come. And I think copper is coming out as a structural story going forward. So this is where I think government, which is pushed towards the wall right now for doing reforms, this is one of the reform that they are definitely looking at to look at more critical minerals mining now.
Got your view on that, Amit. Let's talk about the star of the last week, Urban Company. You use it, probably you do. I as well do use it. So the use case scenario is very, very good. But now shareholders as well are impressed. The way the stock, it's given a big, big return. But at times we see that when the float is limited, there is a lock-in as well that's taking place. And though the runway is good, sometimes investors, they tend to get into this IPO euphoria and they get stuck at times. So do you think bulk of the good news is already in the price just for the time being? The stock today itself, I think it's down close to around 5 to 6% from the top.
So I think when you look at the tech platforms, it is getting very difficult to gauge the valuations because the kind of scale up they are doing now. You look at across the industries. I mean, even if you look at Paytm, if you look at even PV FinTech or the Eternals of the world, we are seeing actually that they are continuously gaining strength to strength. And my sense is profitability is going to be better going forward. So in this particular company, if you see maybe some consolidation, possible. But if you look at the peers in the same domain, how many peers you can count actually here? So which is moving into the homes and doing all this kind of work. So I think it's a good business. One of the first mover advantage they have in this segment, and that's why that particular scenario is building up. But yes, I think we are not focused on this company right now. From the immediate perspective, we are focused more on the Eternals of the world, where we feel that the 90-80% of PAT compounding is going to happen, because whatever capex they have to do, they have already done it recently. From 1,300 dark stores, they have already moved to 2,000. They are moving to 2,000 dark stores by December 2025. And then the profit margin of 2.5%. We feel that going forward, it may be 4 to 5% range. So the current profitability of around 500-600 crores, it can move to 2,500 crores plus. And I think this is where that is where we are focusing more, where the visibility is higher.
All right, Amit, we're going to leave it on that note. Thanks very much for joining in and speaking with us. Let's now cut across to Shireen, who is with the Chief Economic Advisor. Let's cut across.
given my cautious nature, I will simply say that I am more comfortable now that the final number, which we have given a range, 6.3 to 6.8% in real terms, I'm more comfortable now in saying that we will be tending towards the upper end of this range rather than the lower end of this range, considering what's happening on the external front. So that is the extent to which I am prepared to sound more relaxed and confident at this point. But once second quarter number comes, then we will revisit the estimates.
No, we'll take that, the higher end of that band that you had laid out in the economic survey. But if we could just understand the stimulus provided by both the income tax cuts as well as the GST benefits. The Prime Minister gave a number of 2.5 lakh crore rupees when he addressed the nation yesterday. What's the estimate that you're working with? Because I'm sure that that will go into the budget math as well.
No, I think his numbers are quite appropriate, taking into account both the direct and the indirect taxes, because especially focusing on the indirect tax cut, GST 2.0, it's a combination of three components. One is the reduction in rates from, many categories going from 18 to 5 and the 12 becoming 5, etc. That is one major chunk. The second chunk is the withdrawal of the compensation cess. These two are very positive to the households. The small minus is the one where few categories where the rate goes from 28 to 40. So the final tax savings is the first two components minus the third component, and that number will be upwards of 1 lakh crore. And then if you really assume a marginal propensity to consume, as they call it, MPC in the economist jargon, which basically means depending on how much households consume, then it leads to further income growth, and so 2-3 rounds of multiplier effect, then the total impact on the economy will be even more than 2.5 lakh crores. So I think what the Honorable Prime Minister said was purely the static estimate of the tax saved for the households. But the impact on the economy can be bigger. But of course, we know that there are other uncertainties and other factors which may dilute some of this translation of the savings into aggregate demand or GDP growth, as we call it, but the total impact is of this order of magnitude between the direct tax relief and the indirect tax relief put together.
I'll come to the uncertainties that you alluded to in just a second, but I just want to continue with the GST conversation and talk about the impact on states and state finances, because many states came out and said that they were concerned about the revenue impact that they would have to face. As you look at how things are panning out, and we've just seen the CAG numbers also come in as far as state revenues are concerned, what's your own indication, considering the fact that there is no longer any compensation cess?
So, look, I mean, in fact, former RBI Governor C. Rangarajan and Mr. Shanmugam, former Finance Secretary of Tamil Nadu government, wrote an article before the GST Council met about 3 weeks ago as to how well states have done with GST. And they particularly pointed out that the producing states, which were concerned about GST impacting them adversely, actually have ended up doing much better. So that's one. The second point I would like to make is GST rate, the revenue neutral rate, which was around 15% when GST came into being, actually has been coming down even before this happened. So by last year, it was down to 11% something.
Yes.
So there's a 4%. Every time the revenue neutral rate or the effective GST rate came down, but the annual average collection actually kept going higher and higher. So you already have a track record where the reduction in the GST rate, effective GST rate, did not result in decline in GST revenues. But revenues were having a step-up function every year. And this happened even in 2019, before the election, sometime in February, March or April, I don't know the exact month, when the GST significant reliefs were announced, there was a concern that it would lead to a decline in revenue. But immediately after the elections, the monthly numbers picked up within no time. So these two examples, I think, give us encouragement that the volume growth will make up for the static calculation that, as the rate drops, the revenue collections will drop because the volumes will go up. And the last point I want to make is, last year I wrote a paper co-authored with the Joint Secretary in the GST Council. We both wrote saying that whenever UPI transactions they pick up, they have a very high correlation with GST revenues. And UPI transactions are growing,
record highs.
Growing at 20 to 30% per annum year on year every month. So the rise in UPI transaction is actually a very good harbinger of GST revenues continuing to rise, and with the rate cut, the volume effect will dominate. So we shouldn't be overly concerned because the track record is there. Rate reductions have led to more formalization rather than less formalization, and that means more revenues.
That means more revenues,
more
and
transactions,
hence, more transactions, and hence you believe states have little reason to be concerned at this point in time. Which brings me to the question about the government's own fiscal math. We are, of course, getting into the budget-making exercise. Do you believe that this will have any impact as far as the government's own fiscal math is concerned?
I think we are confident that the final number will be 4.4% of GDP, which is the gross fiscal deficit. We have had good non-tax revenue growth, and overall revenue growth is on track in comparison to last year's numbers. And we feel that the festival season will last all the way until the end of the year because of successive, the Diwali festival spilling over towards Christmas and New Year, etc. So we are confident that the fiscal math will hold up very well for the current financial year.
Okay, confident that the fiscal math is going to hold up. That's the chief economic advisor in conversation with Shireen, and we'll keep getting you excerpts of that particular conversation. Well, just a quick word on the markets. It's been a little topsy-turvy. There's been a little bit of a recovery from the day's low as well. So 25,198 or 200 odd levels is where we're at. So we bounced back around 50 points from the day's low. But nonetheless, time now to go across to Nimesh. He's here with us to tell us about his usual D Street chatter and what he's picking up today. Nimesh.
Hi, Ekta. So now a down day, so to speak, but I would say it's more of a day for consolidation because the large part of the drag has come from the IT names. Despite a lot of companies saying that there is not much impact, the IT index is down 3%, individual stocks are down 3 to 5%. So there is clearly a bit of impact on the IT stocks today. Overall, from a flow perspective, again, it's a mixed day of trade, but I understand there is a bit of buying interest in select large cap names and the PSU names as well. For PSUs in particular, I've been saying for a while now that you are going to see a bit of short covering rally in many of those PSU names. That's standing out in some of the names today. So PSU is a combination of buying as well as short covering, but broadly from an FII perspective, it's a pretty much mixed day of trade. Insurance, I would like to mention that that's one space where there's a bit of genuine buying from larger institutions today too. That apart, I guess a day of consolidation with a bit of negative bias, largely dragged by IT.
Okay, Nimesh, what about specific stocks?
So the first stock on the list is MK Global. That stock is locked at 20% upper circuit. There is a board meeting scheduled for fundraising today. Lots of speculation doing around. So need to see what finally comes up, whether it's an individual investor or a foreign bank or a strategic investor coming in. But there is a board meeting for fundraising today. So that's the first stock. The second stock is Borosil's Renewable. Even that is buzzing in trade on very large volumes, up 10% last when I checked. Again, the city is anticipating some corporate development with regards to their foreign subsidiary very soon. So that's a buzz as far as Borosil is concerned. The third name is Hindustan Copper. Again, big volumes, and I understand some very strong buying from larger HNIs in Hindustan Copper, and hence the reason why that's buzzing in trade as well. And the last is K Fintech. It's part of my chatter as well, and there is a flash that I can see that there could be a large block. So that's something which the city is anticipating. A large block deal is likely in K Fin, and that's the reason why the stock is under pressure. Remember, only in May this year, General Atlantic sold 10% stake in K Fin. So they own 21% now, and that's classified as promoter holding. So if they are looking to sell out, then maybe the institutional holding will be a majority in KFIN going forward.
A very interesting list as always, Nimesh. Thank you very much for that. Let's actually take that and build on that last name that Nimesh mentioned, which is K Fintech. Yash is joining us with what he's picking up in terms of specifics of a block which may be about to happen. Yash, take it away.
Well, exactly what Nimesh mentioned, we'll pick it up from there. What we've been given to understand from our sources is that General Atlantic, which is of course a promoter shareholder, is looking to partly sell its stake as far as K Fintech is concerned. As far as quantum is concerned, what we've been given to understand from our sources in the investment banking industry is that General Atlantic may look to sell anywhere between 10 to 15% of its stake, of its total about 23% holding in in the company as far as this block deal is concerned. Mutual funds, insurance companies have been approached by the bankers as far as this block and the book building process there is concerned. According to our sources, this particular deal can happen at a discount of anywhere between about 5 to 8% to the current market price. What we've been given to understand is that IIFL as well as ICICI Securities are broker to the K-Fintech block deal. We've reached out to both General Atlantic as well as K-Fintech. General Atlantic has replied that they do not wish to comment as far as the story is concerned, and as a firm, they do not comment on market speculation. We are still awaiting a reply from K-Fintech.
Okay, all right. Yes, thank you very much for that. That's K-Fintech in focus. Let's take a quick commercial break here. We're going to come back with some near-term trading ideas, the F&O setup as well from the F&O desk. Coming up.
Yes, Papa.
Life doesn't stop for anyone. Even we won't let you stop. At every stage of your life, with LIC, you are always insured. LIC, हर पल आपके साथ.
Dial.
Okay, well, welcome back. There's 13 minutes to go for close. Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Prashant, I would suggest BTST on one of the Adani names, Ambuja. I think the entire pack is doing very well. Ambuja has slightly come off the day's high, but chart pattern or the setup remains on the positive side. So BTST with a stop at about 585. Good for target of 597 thereabouts. And one, a negative call, which is on AU Bank and Finance. Take a STVT with a stop at about 712 and a target around 695.
Okay, all right. we now have Sudeep Bandyopadhyay joining in to discuss a couple of fundamentals of the market. Sudeep, hi, welcome to the show. Well, you know, the big topic obviously today has been what's taking place with the IT stocks. Just wanted your view. Would you probably venture out and buy a Tech M, TCS, Infosys at these levels, all of them down anywhere between 2.5% to 3% odd?
Well, not really. In fact, we have been a little negative and kind of conservative on the IT pack of quite some time. And we strongly believe that there are a lot of headwinds which haven't still disappeared as far as Indian IT companies are concerned. And I'm not talking about this H1B issue at all. Look, AI is becoming big globally, and there will be pressure on revenue as far as domestic Indian companies are concerned, because the use of AI will enable a reduction of cost for corporates, and they will like that to be passed on through their service providers, which is Indian IT companies. They don't have their own product to command a better pricing. So under the circumstances, I think Indian IT companies, particularly the large ones, they will be at a disadvantage in terms of margins going forward for a considerable period of time. Now, if somebody has to look at IT, it is better to look at mid-cap and small-cap IT companies, which are servicing niche areas. So, I've been talking about this travel and tourism segment, which is booming globally. And some of the IT companies which are catering to their needs, yes, those can be looked at. Similarly, there's a transition happening in automobile sector from ICE to EV. And that transition requires a lot of technology support, and companies which are working in that space needs to be looked at. So, we have to focus on these kind of niche IT companies catering to segments which are doing well, rather than go for the large cap, general service providing IT companies.
Okay, well, definitely a bit of pressure which is now seeping in for the mid caps, down around 0.6%. The advanced decline ratio also nothing great today. So 1,000 stocks advancing to around 1,800 to 1,900 stocks declining. So it's worsened as the day has progressed. And as you can see, the gap is only widened as the day has gone on. But good time then to bring Nigel in. He's going to tell us what the latest is from the F&O desk. Nigel, over to you.
Well, the Nifty clearly lost its way in the last 60 minutes or so. But at least the good news is on a closing basis, we probably will conquer the 25,200 odd mark. The problem in the last 60 minutes was the Nifty Bank. That was in good form. That was holding one end up. That seems to have lost its form a little bit. But I don't think there are any big shorts in the system on the Nifty Bank. In fact, as that plate is telling you, the Nifty Bank is down 150 points, and there is some unwinding of long positions out there. So no fresh shorts on the Nifty Bank. Moving to the options data, the 25,250 call, the premium has corrected from around 140, 150 rupees odd. It's come down to around 45 rupees. Aggressive writing is what we're seeing out there. So in the near term, 25,400 will be the crucial resistance mark. On the downside, though, the 25,200 put, that as well as seeing close to around 70 lakh shares getting added out there. Premiums holding in that vicinity of around 35 rupees, but there is some put buying that we're witnessing out there. And that's why the premium has moved from around 20 rupees to around 35 rupees. You got the direction right. And in fact, you're making money if you bought that particular put. Moving to stocks in focus, well, you have some fresh shorts that are created in a couple of pharma as well as on IT stocks. So Tech Mahindra, big open interest build up out there. The stock is down, shorts being seen on that one. Glenmark, I recall they announced that big deal. The stock went dancing away to 2,200 rupees plus. From there, the stock has seen some correction, and now it's struggling to get past the previous high. There are fresh shorts getting added into the system on this one as well. And a surprise stock that's come in for short covering is LIC. Big short covering bounce is what we're seeing out here. After a while, the stock has moved up, and the open interest is lower on that particular one. And finally, two stocks that we're looking at, very, very important. One is RBL Bank. In all probability, the last time I checked, that's almost a surety that by the end of today, when the file comes out, that's going to be in the F&O ban. So we'll keep an eye out on that one. And the one that's likely to come out of the F&O ban is Angel One. It's spent the last few trading sessions in the F&O ban. But I was looking at the unwinding that we're seeing out there, and that should probably be out. Back to you.
All right, thank you very much for that. Keep an eye out on those two names, and of course, very helpful overall setup as far as F&O data goes. We'll take a break. We're back on the other side. Last, 8 minutes of markets coming up before we end today's session.
Welcome back. Well, just about 3.5 minutes to go till we close Monday's trading session. Sudeep, wanted your thoughts. The Adani Group stocks are showing a lot of momentum. Would you be a buyer?
Well, some of the stocks are definitely worth buying. I mean, I won't buy for short term, but let's say Adani Ports. I've been positive on this stock for quite some time, and I still maintain that it's definitely worth buying from a long-term point of view, and investors should have Adani Port in their portfolio. The other stock which I do like and I have started liking in spite of the valuation is Adani Power. I think, overall power sector, we have been positive for quite some time, and we believe there is a structural positive, as far as Indian power segment is concerned, and pretty much all the participants in the power space will benefit of this upswing. Adani Power definitely is very well positioned. Their combination of traditional energy as well as green energy is probably a step in the right direction. Yes, valuations are not cheap, but from a long-term perspective, both these stocks can be looked at. Of course, people do make a lot of money trading in Adani Group stocks because they have that inherent volatility, and people can use the trading opportunities there. But I'm talking pure long-term, Adani Power and Adani Port.
Okay, all right. So that's on the Adani stocks. Have you managed to look at Garden Reach? It's been in focus because of a contract which they've won from a German company.
I did. In fact, overall, we do like the shipbuilding companies. I think whether it's a Mazagon, whether it's Cochin Shipyard, whether it's Garden Reach, all of them have great potential. See, except the issue is the valuation isn't cheap. And the market gets excited whenever they receive fresh orders. We have to remember that between the receiving an order and executing it, there is a significant time lag for a shipyard. And there may be disappointment when the earnings come out, unless we are a little cautious here. But from a long-term perspective, all the three shipyards are definitely worth buying. If I have to pick one, I'll still pick Mazagon.
Yeah, Mazagon, out of everything which is what's happening. By the way, this one name keeps, just because it's doing so well, NetWeb, right? Supercomputers and whatnot. I just looked at what they would do. There's an IIFL. IIFL upgraded this stock at the beginning of September. And based on their 27 earnings, net earnings, it's trading at about 50 times now. Trailing, of course, is triple digits and more. Have you looked at, I think we've discussed this before, Sudeep. Any thoughts?
Well, I do like the stock. Somehow the market probably missed the excitement when the prices, should have gone up. The reports and people started noticing much later. I think they are absolutely rightly positioned. And I remember in multiple, interviews, you've been asking which company one should look at if they have to focus on AI and related activities. I think this is one company which is positioned rightly to benefit from this entire AI wave. Definitely worth looking even at current level from a long-term perspective.
Wave to ho gaya Sudeep isme, and big wave, right? Tsunami.
Absolutely. But that's what I'm saying, Prashant, that you have to look long-term now. You can't buy NetWeb for a quick gain now anymore.
Yeah, no, it's done very, very well. That's the thing. Market prices, it's so hungry for growth that its prices think so fast. But it's still largely promoter-owned, very, very little in terms of a local institutional holding. FIs own a little bit, but not very much as well. Sudeep, stay with us. We'll come to you in just a bit. Let me just quickly wrap up things. The index goes home with about a 100-point cut, 125 to be precise. Market breadth was negative, about 1,900 stocks higher, 1,100, 1,200 stocks which are higher. But market breadth was poor. Technology, of course, outsized loser today, the Nifty IT index. And of course, large cap, top 5 names are all IT. And of course, mid caps, Coforge, LTI, Mindtree, Emphasis, Hexaware. Again, that was the big losing space in that sense. On the other hand, what did well in the broader market, of course, is the Adani Group stocks, which is a pack, moved up between 9 and 20% or so. Ekta.
Yes, absolutely. And there are a couple of these smaller stocks. So you did mention NetWeb, which did very well in today's trading session. But we had Garden Reach, which was up around 2 to 3% We had a couple of these pharma stocks, which were under pressure today. But and joining it and giving it company was obviously the IT stocks, which were under pressure, even from the broader markets, the likes of Persistent, LTI, Mindtree, all of these stocks under pressure. Voltas also did see some amount of pressure today. So that stock was in focus. Swiggy was down around 2% at after JPM, or rather JM Financial, downgraded the stock to reduce from hold. So these were a couple of stocks on the downside. On the upside, just failed to mention that there were a couple of these stocks such as NBCC, which was higher on the back of an order win. We had a couple of these GST related stocks also, which did see some amount of momentum on the upside in anticipation of increased sales. So something like a Vedant Fashions was also in focus. But overall, that's pretty much what took place in the markets today. It was a down day by the close of it. We had the Bank Nifty, which is down around 0.3%. The Midcaps also lost out, closing at the low point of the day, along with the Nifty losing around 120 odd points, just about closing at around 25,200. Well, on that note, it's a wrap on Closing Bell. Markets Forward comes up next and takes all the action forward. Stay tuned.
Market turns weak as H1B visa issue drags IT names. Nifty and Sensex end at day's low. Metal and media indices end in green while most indices slip into red. Pharma stocks drag on the back of profit booking.
IT stocks were the top losers on the Nifty after the Trump administration raises H1B visa application fees to $100,000. TCS, Infosys, Tech Mahindra, among others, take a hit.
The new GST era is underway. India Inc. sounds optimistic. Bajaj Auto is expecting a strong festive season. Shoe retailer Metro Brands also expects to grow over 15% after the GST rate cut. Mother Dairy believes dairy ecosystem set to benefit too. Consumption stocks rally in trade.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vamakshi Dhoria and with me is my colleague Vivek. Well, Vivek, hi. It wasn't such a great day for trade. The initial recovery that we saw in the markets was sold into, of course, IT stocks were under pressure. We also saw, some fall in pharma stocks because the pharma index was also lower, down almost 1.4% today. Nifty FMCG also did not do too well.
That's right. Good afternoon, Vamakshi. Topsy-turvy session. We started off quite negatively, but intraday we did see quite a bit of a recovery. But towards the end of the trading session, most of the recovery was sold into, like you mentioned. Well, of course, you have to talk about the fact that you did see significant selling pressure across the entire IT pack. The Nifty IT index, as expected, was the top sectoral laggard. Other than that, you also saw some pressure coming in on pharma as well. But here's a lineup of all of that we have in store for you today. We start with the top movers and shakers of the day with Riya Bhatia. IT stocks are buzzing in trade following Trump's hike of the H1B visa application fee to $100,000. Meanwhile, Volta shares slipped amid management changes, while Garden Reach Shipbuilders surged after securing a $62 million order win. Last but not the least, we delve into the key market events to watch out for in tomorrow's trading session.
Absolutely, Vivek. Lots to watch out for. But on to our first segment then. Ria joins us now from the big wall with the top movers and shakers of the day. Ria, over to you.
Well, yes, I'm actually first taking a look at the stocks with positive momentum today. The first one is Garden Reach, up around 3% after securing a nearly $63 million contract from a German company for the construction of hybrid multi-purpose vessels. The next one is NBCC, up around 4% after a 117 crore order from Hoodco. Some other retailers were also in focus today. The likes of V2 Retail, Vedant Fashions and Electronics marked up between 4 to 7% today as the GST cuts come into effect and the festive season begins. Adani Group stocks also continued their strong momentum after SEBI's clean chit to the group last week. Adani Enterprises, Adani Ensol and Adani Green up anywhere between 4 to 12%, with the biggest gainer being Adani Power with a 20% upper circuit. Hindustan Copper was also up over 5% after executing a deed to extend the Rakha mining lease by around 20 years. State Trading Corporation was in focus today, up around 16 to 17% in its biggest single day gain and volume since July of 2024, and it has also broken above all its key moving averages. The last stock is Shalby, up around 11% in its third straight day of gains. It has gone up around 16% in the last three trading sessions and over 36% this month in the best month of 2025, and it has also turned positive on a year-to-date basis. Moving on to the stocks that were on the downside today, IT stocks were lower, down by anywhere between 2 to 4.5% as President Trump signed an executive order that raised the annual H1B visa fee to around to USD $100,000 per applicant. The likes of Wipro, Infosys, TCS, Persistent Systems, TechM and LTI Mindtree all lower in today's trade. Voltas was also down around 3%. The stock was under pressure even amid the GST cuts and the beginning of the festive season, as industry volumes declined around 15% in the first half of FY26, and the company's primary sales have also remained quite weak. Swiggy was down around 2% after a downgrade from JM Financial. They've downgraded the stock to a reduced rating from their earlier hold rating with a target price of rupees 440. And lastly, shrimp stocks were also low in today's trade. Avanti Feeds and Apex Frozen Foods down around 2.5 to 3% as US Senators Bill Cassidy and Cindy Hyde-Smith introduced the India Shrimp Tariff Act in Congress last week. So these were the big movers in today's trade.
Thank you so much, Ria, for joining us and giving us a neat wrap of all of the top stock movers in today's trading session. Let's now go across to our guests, Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital, and Jay Thakkar from ICICI Securities. Good afternoon, gentlemen. Thank you so much for joining us. Jay, let me come across to you first. Have a look at the Nifty move today. Does it appear to you that we are now facing exhaustion at higher levels? Do you feel that we may now slowly grind lower?
Good afternoon to you, Vivek and Vamakshi. Well, definitely, I think that, Vivek, with this kind of, 2 days back-to-back negative close in Nifty and kind of, selling pressure at the higher levels. I mean, today also, if you see Nifty open gap down and managed to recover, managed to bounce back with the good support of the, Bank Nifty. But then finally it saw, selling pressure at the higher levels around, 25,300, 350 range. And then again, we saw Nifty slipping more than 100 points in today's session as well. And with that, Bank Nifty also, which was already underperforming, but however, managed to bounce back for 11 to 12 consecutive days. But that also, gave up the gains today, and we saw both Nifty and Bank Nifty closing in the negative territory. In fact, Vivek, one important thing to note down is that since last trading session, that is since Friday, we have seen that India is going up, or rather, you can see the IB is also going up. The volatility is increasing from its extreme levels, right? And I think this is a clear sign of a short-term reversal in the trend, from up to sideways to negative. I think that 24,800 is an immediate support for this overall trend. I mean, if 24,800 breaks, then this uptrend will confirm a reversal from up to down. Till 24,800 is held, I think those levels can be tested back, no doubts about it. But until that is held, we can see Nifty trading, between 24,800 to 25,500 as of now. But then upside, at least for this September series, now seems to be capped at 25,500 on Nifty.
All right, thanks so much for that, Jay. But, let's focus in on one of the big stories of the day. The IT stocks, they were the top losers on the Nifty after the Trump administration raised H1B visa application fees to $100,000. Brokerages believe the impact may be limited. Rima is here to tell us more on this fee hike and how will it impact IT companies. Rima?
Thanks so much for that. Let's get to the numbers straight away. Now, companies have informed the exchanges, especially the mid-cap IT companies, about the possible impact. So let's start with First Source. That's a BPO company, and they say they're not impacted at all. They've not sponsored any H1B visas last year or this year. Coforge says they filed for 65 new visa petitions. Of that, 63 were approved. Cyient, the number of employees on H1B visa stands at 6 for FY25. For emphasis, 130 new H1B visa filings in 2025. Hexaware, while last year there was none, but overall the company has been bringing down the dependence on H1B visa. Persistent hasn't given a number, but they do say that they don't expect any significant impact on the operations or on the financials. But as you see, from these numbers which have been shared, that while there will be some impact, costs may go up in FY27, there could be some marginal impact, it's not a very big impact. Analysts point out the EPS estimate or hit could be 2, 3, 4%, and there are mitigating factors. Companies could look at local hiring, increasing subcontracting or near offshoring, and the actual impact may be even lower than that.
Thank you so much, Rima, for joining us and giving us a sense of how exactly this particular move will impact the IT space. Nifty IT down almost 3% in the session today. But now moving on to a CNBC TV18 exclusive, PFRDA's investment committee is likely to issue guidelines to trade in commodity derivatives within the next 10 days. Yash joins in with details on this move. Yash, what are you picking up from your sources?
Well, this is quite unprecedented because in the past, never has the pension fund traded in the commodity derivatives market, but the whole rationale behind doing so is to diversify its investment pool and enhance returns for the subscribers. What we've been given to understand is that PFRDA's investment committee may issue guidelines, finalize and issue guidelines when it comes to trading in commodity derivatives, and that could happen as early as in the next 10 days itself. After that, what we've been given to understand is that once those guidelines have been issued, PFRDA board could take up those guidelines for approval in its October board meeting. And once the board approves it, those guidelines could be put in its investment regulations, after which schemes could be launched where underlying could be trading in commodity derivatives. Sources tell us that PFRD is expected to initiate commodity derivatives trading with gold and silver, but not stay limited to those commodities. It will also study new commodities, and as and when the board is convinced, they may enter trading into other commodities as well. So, of course, it's a large pool that may come into the commodity derivatives market. Remember, PFRDA manages assets of about 15 trillion rupees. So, of course, a large pool there, whatever portion of it comes into commodity derivatives market.
All right, and Yash, do stay on with us. Take us through the KFinTech block deal as well. What are your sources telling you on this particular front?
Well, that's correct. So, of course, what we've been picking up from our sources is that General Atlantic, which is a promoter shareholder, may look to sell anywhere between 10 to 15% of its stake in K Fintech via block deals. As per our sources, the brokers to this block deal are IIFL as well as ICICI Securities, and the brokers have already sounded off insurance companies as well as mutual funds as a part of the book building process. What we've been given to understand is that this particular block may happen at a discount of about 5 to 8% to CMP. Also, as far as General Atlantic is concerned, previously also thrice, it has sold its stake once in the third quarter of FY24, that was about 10% stake. Next, in the first quarter of FY25, about 6%, and first quarter of FY26, that was 10% stake. And now it may be looking to sell another 10 to 15% stake at a discount of about 5 to 8%. We've written to, of course, both General Atlantic as well as K Fintech. General Atlantic said that they do not comment on market speculation. We are still awaiting a response from K Fintech.
Right. Thank you so much, Yash, for joining in and giving us details of those two important stories you've picked up from your sources. Moving on, Sudeep, you've been waiting patiently. Thank you so much for that. You heard Rima speak about the impact of IT as far as individual companies are concerned. How do you look at the IT pack in the current context? Do you feel a few of them may be attractive for the longer term, or would you stay away from these names, at least for the near term?
Well, even before this H1B fee hike by the current US administration, we were very cautious on IT. We believe that Indian large IT companies have a lot of challenges in the near future. Beyond the usual challenges of orders slowing down, I think AI is a reality, and with AI becoming a reality, US corporates will look at cost rationalization by using AI, and the impact of that will come on the margins of Indian IT companies which are servicing them. So the margin pressure, beyond everything else, even assume that everything has stabilized, US markets are doing great, but the margin pressure for Indian IT companies will be there. So we have been cautious, and we believe it should be a wait and watch kind of a scenario for large Indian corporates. We should focus, of course, on niche IT companies which are catering to segments like travel and tourism, which is booming. And you can look at travel tourism companies, IT companies which are catering to travel and tourism sector. You can look at the auto component and automobile related technology service providers, because there is a massive transition happening from ICE to EV, and the importance of technology is increasing. So focus on these kind of niche segments of IT companies. I think that is what is worthwhile at this stage, not plain vanilla large cap IT companies.
So overall cautious on the IT pack, but some of these niche sort of companies, that is something that one can look at, is the advice coming in from Sudeep. But Jay, coming to you then, I'd like to get your word in on a couple of these data center plays. NetWeb, of course, on the back of an order win today was up almost 8%. In fact, in the last 1 month, the stock has rallied by over 50%. Anantraj is the other stock that I'm also talking about, is 6% higher, today. So, and over the last couple of sessions as well, the stock has done quite well. So, Jay, your word on both of these stocks, how are they looking like on the charts?
Sure, Actually, see, first of all, they both are non-FNO stocks, so I'll be commenting based on the quantitative data. And what I'll look at is that NetWeb definitely has been trading about previous highs of around 3,080, 3,100 levels, and which is positive. The overall momentum is quite positive out here. It's trading well about 3,100 levels. So from the medium to long-term perspective, Amakshi, I think that till these levels are held, the overall trend for NetWeb is going to be positive only. And one can definitely look out for buying opportunities on dips. Recently, too, this stock has provided a breakout beyond the levels of 3,200s. So for the short term, 3,200 is the support. For the medium term perspective, I believe 3,100 is the support. As far as Anantraj is concerned, this stock too, since last two trading sessions, Vamashi has been, showing good positive momentum and has been trending higher. In fact, recently it has, broken 630-640 range, which is also quite a resistance for the stock, and closing above those levels clearly indicates the overall trend to be positive in this stock. And there is no major hurdle now until, the levels of 800. So from these levels too, if at all there is a dip, one should be utilizing it as a buying opportunity, because the risk reward is favorable for both the stocks, on the buy side.
Right. Thank you so much, Jay, for giving us a view on both of these names. Well, one particular stock from the consumer durable space that was under pressure today was Voltas. This is post the management's business update that they shared with analysts during an analyst meet that they held over the weekend. Upasna is here with the key takeaways from the meet and what to expect in Q2.
Well, certainly. Company recently held a management meet, and here are some of the important updates. Now, company says that the primary sales continue to remain soft for the company due to higher channel inventory and also deferment of purchase led by GST rate cut. Even margins, company has said it's likely to see an uptick from Q4 onwards as channel support will extend Q3 till Q3 only. Now, overall, company is confident that the pickup in demand momentum in H2 FY26 onwards will be aided by several factors such as festive season, GST on RAC, pent-up demand due to weak summers, and also delayed purchases by consumers for 5 weeks. That is the time gap between GST rate announcement and the effective date. Even pre-buying is what they are anticipating ahead of new BEE norms, which kicking next year onwards. And company believes that the weak summer should result in good festive season demand. But overall, if we look at the industry volumes in the first half, they are down by as high as 15%. Now, brokerages are of the view that the festive tailwinds and GST triggers could lead to a demand revival, but it could be slow in H2. So, on the back of this, Citi has given a buy rating of 1800, MOSL has given a neutral rating, while BOFA has given an underperform with a target price of 1200, and Goldman Sachs has given a sell rating with a target price of nearly around 1100. So that's the reason why the stock remained in focus today.
Well, thanks so much for that, Upasna. And Steep, would like to come to you on this. Now, of course, we have seen all of these AC companies had an absolute washout summer on account of the preponement of the monsoons. And, now there is a hope that probably on account of the GST rate rationalization, there could be some bump up in demand. So, what is your view, at least in the next 1 to 2 years for a counter like Voltas?
Well, I'm positive, very clearly, Vamakshi. Look, I think, first quarter has been a washout because of early monsoon set in and low demand. Second quarter, again, which we are at the fag end of, will be subdued, pretty much on the back of the fact that monsoon season and postponement of purchases because of GST rate rationalization, which is effective from today, actually. So last 3-4 weeks, there were hardly any purchases. So obviously the numbers will be subdued, and Q2 numbers, overall, the financial numbers also when they come out will not be anything great. So probably some more correction we may get to see in these counters. But beyond that, I think Q3, Q4, we are looking at a lot of demand pickup on the back of multiple factors, which were just now being talked about in GST rationalization, income tax relief, pent-up demand, and a whole lot of other factors. So I think the companies, if you're talking about a couple of years, I think both Voltas, of course, we like Blue Star more, but Voltas also should do well. This entire segment will do well for the next 2-3 years. And one can look at buying into these stocks, taking opportunity of these dips from a long-term perspective.
Well, thank you so much, Sudeep, as well as Jay, for joining in. Give us a view on the markets, individual stocks, and a view on the consumer durable sector as well. With that, it's time for a short break. India Inc. sounds optimistic about the new GST era. On the other side, we get your top corporate voices on GST rate cut and how it's set to benefit different sectors. Stay tuned.
Welcome back. You're watching Markets Forward. Let's go across to what India Inc. had to say on GST rate cuts. First up is Bajaj Auto. The management is expecting customer sentiment to be positive on the back of GST cuts. Further, Bajaj Auto is expecting growth to continue beyond the third quarter. It also is upbeat about the festive season. And that's not all. The company is hoping to close above FY19 peak this year, and it is confident that the industry will grow around 6% in FY26.
PSU bank major Punjab National Bank is banking on the GST rate cut. It expects the cut to bring a lot of relief, especially in sectors such as agriculture, retail and MSME. The management calls it as a game changer for retail as rising disposable income boosts consumer demand. Meanwhile, vehicle and housing segments within retail are seen as key growth drivers. Further, it expects GST reforms to add around 1 to 2% growth.
Well, next on our radar is Shriram Finance. The company's management believes vehicle makers are likely to offer smaller discounts. Further, expects growth to be in the range of 2 to 3% higher this quarter. The industry is also expecting measures like interest rate subsidies and lower power tariffs.
Next up is Tega Industries. The management said Molycorp acquisition will be EPS accretive from FY27. This deal is expected to enhance value for customers globally. Further, the company plans to raise 2,300 crore rupees via the equity route. It has already received confirmation of participation for 2,000 crore rupees.
And before we wrap, we bring you some key market events to watch out for. Upasna is standing by with the key events to focus for tomorrow. Upasna.
Well, first up, let us start with the global economic cues. US will be reporting its S&P Global Manufacturing PMI data, and Japan will be also reporting its Manufacturing and Services PMI data. So we'll be closely watching out for both of these counters. Now, let us look at the key stocks that will be on focus on back of corporate action. Tomorrow marks as the record date for the bonus issue in the ratio 1:1 for companies like Pidilite Industries and Time Technoplast. Piramal Enterprises will also be in focus tomorrow, as tomorrow marks as the record date for its merger with Piramal Finance. And also lastly, Sudarshan Chemical will be reporting its Q1 FY26 result tomorrow. Now, coming on the IPO front, both the IPOs such as Anand Rathi and Jaro Institute of Technology, it opens for subscription tomorrow. And when it comes to the listing, Euro Pratik Sales, a total issue size of 451 crores, will be listing on the exchanges tomorrow. Now, PMO is scheduled to meet on 23rd of September to help create domestic Big Four. And lastly, JP Morgan's, that is 10th annual India conference, tomorrow marks as the day 2 for that. So we'll be closely tracking for that as well. So all in all, looks like quite an eventful day tomorrow.
Thank you so much, Upasna. I promise it to be an eventful day tomorrow, like you mentioned. But with that, it's a wrap on this edition of Markets Forward. We will be back with more news and updates on the other side.
पैसा लगाना है तो सेंचुरी प्लाइ क्लब प्राइम पे लगाओ। डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाइ क्लब प्राइम, रहो बेफिक्र।
I choose a world where we dream, and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
विराज रायचन, रायचन स्टील।
स्टील? आपने वरदान स्टील का नाम सुना होगा।
Of course. आप मिस्टर वरदान के बेटे हैं?
नहीं।
छोटे भाई?
नहीं नहीं।
दामाद?
नहीं।
फिर?
शेयर होल्डर।
शेयर होल्डर?
सही टाइम पे उनके शेयर्स खरीदे, तभी आज मैं यहाँ हूँ।
जो आगे की सोचते हैं, ग्रो करते हैं। डाउनलोड ग्रो फॉर स्टॉक्स, म्यूचुअल फंड्स एंड IPO।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
I choose a world where we dream, and the limit is the sky, and this world is my home where I'm living my best.
Mindfully crafted home decor fabrics. Sansar, a D-Decor brand. Live consciously.
पैसा लगाना है तो सेंचुरी प्लाई क्लब प्राइम पे लगाओ, डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड भी, मिनिमम 30 साल का रिटर्न देगा। अब इससे बेटर इन्वेस्टमेंट है तो बताओ। सेंचुरी प्लाई क्लब प्राइम, रहो बेफिक्र।
Hello and welcome to Business 360. I'm Ashmit Kumar. Here are the headlines that we're tracking this evening. GST rates kick in from today. Prices of kitchen staples, medicines, electronics, automobiles and others get cheaper. Prime Minister Modi bets on tax cuts, accelerating growth and result in savings of 2.5 lakh crore rupees. Stock market slide in late trade. Sensex loses over 450 points. Nifty clings on to 25,200. Midcaps see sharper cuts compared to the blue chips. IT stocks stumble after US imposes a $100,000 fee on H1B visas widely used by Indian nationals. Trump administration clarifies that the fee is a one-time payment and applies only on new applicants. Several companies hint at limited impact, but concerns on margins and growth linger. Commerce Minister Piyush Goyal in Washington for trade talks weeks after the conciliatory statements from Trump. Chief negotiator Rajesh Agarwal also accompanying the minister. Foreign Minister S. Jaishankar scheduled to meet his American counterpart Marco Rubio in New York ahead of the United Nations General Assembly. India's GDP growth will be near 7% this year after the GST cuts, as Chief Economic Advisor Anantha Nageswaran expects revenue growth to remain on track and is confident of achieving 4.4% fiscal deficit target. That's an exclusive. Government is hopeful of exceeding the divestment target, says DPAM Secretary Arunish Chawla. Also expects dividend from PSUs to exceed 1.2 lakh crore rupees mopped up last year. Says 12 strategic divestments and listings of some PSUs are on the cards. That's another exclusive. United Kingdom, Canada and Australia, part of the G7 grouping, formally recognized Palestine's statehood ahead of the annual United Nations General Assembly. France likely to follow suit, along with nations including Belgium, Malta and New Zealand. Israeli Prime Minister Netanyahu responds saying there will be no Palestinian state west of the Jordanian River. Well, the top story this evening, the Trump administration has clarified that the $100,000 H1B visa fee is a one-time charge and will apply only on new applicants. This category of visas are used primarily by Indian workers in the tech and the IT sectors. The move sent shockwaves across the industry as the significant escalation in cost effectively makes these visas economically unviable. Currently, H1B visas cost anywhere between $1,700 and $4,500. Shares of top 4 tech giants, including Infosys, TCS, HCL Tech and Wipro, took a beating in trade. The 4 companies cumulatively lost market cap worth 65,000 crore rupees. President Trump signed the executive order last Friday in the presence of Commerce Secretary Howard Lutnick. Lutnick put it rather bluntly, urging tech companies to, and I quote, train Americans, stop bringing in people to take our jobs, end of quote. Indians are the overwhelming beneficiaries of the H1B visas. More than 71% of the visas were granted to Indian nationals last year. China ranks a distant second with just 12%. NASSCOM has said that the clarification on fee eases immediate concerns for Indian tech professionals, adding that the Indian tech industry now has the time to enhance local skilling and hiring in the United States. Among companies, Amazon has more than 10,000 employees on H1B visas, according to US government data. TCS is second with over 5,500 visa holders, followed by Microsoft, Meta, and Apple. This data is as of June of 2025. The American depository receipts of Infosys and Wipro tumbled in trade after Trump's proclamation. Meanwhile, India and the United States are looking to intensify trade talks. Commerce Minister Piyush Goyal is in Washington, D.C. for the next round of trade talks. This comes after U.S. removed sanctions waiver on Chabar port in Iran, which was being developed by India, as well as the H1B fee hike that we saw over the weekend. Meanwhile, External Affairs Minister S. Jaishankar will be meeting U.S. Secretary of State Marco Rubio in New York for the bilateral discussion. That's just a day ahead of the UN General Assembly summit kicking in. Well, for more on the H1B issue, let me now go across to Shireen Bhan, who is joined by Rajesh Nambiar, the president of the IT industry body NASSCOM. Shireen, over to you.
Well, thanks very much, Ashmit. This has been the big story over the weekend and it continues to play out. Joining us now for the first reaction from industry body NASSCOM is the president, Rajesh Nambiar. Rajesh, thanks very much for joining us. I would imagine it's been nothing short of a nightmarish weekend for the IT industry, for industry associations like NASSCOM. I know you've put out a revised statement now on the back of the clarifications that have come in from the White House, but nevertheless, Rajesh, on the back of things as they currently exist, does it make the H1B route unviable for Indian IT?
So, first of all, thank you, Shireen, for having me in the show. Wonderful to be here as always. Look, you're right. I mean, I think we did have a fairly difficult weekend. But, coming back to H1B, as you know, over the years, I think most of the IT companies, IT services company, IT tech companies have reduced the dependency on H1B over a period of time. So that which means that today we are looking at a much smaller issue compared to what we would have probably looked at maybe 4 years ago or 5 years ago. And as you saw, and then your channel reported as well, because of the clarification which was issued by the White House, of course, I wish they'd actually did not do a separate clarification. They should have probably sent it with the initial executive order itself. But that has clarified a lot of issues, for the people who are outside of the United States, who are H1B visa holders. So it clarified a lot of other technical issues that we've been grappling with. But good news is that this comes into effect only from the next year, which is 2026, new set of visas. So there's a little bit of a breather for companies to sort of enhance the skilling options that we have, hire people from the local. In the US itself, I think there'll be a lot of hiring which will now happen. So I think broadly, while we will have some impact, but it wasn't the kind of the impact that we thought when the executive order came out first.
Well, yes, the worst case scenario perhaps has been averted on the back of those clarifications that came out, Rajesh. But, to the point that you made about the dependence having decreased significantly in the last few years, let's just look at the last year's lottery. How much of the H1B offtake was to Indian IT companies? I know that US tech has been a large recipient of the H1B visas, but if you can break down for us in numbers, on the back of the last lottery, which is for 2025, how much went to Indian IT services companies?
So, Shireen, as you know, the H1B is roughly about 85,000 visas, 20,000 reserved for a special category, so 65,000, out of which tech itself will be about, 90% of that. So, it comes down further down. And then Indian share itself is a little lower than that. But, majority of it is actually from the Indian professionals. So from the last lottery, if you go back and look at from the Indian origin companies, because there are also companies which might have headquartered elsewhere, but clearly Indian origin in many ways. So those were the companies had roughly about 15,000 or so, which was issued in 2025. This was much lower compared to what it used to be. So we came down 30% over the last 5-6 years in terms of the number of H1Bs applied by these organizations. So it is now not a, for every company, and you put some numbers out there as well. While these are applications which have been sanctioned, remember, not everybody who's gotten H1B from these companies are also traveling, because some people have left the organization in the meanwhile. They may not have the right requirement for some of them to travel. So there is a lot of things goes on between these numbers. But I do believe that this is a much smaller number that we are staring at today than ever before. Now, with this 100,000 fee that you're going to have, you're going to find these numbers coming down even further. So now we'll be a lot more thoughtful in terms of what numbers that we would probably apply as an industry as well.
Talking about applying judiciously, given the fact that you're now going to have to deal with a $100,000 price tag for every petition filed, does this price out the small cap, mid cap IT companies? Does this largely then remain in the realm of the 4 or 5 big tech Indian IT services companies?
Well, the good news is that most of them have option to sort of really do a local hiring, and which is, I think, some of them, even both the mid-tech companies, mid-tier tech companies, as well as some of the small companies have begun to sort of do some local hiring as well. So H1B is not the only route that they need to work on. But certainly, I think we do believe that blocking this route is actually not a very, very good option for some of them. But let's also understand that the H1B workers are actually a small percentage of the overall US workforce. And, in most cases, it's a very small percentage of the total workforce that any of these companies have, the mid-tier tech companies, as well as the large tech companies. So it's a small number to begin with. And, there are other options available for people to work on as well. But it is certainly, without a question, as you rightly said, especially for some of the smaller organizations, these costs will be a little bit prohibitive. But, the good news is that initially it was annual, and we were a little concerned about that. But now it is clarified that it's a one-time fee, which means that you're taking that and then proportioning it around 6 years. So the real impact on some of this is a lot more, smaller than what we thought initially.
I want to go back to the point that you made that companies are now going to hire locally as opposed to taking people on H1Bs. Now, if you had the ability to hire locally, why would you use the H1B route unless there was a significant cost arbitrage involved? So what happens now if you're going to be hiring locally and the cost arbitrage is done away with? The impact on margins as we move forward, Rajesh. We've already seen margins being under pressure. What could this mean now in terms of growth going forward?
No, broadly, H1Bs are not necessarily only for arbitrage alone, because there is arbitrage certainly in the offshore component of what we do for the services companies trading. But the on-site movement with the H1B did not have much of an arbitrage. Of course, they're also paid. If you go back and look at the average wages paid to these workers by the organization, most of the large organizations, there's a big difference in terms of local hiring and this as well. There was, of course, a little bit of a difference, but the bigger challenge for us would have been availability of talent, making sure that they are trained well. If somebody is going from a certain project in offshore, going on site to make sure that their continuation of what they've learned in the project within their offshore country. So there are a lot of issues related to also talent mobility, if you may, right? People who are going there to lead a certain piece of it. All of that was also important, from that point of view. Now, local hiring will certainly have a little bit of an impact, from a margin point of view, but it is not a huge impact as far as these companies are concerned. And I also believe that, the $100,000 now you have to add from next year onwards, that will also have a minimal impact on the margins. But the question is, instead of saying margin, I want to say cost. The reason is that some of this cost will actually be passed on to the end consumers or end customers of these organizations, which means that there may not be a margin impact at all on these companies, because if you are able to pass it on as a cost to these companies and then include it in the pricing.
You talked about customers and clients, Rajesh. Any feedback coming in, initial feedback coming in from clients and customers? What has this done to confidence? What has this done to sentiment? We saw over the weekend several reports suggesting that there was guidance given out by many companies telling people who are on H1B visas not to travel if they're outside of the US, to return to the US. And we saw that panic play out in terms of ticket prices for certain. Does that guidance still hold? well, despite the clarification? And what's the overall mood, the sentiment that you're picking up on from clients and customers at this point in time?
So first of all, those guidance were issued when we did not have the clarification, which was issued by the White House later on after about a day or two. So that all of that in terms of not traveling, all of that goes away because now there is no restriction on people who already own a H1B to travel, which means that even though you are outside of the country, you can still get back to the country. If you're in the country, you can travel outside, etc. From our customers and our clients who are, global in nature, of course, a significant percentage of our business, as you know, 63% of what we do from Indian tech industry, relies on the US customer base. They've been quiet. I must say that, most of them have certainly quietly supported us. I think they're a little bit reticent to come back and openly and say a lot of things in the media or any of that. But they've been very supportive. I don't think we have had any issues where they've had a panic reaction to this, and they do know that if the clarification hadn't come through, it would have been a lot more personal difficulty for people who have traveled outside. There were people who are going out for weddings. They got panicky, and then as you saw some of the videos, they got out of the plane because they couldn't travel. All of that confusion was probably unnecessary at this point in time. And I wish, I think, clarification had come a little sooner. But we are where we are, and then I think when we look forward, we have another year or so to sort of work on what really this means to all of the companies. And I've spoken to many of the organizations. I think we're very confident in terms of how we will handle this. At the same time, let's also not minimize the impact such orders have on our broader business. So it's kind of balanced approach. I think we understand the impact, but at the same time, we need to work on what is needed at this moment for the industry.
Well, speaking about sentiment, and there's enough on the plate at the moment, but, the larger messaging and signaling that this move sends out is that it's no longer goods. The battle has moved beyond goods now to services, and this perhaps is the first salvo, so to speak. We don't know what will eventually happen to the Hire Act because it is akin to a private member's bill, so there's a long way for it to go before it becomes into any kind of law. But is there concern building within industry that this is the first salvo in a new front, so to speak?
Well, there are two issues that you mentioned here. One is tariffs, and the other one is, of course, the Hire Act or Hire Bill. I don't want to call it act. Even though a lot of people call it an act, I want to call it a Hire Bill because until it becomes an act, it's still a bill. It has to go through a lot of hoops before it gets into an act. On the tariff side, as you know, as of today, the tariffs are still on goods, not on services. So, most of what is happening is around speculation, and the most of the speculation is actually coming not from the administration, but from others, tweeting or probably related to the administration in some sense. But so we wouldn't give too much of credence around tariffs on services as yet. While we will be prepared, we will make sure that there are enough work which is being done in terms of addressing what we need to do if there are tariffs. The second element is Hire Bill, right? And this is, of course, as most of you know, promoted by a senator, and has presented it. The good news is that we already got a block by the Democrats on the bill, so which means that it hasn't gone through the process as yet. But that doesn't mean that it will go away anytime soon. You will have to watch carefully as to what it means to us in the longer duration, and we will wait and watch as to what it means to some of us. But if you see what is really going on is there's both ways, right? At one end, there are jobs in America, the higher visa fee, etc., or the $100,000 that we put on it will make sure that there aren't too many people who are taking those jobs away. And the Hire Act is sort of aimed at saying that there aren't too many jobs that are going out as well. So it is sort of a double whammy in some ways. But we will wait and watch. Yeah. I mean, at this point in time, we want to be taking a very balanced view on what Hire Act is. I doubt whether this will see the light of the day, given that it has to go through a lot of hoops, and then 60% approval from the Senate before it becomes an act.
Well, yes, as I pointed out, it is a long distance before it becomes an act or legislation. But Rajesh, on the tariffs, there is now, of course, the matter is pending before the Supreme Court. The Supreme Court in the US is going to take this up. The appeals court has ruled against the imposition of tariffs. Is there any conversation around mounting a legal challenge on the H1B changes that have been moved?
No, look, that would be the last option anybody want to sort of consider at this point in time. I think there are many things that we do as an industry. I think we will be committing to making sure that we do this right, which means that we highlight on the amount of jobs this industry is creating in the United States, the amount of training that this industry is doing. We have trained close to 1 million people within the ecosystem, within the United States. We are one of the biggest training provider within some of the artificial intelligence and related topics within the United States. In some of the pockets that we've been addressing, we roughly employ about 210,000 people in the United States. So there's a lot of good things which is happening. We just want to make sure that we are able to consolidate it. Our narrative is going to be very different, and we want to make sure that we are truly doing this in a very balanced way. I mean, litigation would probably be the last thing that we want to talk about. Of course, the option is always there. Again, we would not front end anything like that, but I think we would take other options to make sure that we are able to do that as well if it comes through.
Rajesh, you talked about the good stories, and the silver lining really for the IT business has been the GCC business, which has flourished. We've seen, of course, the significant growth and rise of GCCs operating in India. Now, many people suggesting, including industry veterans of the IT services sector, that this is in fact going to move more jobs and more work and more business to GCC, so this may not be as negative a hit as is being imagined or expected. What's your take on that?
Well, we can always look at it positively, right? And I think that's the right way to look at some of this. GCC has been a phenomenal story. Shireen, you have written about it. You have spoken about it multiple times. We've been, advocating this for the last many years. It's certainly the brightest star, if you may. Today, as of now, we have 1750 GCCs in India, growing at a much faster clip. The revenues have grown up to $65 billion in FY25. The GCCs together employ about 1.9 million people as of today. So, and we've also said that by 2030, this number is going to be much larger, right? It's going to be upwards of 2,100 or so, which basically means that every week or so, we have 1 or 2 GCCs setting up shop, which means roughly about 90 to 100 in a year is what we are saying. This growth will continue. There is no question. Of course, no on services. We spoke about taxation on offshore. Some of these moves we never know as to where this is going to lead to. But I do believe that if we stay focused on true value addition, as you know, GCCs have moved away from truly focusing only on cost arbitrage. Now it's all about innovation. It's all about how much revenue impact that they're having on the parent companies as opposed to only saving costs. So I think we've come a long way in the GCC journey, and I'm very positive that this will continue to be the case as we move forward.
Well, Rajesh, that brings me then to the final question, which is something that's been up for debate now for very long, whether Indian IT services finds itself at an inflection point yet again, and whether this is in fact an existential crisis for the current business model. And I think the criticism has been that Indian IT hasn't done enough to move up the value chain, to do enough on innovation, and perhaps has spent too much of its capital on buybacks and such like. How do you respond to that criticism? And do you believe that this is in fact an existential moment for India's IT services sector yet again?
Not at all, Shireen. I don't think this is an existential crisis at all. By far, I think this technology, this industry has been very resilient to several of these interventions that we have seen in the past. You've seen many of them as well, and I've seen them too. So the enterprise tech spending will continue to be resilient, with certainly budgets, of course, increasingly directed towards AI to unlock value creation. And you also find that there's a lot more spend now on the newer growth areas, which means that we are pivoting into something very new. Remember, when we're doing all of this, there has also been this whole change in technology with things moving into generative AI, agentic AI, etc. There's a lot that we do when looking at future of technology. We had sent out a report. I'm not sure how many of you have seen that. Together with McKinsey, in the next 3 to 5 years, agentic AI alone could unlock about $300 to $500 billion in totally new market opportunity. So, are we ready for making sure that we are capturing some of those market opportunities? So it is important for us to make sure that we are doing all of that. So, it's a lot happening. I don't think it's fair to say that this industry is sort of going through its end phase. Far from it. I'm very, very bullish about what this industry can offer in the days to come. So I'm looking forward to making sure that we tide over this. Of course, we'll go through a little bit of a pain in the short term. But let's not forget that if you look at a long-term view, not even that long-term, Shireen, look at 3 to 5 years down the line, you're going to find that everything is going to be tech-led, tech-infused, which means that there is need for technology, the need for technologists, including, artificial AI and agentic AI, etc. Ability for us to make that pivot and ensure that we are building sustainable systems is going to be the need of the hour. And there is no question that, the Indian tech industry will come through as a shining star in all of this.
Well, we certainly hope so. But Rajesh, in the short term, can you quantify the impact, the hit on account of the H1B change, as well as perhaps, just holding back as far as orders are concerned, if at all that were to happen? Is there any kind of an estimate that's been put together?
No, we don't, as NASSCOM, we tend not to give any market estimates, Shireen, as you know. The companies have been working on this. As I mentioned before, one good news is that there is no near-term impact at all. So we're not worried about what happens in the next, 3 or 4 quarters. We do think that in 2026, if this 100,000 stays, there will be an impact from a cost point of view again, right? Because of the fact that even if you're going to be applying for a smaller number of visas, this 100,000 per visa will be a sort of a number. But remember, there are large organizations. So when you take a number like this, spread it across 6 years, then the impact on a yearly basis is going to be very low. There will be a marginal impact on the cost. And again, as I mentioned before, that can be translated into pricing changes and could be passed on to the clients, or that's something which the companies could take it on their margin. So that's something which the individual companies will make those calls. We haven't seen any slowdown or anything on the client side because of this at this point in time. So I don't believe that in the short term there will be any significant impact at this point in time.
Well, Rajesh Nambiar, it's been a pleasure speaking with you. We wish you the very best of luck. Thanks very much for joining us here on CNBC TV18 to take us through how the Indian IT services sector is coping with the changes announced as far as the H1B visa regime is concerned, but more importantly, also what the road ahead looks like. It has been a very, very difficult and volatile weekend, but thanks very much for your time. With that, it is time for us to wrap up this edition of CNBC TV18 Special Broadcast Business 360. We'll take a break. The news continues right after this. We're back in a moment.
Dreaming about me?
Love is to get lost in the look. Unlimit Love B6 Pack 2 starts at 21.9 lakh.
This is Network 18 and you're watching CNBC TV18.
Love is nothing without the thrill. Unlimit Love. The B6 Pack 2 starts at 21.9 lakh.
This is Network 18 and you're watching CNBC TV18.
Love is nothing without the thrill. Unlimit love. The B6 Pack 2 starts at 21.9 lakh. Mahindra Electric Origin SUVs.
When the market moves, we don't just report, we decode. From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV18 Market Central for your daily source of market intelligence and wealth creation with a commitment to doing it right.
This is Network 18, and you're watching CNBC TV18.
CNBC TV18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
The market-facing department of the Government of India, the Secretary of DPAM right here with us. Mr. Chawla, what a pleasure. Thank you so much for joining us here. Before I talk to you about disinvestment and the disinvestment roadmap, I want to understand from you the broad picture within North Block at this point in time with the rollout of the GST, with the income tax cuts that were given by the government. The clear effort and message seems to be, as we heard from the Prime Minister yesterday in his address to the nation, boost consumption, drive consumption. The budget-making exercise is going to start shortly, Mr. Chawla. How does all of this stack up on balance as you get into the budget-making process?
Thank you. Honourable Finance Minister will speak about it in more detail in the evening. I'll just make two supporting comments. One, our government is providing a balanced support to the economy. And balanced support includes support to private consumption, and which, as you very rightly said, includes both the income tax relief that was given in the budget and this great GST 2.0 reform, which is being rolled out and which was announced by the Honourable Prime Minister, both from the Red Fort and yesterday. Secondly, we have not forgotten investment. We've not forgotten about productive investment and the need to increase the productive capacity of the economy. In spite of global headwinds, the world is going to grow, say, at 3% or even lower. If we can grow double that in real terms and maybe exceed that, and that is what the early data shows, we should be thrilled. That is my suggestion.
Well, suggestion and point taken, sir. Let me now address the issue of disinvestment and what the government is likely to do as far as the disinvestment roadmap is concerned. You know, I talked about the markets, and the Indian markets have, of course, faced their own degree of volatility on account of the fluctuation of FII inflows, but that's been offset by very strong domestic institutional interest and domestic institutional investment into the stock markets. There really has been, in a way, a democratization of the Indian capital markets that we've seen. How does your department, how does the government intend to leverage what we see happening in the market? What can we expect? More public sector companies doing OFSs? Are we likely to see more IPOs? What can we now realistically expect?
Good question, and I entirely agree with you on the observation. The first dose or the first dose of financial inclusion was Jan Dhan, was Aadhaar, was UPI, what is globally called the India Stack. The second big structural change that has come about in our economy is this great democratization of our capital markets. And as you know, the foreign institutional investors keep moving in and out. They have their own sentiments. Last year, they gave us a tough time. And this year as well, you know, in the last few months, there has been great nervousness because of the reasons that you well know. To great comfort and great relief, the domestic institutional investors have become part of our capital markets in a very organic way and in a very democratized way. And if I can just quote you numbers, just say last closing financial year, if the FIIs were maybe slightly negative in the net sense, the domestic institutional investors poured in 6 lakh crores of savings and into the capital markets. So we have moved away from that era where everyone just kept money in fixed deposits and provident funds. And mind you, almost 2/3 of our domestic institutional investments, the mutual funds and the, more high net worth individuals, almost 2/3 of it is just individual investors. And what they poured in as 6 lakh crores is almost twice as the 3-year moving average, which is again twice of the previous 3-year moving average. And this year, they say from January till August, again, as the FIIs in a net withdrew 1 lakh crores, the domestic institutional investors poured in 5 lakh crores. And that is why our capital markets are the best performing world over. We have overcome the headwinds, and you can see they're now stable and looking forward to what today you call reforms reloaded.
So what can we expect as far as your pipeline is concerned, sir, both in terms of IPOs, in terms of public sector enterprises, public sector banks needing to meet the minimum float norms that the regulator has in place? Give us a timeline of what is on the anvil.
You can expect from us honest gratitude to the small investor.
Can you put a number to that, sir? What does that mean exactly?
So essentially what that means is that we started with a few market stake sales at the beginning of the year. We held up a bit in the days of nervousness, but as markets have stabilized, we will bring in value creation opportunities for small investors. We will bring in more OFS, we'll bring in minority stake sales, we'll bring in maybe a few IPOs, and we will speed up this journey. And I will also congratulate and thank CNBC TV18 because you have helped us connect the policy space, the market space, the investors together in such a beautiful manner.
Well, thank you very much for that, and we look forward to being able to continue to do that, sir. But, you know, so the second half of the year, IPOs, minority stake sales, and OFS, you know, do you intend to make that disinvestment target of 47,000 crore rupees, or perhaps this time, for a change, beat the disinvestment target as well?
Fingers crossed, beat it this year.
Beat it this year. You're feeling confident about that?
Absolutely.
IPOs, you know, on the insurance side, are we likely to see IPOs from the insurance companies? Are we likely to see IPOs from the defense space? Because that's a space that the markets are at this point in time fairly excited about. Where could we see the next set of IPOs coming in from the public sector?
It would not be fair for me to name individual companies.
You can give us a sector.
Yes. But broadly speaking, what you said are the right sectors. And in these sectors, you will see various forms of minority stake sales through various methods, the SEBI-approved methods. And we, as you said, have a good target in mind and maybe exceed it so that all these small investors who have reposed their faith in us, we repay the gratitude back to them.
So how do you then respond, sir, to the comments that have come in from many market observers and market watchers who say that, look, the disinvestment story in India is dead?
I would refute that very strongly. You know, we tend to pick up stereotypes very quickly. What is disinvestment needs to be understood very carefully. And if you see the evolution of this policy 25 years ago, when this department of the government was founded, it has been through four phases. The first phase was 1999-2004, which was a learning phase, or you can say an experimental phase. The second phase, that is 4 to 14, was a phase of political constraints or coalition constraints. That is a better word. And of course, the strategic disinvestment took a backseat. But the department continued with minority stake sales. The department continued to engage with the capital markets. The third phase, which is 16 to 21, we would say was the revival phase, when strategic disinvestment was revived. And revived in the right earnest, because you see, and the fourth phase, which is 21 onwards, which is called the Atmanirbhar Bharat PSU policy, is a phase of integrated disinvestment policy. And what that means is that disinvestment and closure are two sides of the same coin. At a micro level, they may look very different, but at a macro level or in a general equilibrium framework, they both create greater space for the private sector. And if you see, as many as 50 public enterprises have been taken up either for disinvestment or closure in the last 50 years. And that has yielded dividends. You see such an exciting private sector manufacturing growth. But we must not forget that public sector also has a fair, bona fide role to play in our economy. There are certain strategic sectors, there are certain public goods, there are certain public services, there are issues of inclusion which are not for profit in nature. That is where, and of course, now in the present global framework, maintaining the security of our global supply chains, of our raw materials, of our minerals, is equally important. And therefore, when we talk about the disinvestment policy today, it means public sector does its job that is due to it, the private sector does what is due to it, and we share wealth and value that public assets create with the people of India, with the citizens of India, and with our small investors.
So let me just push back a little bit on that, because the banking sector, for instance, the expectation was that we would see privatization. That is not the case. In fact, we have the DFS secretary telling us that the government has no intention of bringing down holdings under 51% at this point in time. Telecom, another sector where the government has decided that from a strategic point of view, it does not intend to disinvest. So which are the sectors where strategic disinvestment is likely, where there is still an intent and an appetite to go forward with strategic disinvestment?
I would not like to comment beyond my pay grade.
So this is very much your pay grade. You're going to have to do this.
Okay, let me put it this way. I would not like to, say things which are beyond my immediate domain. But all I can assure you is that all major public sectors, including the financial sector, which is the banks and the financial institutions, are part of our disinvestment framework. You may see one or two big strategic disinvestments, but you may see many more, maybe half a dozen OFS or follow-on offers or different forms of minority stake sales.
So half a dozen minority stake sales by way of OFSs, etc., but one or two strategic disinvestments. Let me guess which one or two of those strategic disinvestments it could possibly be. IDBI Bank, so we're talking about reforms, reloaded and accelerating reforms. It's been a disinvestment in the making for over a decade now. Are we going to close it this financial year?
Hopefully, yes. Honorable Finance Minister said it in an interview recently, and we are working hard day and night to make it happen.
By when will you invite the bids for IDBI Bank?
The only timeline given out in the media is end of the financial year. A lot of things happen and are done outside the media glaze. So let the interested parties wrestle it out.
Speaking of interested parties wrestling it out, sir, would it be fair to assume that the foreign interest is higher than the domestic interest, specifically as far as IDBI Bank is concerned?
No comments.
I'm trying my luck to extract as much as possible from you. So IDBI Bank, of course, as you stated, is being targeted for this financial year. What could the second candidate be, sir, from a strategic disinvestment point of view?
Wait and watch. You will hear the announcement at the right time, and we'll make the announcement through you.
You'll make the announcement to us, so we will hold you to that, sir.
Sources are indicating to CNBC TV18 the broad intent in the government is to reducing the rates, and it is likely to propose to keep as many as commonly used items in the 5% slab. What we are given to understand from sources is the fact that the industry has written to Finance Ministry seeking some key changes in the GST structure to expand the tax base. Well, in what could be a major overhaul of India's indirect tax regime, the government is likely to propose a simplified three-rate structure in the GST regime in the upcoming GST Council meeting, potentially eliminating the 12% slab.
The government is considering GST relief for a slew of sectors, including textile and the medical sectors.
GST Council meeting on 3rd and 4th of September will have to give an approval paving way to what PM mentioned to a two-slab structure, that is 5% and 18%, and a special rate of 40%. Well, the upcoming GST Council meeting on 3rd and 4th of September is likely to see a major GST overhaul, especially trying to give a consumption boost to the domestic economy. Firstly, a unanimous decision moving from a four-slab structure to a two-slab structure and a special rate, 5%, 18% to kick in from 22nd of September.
I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18.
Well, thank you very much, ladies and gentlemen. We continue the dialogue and the conversations here at the Reforms Reloaded platform, and it is my pleasure and privilege to welcome here the Chief Economic Advisor, Mr. Anantha Nageshwaran. Thank you very much, sir, for joining us here this afternoon. Let's start with GST as well as the impact that the government hopes this GST cut will provide as an impetus to the economy. What's your own expectation? Do you believe that you now feel confident enough to review upwards your growth projections for the economy, or do you believe that the band that you had articulated in the economic survey still holds?
No, I think the GST 2.0 is a very significant landmark reform. I am very confident that under the circumstances it will provide a very significant boost to domestic demand, because if you look at the total amount of taxes that is estimated to be foregone is exactly the amount of savings that the households are making, coming on top of the direct tax relief or concessions made in the budget. And then if you sort of take in the multiplier effect, it will definitely add quite a bit to the GDP numbers. While I should actually be looking at revising my numbers upward, given my cautious nature, I will simply say that I am more comfortable now that the final number, which we have given a range, 6.3 to 6.8% in real terms, I'm more comfortable now in saying that we will be tending towards the upper end of this range rather than the lower end of this range, considering what's happening on the external front. So that is the extent to which I am prepared to sound more relaxed and confident at this point. But once second quarter number comes, then we will revisit the estimates.
No, we'll take that, the higher end of that band that you had laid out in the economic survey. But if we could just understand the stimulus provided by both the income tax cuts as well as the GST benefits. The Prime Minister gave a number of 2.5 lakh crore rupees when he addressed the nation yesterday. What's the estimate that you're working with? Because I'm sure that that will go into the budget math as well.
No, I think his numbers are quite appropriate, taking into account both the direct and the indirect taxes, because especially focusing on the indirect tax cut, GST 2.0, it's a combination of three components. One is the reduction in rates from, many categories going from 18 to 5 and the 12 becoming 5, etc. That is one major chunk. The second chunk is the withdrawal of the compensation cess. These two are very positive to the households. The small minus is the one where few categories where the rate goes from 28 to 40. So the final tax savings is the first two components minus the third component, and that number will be upwards of 1 lakh crore. And then if you really assume a marginal propensity to consume, as they call it, MPC in the economist jargon, which basically means depending on how much households consume, then it leads to further income growth. And so 2-3 rounds of multiplier effect, then the total impact on the economy will be even more than 2.5 lakh crores. So I think what the Honorable Prime Minister said was purely the static estimate of the tax saved for the households. But the impact on the economy can be bigger. But of course, we know that there are other uncertainties and other factors which may dilute some of this translation of the savings into aggregate demand or GDP growth, as we call it. But the total impact is of this order of magnitude between the direct tax relief and the indirect tax relief put together.
I'll come to the uncertainties that you alluded to in just a second, but I just want to continue with the GST conversation and talk about the impact on states and state finances, because many states came out and said that they were concerned about the revenue impact that they would have to face. As you look at how things are panning out, and we've just seen the CAG numbers also come in as far as state revenues are concerned, what's your own indication, considering the fact that there is no longer any compensation cess?
So, look, I mean, in fact, former RBI Governor C. Rangarajan and Mr. Shanmugam, former Finance Secretary of Tamil Nadu government, wrote an article before the GST Council met about 3 weeks ago as to how well states have done with GST. And they particularly pointed out that the producing states, which were concerned about GST impacting them adversely, actually have ended up doing much better. So that's one. The second point I would like to make is GST rate, the revenue neutral rate, which was around 15% when GST came into being, actually has been coming down. even before this happened. So by last year, it was down to 11% something.
Yes.
So there's a 4%. Every time the revenue neutral rate or the effective GST rate came down, but the annual average collection actually kept going higher and higher. So you already have a track record where the reduction in the GST rate, effective GST rate, did not result in decline in GST revenues. But revenues were having a step-up function every year. And this happened even in 2019, before the election, sometime in February, March or April, I don't remember the exact month, when the GST significant reliefs were announced, there was a concern that it would lead to a decline in revenue. But immediately after the elections, the monthly numbers picked up within no time. So these two examples, I think, give us encouragement that the volume growth will make up for the static calculation that, as the rate drops, the revenue collections will drop because the volumes will go up. And the last point I want to make is, last year I wrote a paper co-authored with the Joint Secretary in the GST Council. We both wrote saying that whenever UPI transactions they pick up, they have a very high correlation with GST revenues. And UPI transactions are growing,
record highs.
Growing at 20 to 30% per annum year on year every month. So the rise in UPI transaction is actually a very good harbinger of GST revenues continuing to rise, and with the rate cut, the volume effect will dominate. So we shouldn't be overly concerned because the track record is there. Rate reductions have led to more formalization rather than less formalization, and that means more revenues.
That means more revenues,
more
and
transactions,
hence, more transactions, and hence you believe states have little reason to be concerned at this point in time. Which brings me to the question about the government's own fiscal math. We are, of course, getting into the budget-making exercise. Do you believe that this will have any impact as far as the government's own fiscal math is concerned?
I think we are confident that the final number will be 4.4% of GDP, which is the gross fiscal deficit. We have had good non-tax revenue growth, and overall revenue growth is on track in comparison to last year's numbers. And we feel that the festival season will last all the way until the end of the year because of successive, the Diwali festival spilling over towards Christmas and New Year, etc. So we are confident that the fiscal math will hold up very well for the current financial year.
The Q2 numbers should be out shortly at the end of this month.
Q2 of the GST numbers, you mean?
No, GDP.
GDP for the second quarter will come only in November.
November. That's right. That's right.
It comes only end of November.
Correct. Correct. But what's the expectation there on the back of the data available so far?
No. I think I don't want to sort of. What shall I say, jinx the GDP number. But from whatever we have seen in the first 2 months of July and August, the second quarter numbers look very encouraging. Very encouraging. We may be getting closer to the 7 handle. Even for the month of, even for the second quarter, notwithstanding the tariff that came into effect from August 3rd week onwards, the fiscal second quarter growth numbers are looking quite promising based on the high frequency indicators we track. But of course, that is still only about 1.5 to 2 months of data. So we have to wait and see how much, how did September fare, etc. But we're sort of quietly hopeful that the second quarter has maintained the momentum that we saw in the first quarter.
And so closer to the 7% mark is what you're hoping for, on the back of what the information you have.
I'm hoping for, rather than saying I'm predicting it. I'm not predicting it.
Fair point.
I'm simply saying, based on the trends I have seen, it's the number that I hope for. Yeah.
Okay, yeah. We'll take that. So you talked about the tariff impact, and what is the expectation if this were to continue? I mean, the hope is that we will be able to arrive at a middle path, and there will be a conclusion to the trade negotiations that are underway. We don't know whether that will result in 25% of the additional tariffs being done away with. But if 50% continues for the foreseeable future, what will the impact be on the economy?
I think it will have an impact. I think for this year, maybe obviously it will be slightly muted because half the year went away before the tariffs kicked in. And we also achieved 50% of our annual merchandise export to the US by August. Yes. So this year the impact will be I mean, but then it will be diluted or compensated for by the GST cut, etc. So it will be very difficult to give you a net effect. Let's assume that, so we have to make some simplifying assumptions. If the GST rate reductions were not there, based on what we knew at that time, by the end of August or something, we could have said this year's impact will be about 0.4 to 0.5% of GDP reduction. And next year, it might be, I'm saying reduction from what, you might ask. Reduction from the trend growth rate of 6.5%.
Right.
That is what we would have said. And next year, it would have been closer to 1%.
Right.
But again, now that the GST rate reductions have happened, it might actually be a lower impact than what I just now mentioned.
Since we're talking about the impact of the tariffs, and that is on goods so far, but what we have seen over the weekend is the first indication of the Trump administration now trying to go after services. H1B is the first move that's come in. Of course, there have been clarifications that the administration has put out, which have sort of provided some relief to what was expected as the worst case scenario. What is your impression, assessment of the impact of this, especially when we talk about remittances, etc.?
No, I think it's still very early days because, as you said, clarifications have been issued and 2/3 of the annual visa issuances is pertaining to renewals. So, and that is not affected by this new announcement. And I think the fee also, if I'm not mistaken, I think NASDAQ has clarified.
It's a one-time.
No, not only that. I think it kicks in from 2026.
Yes, from the next lottery. That's correct.
From the next, which is 2026.
26, correct.
So I think in that sense, the impact will not be immediate. And I think there will be, by the time the next lottery comes around, I'm sure there is plenty of room for the American companies and the Indian companies to figure out ways to deal with this, etc. So I think it is still, having seen the announcement only in the last couple of days or so, it is difficult to give you a quantified impact of what it would mean for remittances or for services sector, export growth, etc. But again, considering the clarifications issued and that it is coming into effect from 2026, and there is much these days, that's too long-term a period, too long-term for us to comment on. I wouldn't be, anxious at this point about the impact. Yeah.
While we've seen many changes between decisions that have been taken by the Trump administration and eventually what gets rolled out. But, the momentum that seems to be building on going after services, the Hire Act, of course, is more a private, almost akin to a private member's bill at this point in time, which talks about a 25% tax on outsourcing. But the possibility or the probability of that, does that seem to worry you, concern you now?
No, I think we have already enough on our plate to think about. So I don't want to add hypotheticals also to this list. And anyway, as the moment, it is a private members' initiative. It has to get through the Senate, and then it has to get through the House, and then it has to reach the President's desk. So there is plenty of steps for that process, for that particular piece of legislation to make its way through the Congress and to the President's desk. So let's wait for it to play out rather than sort of reacting preemptively.
No, I completely agree with you. But, the impact of all of this, especially as far as foreign direct investment is concerned, and that is something that, we've been trying to attract FDI across sectors into the country. Given the uncertainty, the volatility, the unpredictability, what sort of an impact do you believe this could have in the medium to long term on FDI?
I think the operative words in your question is the medium to long term. In the medium to long term, I think there will be some via media found, and I don't think it will have an impact on the FDI numbers. In the short run, yes, people will wait to see some sort of a resolution to this situation. And if anything, if the Indian system, by that I mean both the public and the private sector, if we are able to use these developments as opportunities for changing the business model on the part of the private sector, or for the government to do what it is doing in terms of focusing on structural reforms like GST, deregulation, etc., they may actually end up as catalysts for higher FDI. And if you look at the first quarter numbers, April to June, the gross FDI flows were $25 billion, so annual run rate of $100 billion at the moment, compared to last year, which is $80 billion. billion. So I think the investment interest from whatever I have seen, people who have visited us from other countries or even from the United States themselves, the picture of attractiveness of India as an investment destination or a manufacturing destination as an alternative to in the overall China Plus One framework, I haven't seen any diminishing of that interest.
Even with the 50%?
Even with the tariffs, yeah. Yeah, even with the additional tariff, etc., the medium to long, that's why I said the operative part of your question was the medium to long term. The medium to long term plans or the attractiveness of India, in the conversations I have had in the last 1 month, I haven't seen, it has been very unhesitating, very unambiguous in what they said. India remains a top investment destination for them.
You talked about never missing a crisis as an opportunity to reform, and we're perhaps seeing that play out starting with the GST. The economic survey that you presented had a lot there in terms of what the government needs to do on deregulation, the ease of doing business, and so on and so forth. We've got the government set up committees under the Cabinet Secretary to look at exactly that. What would you now prioritize in light of the measures already undertaken, but given the need of the hour today with the global uncertainty being the way that it is, what would you prioritize today in terms of next steps?
No, I think the policy steps apart from the three important boosts we have given to domestic demand, direct taxes, indirect taxes, and income tax simplification, etc., now the other thing that we are focusing on is the deregulation part, because our goals are to boost private capital formation and get manufacturing share of GDP up and increase the share of small and medium enterprises in this. All these three goals are well served by deregulation, not just at the union government level, but also at the state government level. So I think the next important policy agenda would be to get this deregulation committees to submit their reports and start acting on them immediately. Apart from that, yes, there is emphasis on innovation, R&D, but that is more a private sector responsibility than a public sector responsibility. There, the government has done its bit by notifying the Anusandhan National Research Fund and the Research and Development Innovation Fund. No, they have to become active. They have to have the governing structure in place and get to start funding research ideas and so on. The other important thing would be to get our energy transition and energy security in place. I think we have, in the budget, we announced that we will open up nuclear energy for the private sector and remove the civil nuclear liability provisions in the law, etc. That would be, in my opinion, an important area. And the third one, which we are doing already, again, it is a work in progress, because UGC, for example, 2 years ago notified simplified norms for foreign universities to set up shop here. Yes. But in general education, both school and higher education, we have a lot of input-based requirements. I think those sectors now need opening up for more competition, more innovation, focus on outcomes. I think just as, we talk about external developments, providing the impetus for change, the infusion of AI into the learning and teaching process will also trigger these reforms. So I would say, from a structural reform perspective, focusing on education and skilling will be more important now that we have taken care of the demand aspect, and then the deregulation, ease of doing business. The third important bit is the human resources. And that is where I would think we will be focusing on, and we are doing that. Let's start to ramp it up further.
Okay, ramp that up further. I want to go back to the demand issue that you just spoke of. You said that now that we've taken care of demand, what does that mean in terms of investments? What's the sense that you get in terms of a further pickup on private investments? You've, of course, been talking about the fact that we've been seeing green shoots emerge on the private investment side. Right. But, given capacity utilization across sectors, what's the indication on that front? So, frankly, if you look at post-COVID trends, we have had 4 completed years of data. 21-22, very big ramp up in private sector spending. Naturally, it was a sort of a bounce from the 2021 contraction. And 22-23 wasn't bad, but obviously a bit lower. It was 23-24 that was disappointing. And 24-25, actually, from what I gather, I think those numbers are going to be good. So if you, we will get to see it only in February next year, the breakdown. But I think the fact is, therefore, you would have had 2 very good years, one moderate year, one disappointing year post-COVID. And that isn't a bad record, because considering the circumstances, higher interest rates in the world in general, the Ukraine-Russia conflict, and supply chain disruptions in semiconductor chips, etc., the overall pace of capital formation in India at around 30.4% of GDP, it's not something concerning, in my opinion. So, and the biggest contribution the government can make for the investment growth are 2. One is to provide a platform for demand to rise, which is what will lead to capacity build-up on the part of the private sector. The second is the fiscal prudence and fiscal stability, because that brings down the interest rates. Yes. And government's borrowing cost has dropped by about 250 to 300 basis points in the last 10 years. And that naturally brings down the private sector's borrowing costs. So basically, making your investments easier to finance and providing the underlying demand conditions. And third, by continuing to invest in ease of doing business, I think these are the 3 building blocks of boosting capital formation. And all of them are in place right now. Okay, all of them in place right now, and you expect a further pickup as far as capital formation is concerned. That's right. Well, speaking of movement, let me get your take on the movement of the rupee and what you make of that, as well as the moves in the bond markets, global as well as here in India, and the interest rate trajectory as well. I know the MPC's meeting, you won't comment on that, but at least as far as the rupee and the bond market is concerned. No, I think I'm not too concerned about the rupee's current sort of recent weakness or current levels per se. It's all right. Obviously, we have
ample foreign exchange reserves and we have very low external debt. So it's not that the rupee is vulnerable in any particular manner. It is just maybe the current demand for dollars or the reduction in the inflows on the portfolio side may have contributed to this weakness. So I'm not worried about the one.
And does it actually also help offset some of the, at least as far as the exporters are concerned?
To a limited extent, it's actually a good thing because if the Indian rupee is depreciating on the back of a depreciating dollar, it does impart a certain competitiveness in the near term. But of course, anything that is overdone will be a challenge. But that is not something we are facing right now. The interest rates, yes, I think. The 10-year bond yield went to 6.6, but we are now hovering around 6.5 or 6.45. I think it's still room for it to go down, and it will go down because right now maybe the market is concerned about second half supply and RBI's monetary policy stance and what will be the fiscal deficit, etc. And as I said, we are confident of maintaining the fiscal deficit. The second half market borrowing will be unchanged, etc. And I think we will know what the Reserve Bank decides. So I do believe that the Indian bond market is a pretty good opportunity for investors at the current 10-year yield levels. The third point was about?
Inflation.
Oh, I think, frankly, if you ask me, until the end of next calendar year, by and large, I see pretty benign inflation trends. I know that I am speaking a little too far ahead because next year's monsoon will play an important part. But assuming that it's a normal monsoon, I think then we are looking at fairly benign inflation until the end of the next calendar year.
Until the end of the next calendar year. So what will that then mean as far as the business of inflation targeting is concerned? The RBI discussion paper is out. I don't know whether the government has sent in its feedback or not yet. No?
No, I think we haven't responded officially, and I don't think it will serve any purpose by commenting on it in public at this point.
But do you believe a status quo perhaps is warranted, or?
I suppose because on the face of it, as long as the central bankers have the flexibility and are willing to exercise it and not be doctrinaire about it, then I think the framework, as long as the framework doesn't become a sort of a constraint, then it's fine. Because sometimes once a framework is in place, disrupting it also will send confusing signals to investors.
So a status quo, even though you haven't officially sent in the feedback yet.
I don't know about that. That is a question you need to ask Secretary Economic Affairs. It's not my prerogative. I mean, we did write about it in the economic survey last year in a conceptual manner, discussing the pros and cons of inflation targeting for a developing country like India. But having written that, I would also acknowledge the fact that once a framework is in place, you have to be very careful about disrupting it also.
Well, fair enough. Let me end by asking you, you are, of course, going to be presenting the economic survey come February next year.
January.
And I would imagine that we'll get some sort of an update from you on the measures already undertaken, especially on heads like deregulation.
Yeah.
What could that potentially look like? How much ground has been covered?
No, I think it will be unnecessarily spoiling the whatever little fun people have in reading economic surveys. I don't think I call it a fun document, but anyway, but whatever little surprises.
It's a voluminous document for sure.
Sorry?
It's a voluminous document for sure.
Exactly. So whatever little surprises, I don't want to spoil it by talking about it right away. But having written about deregulation, it's only natural for us to write about the progress that the government has made. Not just the government, but the governments around the country have made in the last 1 year. That will be something that we will cover in the economic survey.
Well, we look forward to the next edition of the economic survey. CA, many thanks for joining us here on Reforms Reloaded. Ladies and gentlemen, a big round of applause for the Chief Economic Advisor, Anantha Nageshwaran. Thank you very much for your time.
अब सिर्फ 5% और 18% के ही टैक्स स्लैब रहेंगे। इसका मतलब है रोजमर्रा के इस्तेमाल की ज्यादातर चीजें और सस्ती हो जाएगी। खाने पीने का सामान, दवाइयां, साबुन, ब्रश, पेस्ट, स्वास्थ्य और जीवन बीमा, ऐसे अनेकों सामान अनेकों सेवाएं या तो टैक्स फ्री होगी या फिर केवल 5% टैक्स देना होगा। साथियों, पिछले 11 साल में देश में 25 करोड़ लोगों ने गरीबी को हराया है, गरीबी को परास्त किया है और गरीबी से बाहर निकल करके 25 करोड़ का एक बहुत बड़ा समूह नियो मिडिल क्लास के रूप में आज देश के अंदर बहुत बड़ी भूमिका अदा कर रहा है। अब गरीब को, नियो मिडिल क्लास को एक तरह से डबल बोनांजा मिल रहा है। जीएसटी कम होने से अब देश के नागरिकों के लिए अपने सपने पूरे करना और आसान होगा। घर बनाना, टीवी, फ्रिज खरीदने की बात हो, स्कूटर, बाइक, कार खरीदना हो, ये सब पर अब कम खर्च करना होगा। आपके लिए घूमना फिरना भी सस्ता हो जाएगा, क्योंकि ज्यादातर होटल्स के कमरों पर भी जीएसटी कम कर दिया गया है। अब सिर्फ 5% और 18% के ही टैक्स स्लैब रहेंगे। इसका मतलब है रोजमर्रा के इस्तेमाल की ज्यादातर चीजें और सस्ती हो जाएगी। खाने पीने का सामान, दवाइयां, साबुन, ब्रश, पेस्ट, स्वास्थ्य और जीवन बीमा, ऐसे अनेकों सामान, अनेकों सेवाएं या तो टैक्स फ्री होगी या फिर केवल 5% टैक्स देना होगा। साथियों, पिछले 11 साल में देश में 25 करोड़ लोगों ने गरीबी को हराया है, गरीबी को परास्त।
Hello and welcome to Business 360. I'm Ashmit Kumar. Here are the headlines that we're tracking this evening. GST rate cuts kick in from today. Prices of kitchen staples, medicines, electronics, automobiles and others get cheaper. Prime Minister Modi bets on tax cuts, accelerating growth and resulting in savings of 2.5 lakh crore rupees. Stock market slide in late trade. Sensex loses over 450 points. Nifty clings on to 25,200. Midcaps see sharper cuts compared to the blue chips. IT stocks stumble after US imposes a $100,000 fee on H1B visas widely used by Indian nationals. Trump administration clarifies that the fee is a one-time payment and applies only on new applicants. Several companies hint at limited impact, but concerns on margins and growth linger. Commerce Minister Piyush Goyal in Washington for trade talks weeks after conciliatory statements from Trump. Chief negotiator Rajesh Agarwal also accompanying the minister. Foreign Minister S. Jaishankar scheduled to meet his American counterpart Marco Rubio in New York ahead of the United Nations General Assembly. India's GDP growth will be near 7% this year after the GST cuts, as Chief Economic Advisor Ananta Nageswaran expects revenue growth to remain on track and is confident of achieving 4.4 fiscal deficit target. That's an exclusive. Government is hopeful of exceeding the divestment target, says DPAM Secretary Arunish Chawla. Also expects dividend from PSUs to exceed 1.2 lakh crore rupees mopped up last year. Says 1 or 2 strategic divestments and listings of some PSUs are on the cards. That's another exclusive. United Kingdom, Canada and Australia, part of the G7 groups, formally recognized Palestine's statehood ahead of the annual United Nations General Assembly. France likely to follow suit, along with nations including Belgium, Malta and New Zealand. Israel Prime Minister Netanyahu's response says there will be no Palestinian state west of the Jordan River. The GST rate cuts have kicked in from today. Prices of kitchen staples, medicines, electronics, automobiles and others are set to get cheaper. In a televised address, Prime Minister Narendra Modi said that the GST reforms will accelerate India's growth story and attract investments. Prime Minister Modi also said that the tax cuts would result in savings of 2.5 lakh crore rupees. The new GST overhaul brings most goods and services which were earlier in the 12% slab into the 5% slab. Around 90% of the goods which attracted a 28% GST have now been shifted to the 18% slab. However, the new GST rate rationalization is expected to have a revenue impact of 48,000 crore rupees.
इस जीएसटी बचत उत्सव में आपकी बचत बढ़ेगी और आप अपनी पसंद की चीजों को और ज्यादा आसानी से खरीद पाएंगे।
मैं मानता हूं ये बहुत बड़ा कदम है और इससे जनता का भरोसा बढ़ा है कि अगर हम टैक्स भरकर सरकार की नेट को बड़ा करते हैं तो सरकार टैक्स की कटौती कर फायदा जनता को ही पहुंचाएगी।
The sentiment is going to improve. Because of the sentiment, the demand is going to improve. Because of demand, investments are going to improve. Because of investments, I think the employment is going to improve. And Indian economy is really going to benefit. That's what I feel.
Prices of all automobiles across India, across segments, have come down. In some cases, they have even been reduced by auto dealers and auto companies, much beyond the relief which has been given to customers as far as the tax reduction is concerned.
GST benefit के साथ-साथ कंपनी ने स्कीम भी डाली। 50,000 रुपए की कंपनी ने स्कीम भी डाल दी और लगभग 60-70 हज़ार रुपए का इसमें आपको बेनिफिट जीएसटी का भी मिलता है।
तो जीएसटी का बेनिफिट तो मिल ही रहा है, आप लोग एडिशनल बेनिफिट भी लोगों को दे रहे हैं।
यस,
अभी जो जैसे विंटर्स में यहाँ पे एसी की डिमांड रहती है हॉट एंड कोल्ड की, तो उसमें हमें फ्यूचर में जो है इंक्रीज का जो है अंदेशा है। और रही एलईडीज़ की बात, तो उसमें भी जो है सेल आउट हम एक्सपेक्ट कर रहे हैं कि इस बार बढ़ जाएगा एज कम्पेयर टू लास्ट ईयर।
सो वी आर डायरेक्टली पासिंग ऑन दिस benefit to the customers. We are communicating it in our in-store communication. बिल में डायरेक्ट उनका दिखेगा ये 7% प्राइस कम हुआ है and customers are really happy.
Looking from a common man's point of view, like it will definitely improve our quality of life. See, every items like milk, all the things which we consume every day. So when it comes down, it will affect the monthly bill of the household.
We are here at a popular high street market in the heart of New Delhi at Khan Market, and CNBC TV18 did a reality check. Since the new GST rates have now kicked in across the country, bringing in the next GST reforms, the retail selling points are still facing some teething troubles. The retailers, even if they are aware of this new GST reform having kicked in the country, they are unable to pass on this benefit of reduced GST rates in terms of a reduced pricing to the end consumer.
ज़्यादा आज से milk product and मिठाई from today onwards you will purchase more?
Definitely it will cost less. GST rate has been reduced, and from today the shopkeepers has to sell at the lower GST rate, and definitely the customer who want to buy, earlier he was buying 5 piece, now he will buy 6 piece.
Well, after months of weak demand, the consumer durables market may finally be turning the corner. With GST rate cuts kicking in starting today, retailers are bracing for a stronger festive season. My colleague Shilpa Ranipeta takes you through what's driving the buzz in the market.
The new GST rates are coming into effect from today, and that has made a whole host of your big ticket electronics a whole lot cheaper. Let's start off by talking about the AC prices that have cooled off. Now, GST on ACs has been cut from 28% to 18%, and analysts say that makes the AC price cheaper by nearly 8%. Now, for instance, this Voltas 1.5 ton AC that I'm standing in front of, this was earlier priced at about 47,990, and this after the GST cut has become 43,490 rupees, making it almost 3,500 rupees cheaper. All televisions above 32 inches have also gotten cheaper. Now, these 55-inch TVs, for instance, that you see behind me have become cheaper by anywhere between 7,000 to 8,000 rupees, whereas 43-inch TVs are now cheaper by 3,500 to 4,000 rupees. Now, retailers say that despite speculation around GST rates of refrigerators and washing machines, those have actually not seen any price changes, though dishwashers are another category where there has been a price drop. Now, remember, as we know, mobile phones and laptops also did not see any change in GST rates. Now, this comes at a time where the consumer durable industry saw a complete washout in the summer earlier this year, the weakest in a decade, and a poor festive push in the previous season as well. So now, with the GST affordability, pent-up summer demand and the festive push, the second half of this year is likely to be a bumper for the consumer durables industry. And as for consumers, this is the time to upgrade. In Mumbai, Shilpa Rani Peta.
Well, DPAM Secretary Arunish Chawla has said that the government is hopeful of exceeding the divestment target. Speaking to CNBC TV18 Shireen Bhan, he said that he expects dividend from PSUs to exceed 1.2 lakh crore rupees mopped up last year. He added that strategic divestments and listing of some PSUs are also on the cards.
As markets have stabilized, we will bring in value creation opportunities for small investors. We will bring in more OFS, we'll bring in minority stake sales, we'll bring in maybe a few IPOs, and we will speed up this journey.
So the second half of the year, IPOs, minority stake sales and OFS, do you intend to make that disinvestment target of 47,000 crore rupees, or perhaps this time, for a change, beat the disinvestment target as well?
Fingers crossed, beat it this year. In these sectors, you will see various forms of minority stake sales through various methods, the SEBI-approved methods. And we, as you said, have a good target in mind and maybe exceed it. We now ensure that public enterprises who have moved bravely onto the capital markets and have won the trust of investors should pay 30% of their profit after tax or 4% of their net worth, whichever is higher, as fair dividends to small investors. And this has picked up. If you see in the last 5 years, the dividends payout by the public sector enterprises has doubled. And even though they occupy only 14% of the market cap in our capital markets, they pay 25% of dividends to the small investors. They achieved a record landmark last year. Almost 1,20,000 crores was distributed as total dividends, and we hope to exceed it this year.
India's chief economic advisor, V. Anantanageswaran, has said that he expects GDP growth to be near 7% this year after the GST cuts. Speaking to Shireen Bhan on the sidelines of the Network 18 Reforms Reloaded Summit, he said that he expects revenue growth to remain on track and is confident of achieving 4.4% fiscal deficit target.
Fiscal second quarter growth numbers are looking quite promising based on the high frequency indicators we track. But of course, that is still only about 1.5 to 2 months of data. So we have to wait and see how much, how did September fare, etc. But we're sort of quietly hopeful that the second quarter has maintained the momentum that we saw in the first quarter.
And so closer to the 7% mark is what you're hoping for, on the back of what the information you have.
I'm hoping for, rather than saying I'm predicting it. I'm not predicting it.
Fair point.
I'm simply saying, based on the trends I have seen, it's the number that I hope for. Yeah. We are confident that the final number will be 4.4% of GDP, which is the gross fiscal deficit. We have had good non-tax revenue growth, and overall revenue growth is on track in comparison to last year's numbers. And we feel that the festival season will last all the way until the end of the year because of successive, the Diwali festival spilling over towards Christmas and New Year, etc. So we are confident that the fiscal math will hold up very well for the current financial year.
Well, with that, it's time now for a short break, but don't go anywhere. More news and updates continue on the other side.
हम वो सामान खरीदें जो मेड इन इंडिया हो, जिसमें हमारे देश के नौजवानों की मेहनत लगी हो, हमारे देश के बेटे बेटियों का पसीना हो। हमें हर घर को स्वदेशी का प्रतीक बनाना है, हर दुकान को स्वदेशी से सजाना है। गर्व से कहो ये स्वदेशी है, गर्व से कहो मैं स्वदेशी खरीदता हूं, मैं स्वदेशी सामान की बिक्री भी करता हूं। ये हर भारतीय का मिजाज बनना चाहिए। जब ये होगा तो भारत तेजी से विकसित होगा। मेरा आज सभी राज्य सरकारों से भी आग्रह है, आत्मनिर्भर भारत के इस अभियान के साथ, स्वदेशी के इस अभियान के साथ अपने राज्यों में मैन्युफैक्चरिंग को गति दे, पूरी ऊर्जा से, पूरे उत्साह से जुड़े, निवेश के लिए माहौल बढ़ाएं। जब केंद्र और राज्य मिलकर आगे बढ़ेंगे तो आत्मनिर्भर भारत का सपना पूरा होगा। हम नागरिक देवो भवः, नागरिक देवो भवः के जिस मंत्र के साथ आगे बढ़ रहे हैं, नेक्स्ट जनरेशन जीएसटी रिफॉर्म में इसकी साफ झलक दिखाई देती है। अगर हम इनकम टैक्स में छूट और जीएसटी में छूट को जोड़ दें तो एक साल में हम नागरिक देवो भवः, नागरिक देवो भवः के जिस मंत्र के साथ आगे बढ़ रहे हैं, नेक्स्ट जनरेशन जीएसटी रिफॉर्म में इसकी साफ झलक दिखाई देती है। अगर हम इनकम टैक्स में छूट और जीएसटी में छूट को जोड़ दें तो एक साल में जो निर्णय हुए हैं उससे देश के लोगों को 2.5 लाख करोड़ रुपए से ज्यादा की बचत होगी। और तभी तो मैं कह रहा हूं ये बचत उत्सव है।
Welcome back. Well, the big story that we have been tracking, the Trump administration has clarified that the $100,000 H1B visa fee is a one-time charge and will apply only on new applicants. This category of visas are used primarily by Indian workers in the tech and IT sectors. The move sent shockwaves across the industry as the significant escalation in cost effectively makes these visas economically unviable. Currently, H1B visas cost anywhere between $1,700 and $4,500. Shares of top 4 tech giants, including Infosys, TCS, HCL Tech and Wipro, took a beating in trade. The 4 companies cumulatively lost market cap worth 65,000 crore rupees. Now, President Trump signed the executive order last Friday in the presence of Commerce Secretary Howard Lutnick. Lutnick put it rather bluntly, urging tech companies to, and I quote, train Americans, stop bringing in people to take our jobs, end of quote. Now, Indians are the overwhelming beneficiaries of the H1B visa program. More than 71% of the visas were granted to Indian nationals last year. China ranks a distant second with just 12%. NASSCOM has said that the clarification on fee eases immediate concerns for Indian tech professionals, adding that the Indian tech industry now has the time to enhance local skilling and hiring in the US. Among companies, Amazon has more than 10,000 employees on H1B visas, according to the US government data. TCS is second with over 5,500 visa holders, followed by Microsoft, Meta and Apple. This data is as of June of 2025. Now, the American depository receipts of Infosys and Wipro tumbled in trade after Trump's proclamation. Meanwhile, India and the United States are looking to intensify trade talks. Commerce Minister Piyush Goyal is in Washington, D.C. for the next round of trade talks. This comes after U.S. removed sanctions waiver on Chabahar port in Iran, which was being developed by India, as well as the H1B fee hike. Meanwhile, External Affairs Minister S. Jaishankar will be meeting U.S. Secretary of State Marco Rubio in New York for bilateral discussions. That's just a day before the UN General Assembly summit kicks in. Well, in fact, for more on this, Reema Tendulkar now joins us to take us through President Trump's plan and its impact on Indian tech companies. Reema.
Thanks so much for that. Let's get to the numbers straight away. Now, companies have informed the exchanges, especially the mid-cap IT companies, about the possible impact. So let's start with First Source. That's a BPO company, and they say they're not impacted at all. They've not sponsored any H1B visas last year or this year. Coforge says they filed for 65 new visa petitions. Of that, 63 were approved. Cyient, the number of employees on H1B visa stands at 6 for FY25. For Emphasis, 130 new H1B visa filings in 2025. Hexaware, while last year there was none, but overall the company has been bringing down the dependence on H1B visa. Persistent hasn't given a number, but they do say that they don't expect any significant impact on the operations or on the financials. But as you see, from these numbers which have been shared, that while there will be some impact, costs may go up in FY27, there could be some marginal impact, it's not a very big impact. Analysts point out the EPS estimate or hit could be 2, 3, 4%, and there are mitigating factors. Companies could look at local hiring, increasing subcontracting or near offshoring, and the actual impact may be even lower than that.
Now, industry body NASSCOM says that the impact of the H1B visa fee hike has been softer than feared. It was in what was their first response on the issue. NASSCOM President Rajesh Nambiar told CNBC TV18 that Indian IT companies have reduced their dependence on H1B visas by over 30% in the last few years.
Over the years, I think most of the IT companies, IT services company, IT tech companies have reduced the dependency on H1B over a period of time. So that which means that today we are looking at a much smaller issue compared to what we would have probably looked at maybe 4 years ago or 5 years ago. Good news is that this comes into effect only from the next year, which is 2026, new set of visas. So there's a little bit of a breather for companies to sort of enhance the skilling options that we have. So from the last lottery, if you go back and look at from the Indian origin companies, because there are also companies which might have headquartered elsewhere, but clearly Indian origin in many ways. So those were the companies had roughly about 15,000 or so, which was issued in 2025. This was much lower compared to what it used to be. So we came down 30% over the last 5-6 years in terms of the number of H1Bs, applied by these organizations.
Now, IndusInd Bank has appointed Viral Damania as Chief Financial Officer. Most recently, Damania was CFO for Bank of America, India. Following this, the additional responsibilities previously held by Santosh Kumar as Special Officer, Finance and Accounts, and his designation as a key managerial personnel cease with immediate effect. Kumar will, however, continue in his existing role as the Deputy CFO of the bank. We'll on to our special coverage of Reforms Reloaded, a Network 18 summit. The Rajesh Kumar Singh, Secretary of Defence, now joins us in an exclusive conversation with my colleague Parikshit Luthra.
Needs no introduction. He's someone who has been holding almost 20 to 30 meetings with the industry almost on a daily basis. He was at the DPIIT, helming the DPIIT a few months back, and he's done a lot of work with FDI, with startups, with investments in the country. So he is someone who's very familiar with the next generation reforms that the government is working on. But let me focus on the defense sector right now. And defense is going to be the major capex push of the government over the next 5 to 10 years. And that is because we don't have a choice when it comes to self-reliance. It is something that we realized the importance of more during Operation Sindoor. And since then, there have been regular meetings at the Defense Ministry to how to make sure we can bridge those gaps in our defense setup. Secretary R.K. Singh, let me begin by asking you about the very important 15-year defense technology and innovation roadmap that the Defense Ministry recently came up with. Could you give us a sense of what's going to be the value of the kind of acquisitions that we're looking at over the next 10 to 20 years?
Yeah, thank you, Parikshit, for having me here. So the previous session gave us a nice lead up to this one because defense was identified as one of the mega trends by one of the previous speakers. I think that's correct. If you're looking at it in value terms, I think you can expect in capex terms somewhere between 25 to 30 billion dollars minimum per year over the next decade, maybe a little more, I would say, rather than less. In terms of the technology roadmap, the roadmap has been sort of put out by the services in the public domain. It's available now. It focuses on technologies that are of the future, whether it is AI, whether it is hypersonics, whether it is other types of standoff weapons, it is space, various types of precision ammunition, all of those technologies that they feel would be required in the future, nuclear-powered ships, etc., etc. So yeah, it's a fairly comprehensive roadmap of where they think the world is going and where we need to ensure that we try to ensure that we leverage products and platforms from those kind of cutting-edge technologies.
Secretary Singh, when it comes to having this mega innovation and technology roadmap, how much of this are we looking to build indigenously? How much are we looking to acquire? And what's going to be the focus on indigenization?
So our current plans are that at least 75% of our capex will be spent within the country. That's our normative target. Last year, we actually did 88% of our capex within the country. It will go up and down a little bit because it depends on, in certain areas where your technology readiness level, what they describe as TRL, is fairly high, where DRDO or other agencies have developed fairly strong technological bases, then you'll probably do entirely indigenous procurement. Then there would be an intermediate category where you would need to do hopefully manufacturing within the country, but based on technology transfers from other countries. And there could be a smaller set of areas where foreign OEMs would not be willing to give you the latest technologies, and your own access to such technologies is a long way off. In those cases, you may have to, do a certain amount of, off-the-shelf global buys as well. So I would say that we need to take a fairly pragmatic look at all of these three options. But the trend should be clear. We are going to double down in terms of our indigenization efforts. 75% will be the minimum. Hopefully, we'll never go below that. So when I mentioned 25 to 30 billion every year, most of that will be spent within the country, whether it is in terms of entirely Indian design or whether it is based on some levels of foreign technology transfers as well.
Right. Just to put this into context for members of the industry sitting with us right now, investors from India and abroad, when it comes to building the capacity for new age warfare in the country, what is it that's really taking away the most of your time? What's going to be the 3 or 4 big focus area of the government when it comes to spending money on new age warfare and new age warfare capabilities?
Well, I mean, the obvious answers are different types of standoff weapons, drones, unmanned combat vehicles, including underwater drones. We also need to really focus on improving our satellite imagery so that we get real-time satellite imagery available to this country, which really depends on putting enough satellites into space, which hopefully with SBS3 will happen. In all of these areas, then there are, of course, various types of precision munitions that you need. All of these are areas where, India doesn't always have the technology, and in those are the areas where, including MALE and HALE category drones, where we will need to do some kind of technology transfer, but insist on manufacturing within the country. And I'm mentioning drones because we are just about to release an RFP for about 30,000 crores worth of male category drones, which will be made in India, and we would hope that perhaps there could be an Indian design element there, but we are open to either Indian design or Indian manufacturing with foreign technology, but either way it will be made within the country. Those are the kind of areas where we'll be doing more and more. And I mean, just to give you another example, we've, for example, whether it is missiles or whether it is different kinds of munitions, for a long time we've essentially ensured within this country that missiles are made by BDL, one public sector company. Munitions are largely made by MIL, which is another public sector company. The private sector is unable to invest partly because you've created almost a de facto reservation, or you've allowed essentially nominations to be given to these companies. The problem is that their capacity to produce is quite limited. So for long duration wars, you'll need to have much greater surge capacity, and for that purpose, we've now tried to sort of ensure that we move away from nominations, we move away from product reservations, and we create enough incentives on the basis of order visibility for the private sector to invest in all of these spaces.
Right. Could you give us a sense of what will be the requirement when it comes to having ballistic missiles, supersonic missiles in the arsenal over the next 15 to 20 years, sir? And why would you need, and explain us the need, why you would need more manufacturers in this space?
Essentially, if you see what has been happening in recent wars, you will find that the number of missiles being fired are quite huge. India, of course, followed a different path. We used it in a very calibrated way, and we achieved termination of the conflict with calibrated use of our standoff missiles. But you cannot assume that every time the duration of the conflict can be curtailed. And if it is not curtailed, then you will start running out of stocks if you don't have enough, wide industrial capacity to make missiles. If you're making only 100 missiles in a year, for example, you will obviously run short in a few, after a few months if there's a long duration conflict. So that's the kind of thing where we need to build up that very diversified, large public and private industrial base. And that is what we are aiming to do through our period of reforms, combining, supply side reforms in terms of ease of doing business with buying side, demand side reforms in terms of providing orders on a level playing field to the private and the public sectors.
You recently modified the Defense Procurement Manual, giving more visibility of orders, giving more power to the armed forces to buy and maintain their platforms and to address their needs quickly. But what would be the next phase of reforms that we can expect from the Defense Ministry?
So, as you mentioned, Parikshit, the Revenue Procurement Manual deals with the consumables that the armed forces need in terms of ammunitions, different types of spares, things like that. There, the reform is on the lines of what I mentioned, that we, where items are available, for example, on the government e-marketplace, they don't have to run around, taking approvals. They can straight away buy from GEM. Where both private and public sector capacity exists, or we want to induce private sector capacity, we remove dereservation and do things through open bidding. And here I'm talking about different types of ammunitions and artillery shells. In general, the idea is to go from any kind of nomination-based cost-plus type of contracts to much more open competitive bidding with full price discovery. And you mentioned the decentralization and the delegation of authority. Also for startups, we are trying to create in this new manual a separate section where if a startup in association with the services develops a particular product which is essentially tailored to meet the needs of the armed forces, we need to give him some assurance in terms of orders. And the idea is to give him at least a 5-year period during which he has, he kind of is allowed to sort of meet those requirements directly. After 5 years, we'll open it up because you can't tie yourself down to one guy too much. It leads to, too much of market power, and they're after some level of, price gouging as well.
The Defense Acquisition Procedure 2020, this has been under review. This was said to be the big reform of 2025. By when can we expect that? And what do you think will be the thrust of reform in the DAP rules?
Yeah, so I mentioned, I don't know if I mentioned, but in the revenue procurement manual, you're talking about an annual budget of about 1 lakh crore. The capital procedure, which is the defense acquisition procedure, is much bigger. It's almost double that size. It's about 1,80,000 crore. I'm sure it will, hit 2 lakh crores in the next couple of years. That reform process is now underway. Consultations, including with industry, is ongoing. And the target we have set ourselves is that by the end of the year, that is by December, in the year of reforms and in line with the other reforms that government is doing in terms of ease of doing business, in terms of decriminalization, in terms of other steps to reduce the compliance burden, we will, in the same light, we will make this document for capex much more simple, much more friendly to the private sector and to the startups, and sort of compress some of the process timelines to make it, to use technology to cut down, delays in areas like field evaluation trials, cost negotiations, those kind of things. So the intent is you'll have the new DAP 20 hopefully by the new year of next year, by the first day of the next year, and that will be a kind of a follow-up to the revenue procurement reform that we've just completed.
Right. Now, considering since Operation Sindoor, we've gone in for replenishment procurements, we're going in for long-term procurements as well. To what extent do you feel that the ministry is going to either meet or exceed budgetary estimates?
Well, last year for the first time we exhausted our budget. I think it is challenging to spend money in the Indian context, given the, the very elongated sort of fail-safe type of procedures that we follow in terms of collegiate decision-making, approvals at the highest level, involving, a lot of interministerial consultations. Last year we did it, and I'm sure this year also we'll do it. Really depends on how many contracts you end up signing. And last year we did a record number. This year we've already hit 3/4 of that, 1,50,000 crores worth of contracts we've already signed, or are in the process of signing if you include the LCA program. So we are confident we can do at least 2 lakh plus crores this year. And if we keep this up, then in terms of committed liabilities itself, you will ensure that the budget increasingly gets fully utilized. As you do that, as you show to the Ministry of Finance that you can really start exhausting the budget and not surrendering some of the amount every year as we used to do earlier, I'm sure you can ask for more. So it's a two-way street. Let's start confidently ensuring that we utilize our budget entirely, which I think we will do this year. And then we can, over time, ask for at least a 10 to 15% increase every year. Incidentally, the services, through their capability development plans, which they have a 5-year and a 10-year capability development plan. In all of their estimates, a 10-year increase in capex year on year is adequate to meet their requirements. And I'm pretty confident that Ministry of Finance will have no problems in providing a 10% CAGR on the present capex year to year, because given the fact that in nominal terms our GDP is also growing almost at that rate.
Right. So the recommendation from you would be to increase the defense capex in the next union budget, which is not very far, but at least 10%.
At least 10% in nominal terms. But if you're asking me for a longer term appraisal, I would say that given the geopolitical turmoil as well as the the neighborhood, which is very challenging, in a medium-term sense and before the Finance Commission, I'm going to project a bit more. So it's a 10% year-on-year right now, but with the Finance Commission, I'm going to ask for at least a 17 to 18% year-on-year increase over the next 5 years, because otherwise our share of the GDP actually has shrunk quite a bit. It's gone below 2%, and I think nobody can argue against at least a 2.5% share in GDP in the medium term, and maybe taking it further to 3%, maybe in about 10 years' time.
Right, and to keep it in line with some of the bigger developed nations when it comes to defense spending, I'd like to ask you about the gaps when it comes in our fighter jet capabilities, sir. There is a AMCA program that is on. There is a fighter jet engine program that is on simultaneously. You've explained us earlier that these are both programs which have a long 10-year horizon, and somewhere they will meet, they will merge, possibly. But how do we meet our short-term needs? There are two countries there are three countries in the world with fifth-generation fighter capabilities. You've got China, you've got Russia, you've got the United States. What are our options? Our options are only US and Russia. How necessary is it for us to take the decision on acquiring fifth-generation fighter jets immediately? What is the horizon, timeline that you could possibly give us by when the government would have to take a decision?
Parikshit, I really don't want to talk about specific platforms or procurements because that leads to too much of speculation, and these are sensitive matters. What I would say is that if you don't have fifth-generation aircraft immediately, or if negotiations are ongoing, you can still make up for it or offset any advantage that the adversary has by creating enough offensive capacity in terms of larger numbers of, say, 4 or 4.5 generation aircraft, and equip them with better weapons. Because besides the platform, it is the weapons that matter. So, yeah, I mean, we will, the Air Force has certain capability gaps that it has pointed out. The government will work on filling all of those gaps. You will find in the coming days, in terms of the procurement cycle, whether it is in terms of multiplier capabilities like refueling aircraft, like AWACS, all of those procurement decisions will be visible to you. And in terms of, the 4.5 generation fighter aircraft also, you will see some procurement decisions coming. But I'm not going to sort of second guess the decision making, because that is really not fair at this point of time to start talking about it. We should talk about procurements only at a certain time when it is cleared by the DSC or when it is cleared by the top level in government. Before that, talking about it creates too much noise, and we shouldn't have so much noise in procurements. Procurement should be done on on the basis of requirements and technological assessments, techno-commercial assessments by the services and by the acquisition wing.
Important points there, sir. Now, as you've spoken about 4.5 generation fighters, there have been reports in the media how the Indian Air Force has made a proposal to acquire 114 Rafale fighters. What stage of discussion is this? And is the Defense Ministry, is the government likely to take a decision on acquiring a large set of 4.5 generation fighters in this fiscal itself?
Again, I can't talk about specific platforms. I don't think it's appropriate because it's, it's not something that we should be discussing on a daily basis. I would only say that when the last Air Force Commanders Conference took place, after that the Raksha Mantri asked me to create an important roadmap, capability enhancement roadmap for the Air Force. We've done that. Based on that roadmap, we've started various types of procurement activities. All of those will become visible to you in the coming days. I would love to say that it can be done within this financial year, but the decision making is not entirely only at my level. But yes, I'm sure you'll see visibility on all of those items I mentioned: 4.5 generation aircraft, refuelers, AWACS, weapons, all of those. But individual decisions I will not, discuss too prematurely.
Right. I would also like to ask you how we are balancing our relationship with the United States and Russia. Russia has been a long-standing defense supplier to India. The well-known notion is that 60 to 70% of our equipment is still of Russian origin. We are trying to expand our relationship with the US, with France, with European countries, and other nations as well. During this time of trade volatility and trade talks with the US, how are we going to balance this and make sure our needs are met over the next 3 years or so?
Well, I think the Honorable Prime Minister has made it clear that the balancing is on the fringes. The main trend is actually for indigenization. And ultimately, we will either design and make our own, or we will take TOT but make within the country. And whichever country meets our requirements of this type, that means they are willing to at least technology transfer and make in India, or they are willing to, ensure that critical technologies are shared, or at least designs are shared for manufacturing. So between the two, I would say that we will take a call for individual platforms and weapons depending on, on the cost-benefit ratio for us for each of these systems. And you use the word balance, that is correct. We will balance our requirements, but at the end of the day, we will go by our service requirements of what we need. I'm sure there will be adequate opportunities in our defense budget or capex outlays for both of the countries that you mentioned. All of them have niche capabilities that the other may not have, and we will continue to display strategic autonomy in our procurement decisions by turning to both of them depending on our actual requirements.
Right. My final question, sir. You mentioned that we're looking to acquire AWACS and more future technology, including 4.5 generation aircraft. So within this fiscal, if you can just broadly tell us what would be the quantum or value of orders that can still be placed that you would be looking at?
Well, as I said, we've already signed up or are about to sign contracts worth 1.5 lakh crores this year. I would say we can probably do another 75,000 odd crores of contracts. Again, I will not discuss individual platforms, but so last year we did 2,09,000 crores, which was an all-time record. The highest ever before that was about 1 lakh crores. We'll do at least that much, if not more, this year. And in terms of division, I'm confident that the procurement decisions of this year will meet the requirements of the three services, and all of their, the division of the budget among the three of them, all of that will hopefully get exhausted.
Finally, one clarion call to the industry.
I think we should be very clear. We should have no hesitation at all. And this, again, I'm saying from the Honorable Prime Minister is very clear that there will be a level playing field for the private sector, that we will be doubling down on indigenization. The three words that he used during the Combined Commanders Conference that you mentioned earlier was, he made it out of the three words, Jai Hind, so Jai. Jai, he mentioned jointness, which is something that we didn't really discuss, but jointness, Atmanirbharta, and innovation. So those are the three pillars that we intend to work on, and that again ensures that when it comes to our budget, which is our budget spend, which is what most of our members of the audience may be interested in, you can rest assured that the bulk of it will be spent within the country, and startups will get a leg up. If they do, if they invest, if they come up with good products, we will ensure that whether it is private sector or startups, adequate orders will be made available to them. And we will treat all companies, whether they are public or private, as Indian companies first, make no distinctions among them.
Right. So jointness, Atmanirbharta, and innovation. Very important messages there, sir, that you've shared with our audience. Thank you very much for joining us, taking out time to give a sense of the next 15-year roadmap of the Indian government.
Thank you.
When the market moves, we don't just report, we decode. From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers, and guidance that builds wealth.
Nuvama presents CNBC TV18 Market Central.
For your daily source of market intelligence and wealth creation with a commitment to doing it right.
Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh. Mahindra Electric Origin SUVs.
This is Network 18 and you're watching CNBC TV18.
Dreaming about me?
Love is to get lost in the look. Unlimited Love B6 Pack 2 starts at 21.9 lakh.
This is Network 18 and you're watching CNBC TV18.
Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh.
We're keen to get a share of that pie. We already operate in UP, in Greater Noida, and that's one of the most successful. We're keen to get a share of that pie. We already operate in UP, in Greater Noida, and that's one of the most successful privatization cases of power in the private sector. And it is UP's most successful utility. So we've now begun to understand how to operate in UP. And Yogi Ji's government provides a very secure law and order, and so helps a utility for sure. Mm-hmm. We're keen and we are going to bid.
Definitely, I was told about this by a lot of my people, but I have faith in my company, and this company is built over since 1976 by my father, the chairman, and it has very strong foundations. And Apollo is just not a name; it's also the spirit.
Welcome back. The big story that we're tracking today, the Trump administration has clarified that the $100,000 H-1B visa fee is a one-time charge and will apply only on new applicants. This category of visas are used primarily by Indian workers in the tech and the IT sectors. The move sent shockwaves across the industry as the significant escalation in cost effectively makes these visas economically unviable. Currently, H-1B visas cost anywhere between $1,700 to $4,500. Shares of top four tech giants, Infosys, TCS, HCL Tech and Wipro, took a beating in trade. The four companies cumulatively lost market cap worth 65,000 crore rupees. President Trump signed the executive order last Friday in the presence of Commerce Secretary Howard Lutnick. Lutnick put it rather bluntly, urging tech companies to, and I quote, train Americans, stop bringing in people to take our jobs, end quote. Now, Indians are the overwhelming beneficiaries of the H-1B visas. More than 71% of the visas were granted to Indian nationals last year. China ranks a distant second with just 12%. Among companies, Amazon has more than 10,000 employees on H-1B visas, according to the US government data. TCS is second with over 5,500 visa holders, followed by Microsoft, Meta, and Apple. Now, this data is as of June of 2025. The American depository receipts of Infosys and Wipro tumbled in trade after Trump's proclamation. Meanwhile, India and the United States are looking to intensify trade talks. Commerce Minister Piyush Goyal is in Washington, D.C. for the next round of trade talks. This comes after US removed sanctions waiver on Chabahar port in Iran, which was being developed by India, as well as the H1B fee hike. Meanwhile, External Affairs Minister S. Jaishankar will be meeting US Secretary of State Marco Rubio in New York for bilateral discussions just a day before the UN General Assembly summit kicks in. Now, industry body NASSCOM says that the impact of the H1B visa fee hike has been softer than feared. In what was their first response on the issue, NASSCOM President Rajesh Nambiar told CNBC TV18 that the Indian IT companies have reduced their dependence on H1B visas by over 30% in the last few years.
Over the years, I think most of the IT companies, IT services company, IT tech companies have reduced the dependency on H1B over a period of time. So that which means that today we are looking at a much smaller issue compared to what we would have probably looked at maybe 4 years ago or 5 years ago. Good news is that this comes into effect only from the next year, which is 2026, new set of visas. So there's a little bit of a breather for companies to sort of enhance the skilling options that we have. So from the last lottery, if you go back and look at from the Indian origin companies, because there are also companies which might have headquartered elsewhere, but clearly Indian origin in many ways. So those were the companies had roughly about 15,000 or so, which was issued in 2025. This was much lower compared to what it used to be. So we came down 30% over the last 5-6 years in terms of the number of H1Bs, applied by these organizations.
Bank has appointed Viral Damania as Chief Financial Officer. Most recently, Damania was CFO for Bank of America, India. Following this, the additional responsibilities previously held by Santosh Kumar as Special Officer Finance and Accounts and his designation as a key managerial personnel cease with immediate effect. Kumar will, however, continue in his existing role as the Deputy CFO of the bank. And the Supreme Court has agreed to hear a plea seeking independent probe into the Air India plane crash that killed 260 people. The plea questioned the preliminary report that suggested pilot error, adding that one cryptic sentence in the report on fuel switch has caused speculation about pilot being suicidal. The plea has also sought disclosure of flight data recorder information, saying that passengers flying Boeing 787 continue to be at risk. The PIL questioned the presence of a DGCA officer on the investigation panel, terming it as a conflict of interest. The Supreme Court now has agreed to hear this petition and has stressed on the need for a free, fair, independent investigation. The Supreme Court, we understand, has issued a notice to the centre and other concerning authorities. In international news, the United Kingdom has formally recognised Palestine as a state. This move comes after Canada and Australia also officially recognized Palestine's statehood days before the commencement of the 80th session of the United Nations General Assembly. France is also expected to announce its official recognition of a Palestinian state. Israeli Prime Minister Netanyahu has warned these nations, saying that there will be no Palestinian state. He also accused these nations of rewarding terrorism. A Ukrainian drone strike killed 3 people in Russian-occupied Crimea. Moscow said that Ukrainian strikes also killed 2 in Ukraine's Luhansk, which is also occupied by Russia. Meanwhile, overnight Russian strikes in southern Ukraine killed 3 people. Ukraine said that Moscow had carried out 46 airstrikes on its territory last night. Warren Buffett's firm, Berkshire Hathaway, has reportedly offloaded all of its stake in the Chinese electric vehicle maker BYD. Shares of the EV giant tanked more than 3% in trade, making this the biggest fall in the last 3 weeks. Buffett's investment firm held a stock in BYD for almost 2 decades. The company first bought 225 million shares in September of 2008, and the stock has surged more than 4,500% since the day before the first purchase to 31st of March this year. Now, a cargo ship bound for Somalia caught fire while anchored at a Porbandar Subhashnagar jetty. The ship was loaded with sugar and rice and was headed for Somalia. No casualties have been reported so far. 3 fire brigades were deployed to douse the fire. The fire brigades eventually towed the vessel to the middle of the sea as the fire worsened. The chief reportedly belongs to Jamnagar-based HRM and Sons. And with that, it's a wrap on this special broadcast. Thank you so much for watching. News and updates will continue right here on CNBC TV18.
Love is nothing without the thrill. Unlimit love. The B6 Pack 2 starts at 21.9 lakh. Mahindra Electric Origin SUVs.
CNBC TV18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
Love is nothing without the thrill. Unlimit love. The B6 Pack 2 starts at 21.9 lakh.
Definitely, I was told about this by a lot of my people, but I have faith in my company, and this company is built over since 1976 by my father, the chairman, and it has very strong foundations. And Apollo is just not a name. It's also the spirit of our nation. It's what is carrying load in our country, which is by road to rural markets, to feed the people, to in trucks where trucks are going. It's being carried by Apollo Tires. So Apollo is a very strong company. I have no doubt in my mind that we are in it for a long term.
What does it take to build India's largest startup? What does it take to build India's largest startup platform?
Today is the 22nd of September. It's the date for the GST rates, the GST rate cuts to be rolled out, and it's also the start of the festive period. Mr. Vaidyanathan, Mohit and Santosh, great to have you join us here on Reforms Reloaded. My very first question to you, Santosh, how many Mercedes cars have you sold since morning?
Well, I landed, and before I came in, I went to our dealership on the way, and I think the excitement is palpable. You can just feel it. Our expectation is the next 8 days will record the highest ever per day car sold in history in India, for sure.
That's good to hear, but there's also a lot of pent-up demand, right? Because August was virtually no sales.
That's true. That's true. To be fair, August till 22nd, it was almost breaks on sale. So all of this has to be recovered. So for sure. But I think there is a lot of optimism that even the festive period starting October 2nd, the Dasharas and Diwali should deliver even a double-digit growth if possible.
Double-digit growth if possible. But how much cheaper have the cars gotten? Because for the auto sector, the cut has been significant. I mean, for the the smaller cars, the cut is from 28% to 18%. For cars like yours, you're 40%, but no cess. So what does that now result in on an average in terms of price cuts for you?
So average cuts are close to between 5 to 8%. So average for us in luxury segment will be around 6%, which is translated to the customer. So yeah, that's substantial when you look at in rupee terms, somewhere around 1.5 lakhs to 10 to 20 lakhs. depending on
1.5
cars.
lakhs to 10 to 20 lakhs. But does the rupee move impact you, or is it likely to impact you?
No, surely. Actually, if you take away that euphoria of the 6-8%, this is the same pricing we used to operate in 2024. And subsequently, we have been taking up price increases quarter on quarter or even once and 3 times in a year because the Forex has moved from 89 to 104. We are still priced at 94 to 95, so we still have a 10% headroom to price even more. So that's, I think, the negative part of the story. But right now, with what the industry was going through, you see the CAGR, it was all flattening out. This measure couldn't have come at a more appropriate time. So I think the entire industry, including us, we decided we will postpone the increases further, but right now pass on the GST benefit to the customer and revive demand significantly.
So what, before I get Mohit to comment, so what should we realistically expect now in terms of industry growth, as well as you gave us a number for yourself saying you expect double-digit growth. Industry-wise, what would you expect?
So CM has revised its projection from 2 to 3% to 4 to 5%, so at least doubling it. India is a 4.3 million car market, so a 2% growth is 70-80,000 cars. So that's significant. In the next 3 to 4 months' time, we had this backlog, and we could see signs of slowing down a bit in the second quarter of this year. So I think coming back from those era and to have a full year impact of 2 to 3% more, I think it's significant.
Well, we look forward to hearing more from you, Santosh. I'll come back to you in just a second. Mohit, let me come to you. For the entire FMCG basket as well, the cut has come at a time when the government is trying to boost consumption. Unlike auto, it may not necessarily result in the kind of drastic cuts that Santosh is being able to offer on his cars. But, most items come down to the 5% bracket as far as FMCG is concerned. What do you now expect in terms of demand pickup?
No, I think this is going to definitely improve the demand and the consumption. I think FMCG, the kind of cuts that you see, for example, there's a 1 rupee price point, which hails in India, which contributes to around 20-30% of the consumption, bringing it down to 93 paise. In absolute terms, doesn't mean much. If you translate into number of crores for a Indian market, it's 2 lakh crore.
Yeah.
That is the kind of substantial impact it will have, which is what PM Modi also mentioned. So I think the sentiment is going to improve. Because of the sentiment, the demand is going to improve. Because of demand, investments are going to improve. Because of investments, I think the employment is going to improve. And Indian economy is really going to benefit. That's what I feel. In terms of tangible numbers, if you ask me to illustrate it, in India, the middle class accounts for roughly around 50 crore consumer base in the country, and this is coming at a time when consumption was extremely sluggish in urban India, and urban is comprised of middle class. This 50 crore consumer base is expected to go up to around 70 crore by 2030. So huge improvement in the middle class segment in the Indian industry is there. And this improvement or this reforms is going to only improve the consumption. Let me take an example of a 25,000 rupee earning household per month. Now, approximately 1,000 rupees to around 800 rupees on a 25,000 rupees earning household is the impact. So the annual impact, if I look at the income tax reform, direct taxes and indirect taxes, this impact is going to be around 17 to 20,000 rupees on a 1.5 lakh earning household for the whole year. This is substantial, which is going to translate itself in a consumption boost, in my view.
Well, that certainly is the hope. But, you were talking about that 93 paise price point now. And what are you going to do about that? So are we likely to see more changes as far as the grammage is concerned, especially on these low-ticket items?
Yeah, so India reigns with these magical price points, which we call, they are really magical price points. So 1 rupee, 5 rupee, 10 rupee, 15 rupee, 20 rupee price points. And they contribute to good around 40 to 50% of the overall consumption of the entire basket of SKUs that you sell. So sometimes, when a consumer comes to a retail outlet, he says he doesn't want a particular brand. And rural economy is like 60% of the total consumption. So he says, "Mujhe 10 rupees wala pack de dijiye." And he doesn't talk about a brand at all. So therefore, these are magical price points. So these magical price points cannot be breached. And therefore, in the beginning, we are trying to take it down to around 93, but eventually it will lead to a commensurate grammage increase in these SKUs, yes.
Okay, so a grammage increase is what we're likely to see across the board. I'm coming back to you, Mohit, in just a second, but let me get Mr. Vaidyanathan into the conversation as well. All of this is probably or hopefully going to result in increase for credit requirement. At the bank, how are you seeing all of this play itself out? What's the target that you're working with? What's your expectation?
Okay, first of all, I want to tell Santosh something, man. Come on, do better, man. 2 to 4%.
Do better? How much better? How much better do you want him to do?
I mean, it's not 2 to 4%. It looks so low. Come on, Santosh, do better, man. Come on, this is a stage for you, and you should do something better, okay? So that's that. So,
Santosh, are you taking up this challenge? Are you going to be able to do better?
Yeah, the RBI has already reduced interest rate thrice, I believe, this year. So now up to the banks. Reduce more, we go by 10%.
He's thrown the ball back in your court.
the banking system has, of course, reduced interest rates, but you better do more sales activities and create the markets, okay?
He'll definitely offer a better deal to it.
This is the virtuous cycle that needs to move.
So, no, really, first, the GST 2.0 impact itself, let me just say that about ICRA estimates, SBI research estimates, IDS research estimates, all are pointing out to a consumption lift-off of close to about 2 lakh crores. Banking system credit on that could be something like, again, by research, is about 1.7 to 1.8 lakh crores. And that could mean about a 10% increase in a growth rate sense, which means that last year, if whatever the growth rate for the country would be, it would be plus 1% is our real estimate. That's very significant, considering that the banking system overall credit is about 180 lakh crores. So that's quite significant. Secondly, where is the growth going to come from?
Exactly. That's what I was going to come to.
Yes, where is the growth going to come from? So this growth is going to, as you know, the biggest, there are two kinds of cuts have happened here. One is the essential items like food, paneer, milk, etc. It has all come from 5% to 0%. Now, these were consumption items that people are anyway consuming yesterday without the GST of 5%, will consume tomorrow also. Which is a good thing in its own sense in terms of segment it addresses. But the significant one is going to come from the consumption cuts, the one that has come from 28% to 18%. Now, car prices are down like 10%, or will be down 10%. 10% for 10 lakh rupee car is 1 lakh rupees, big money. Let me give you how much it may translate in terms of EMI to a normal person.
Yes.
So, if you think of a 10 lakh rupee car, which will now cost 9. Assuming a loan amount of, say, 7 lakh rupees, and EMI earlier would have been, say, 16,500 rupees. Now EMI will be 14,500. So 2,000 rupees per person per month for 60 months is the reduction in people's EMI. On top of this, like Santosh pointed out, interest rate also came down.
Yeah.
So interest around product cost good down. So both things are actually very significant. And I think this is a material moment. And when we said the other factors that government also reduced the income tax rate. So all three things, interest rate, that one, this one put together, I really believe that 27 will be a lift-off year.
27 will be a lift-off year.
Yes, 27 will be a lift-off year.
So, the banking sector has already had a very good run. When you say 27 is going to be a lift-off year, what could that mean in terms of profitability?
Actually, profitability of 27 will be very good in my opinion, because see this 26 is kind of suppressed because of the the repo rate that got passed on, some more will get passed on this quarter, etc. But all that will become base case. The microfinance issue that happened, all that will become base case. So all that will become base case. So 27 will be, coming off, let me say, a low base, so to say. So in a profitability sense, I'd say that not just credit growth should look better. I believe that the profitability also should look meaningfully better next year. At least for our bank, you should expect that we should look meaningfully better in 27 over 26.
That's the headline. V. Vaidyanathan says 27 is going to be a lift-off year, but
meaningful improvement.
Meaningful improvement. But we were talking about interest rates, and I'll get Mohit and Santosh to comment on that as well. We've got the MPC coming up. What's the expectation? Status quo or a cut?
Before you call Santosh in, Santosh should commit to a
He's not letting you go. He's not letting you go, Santosh.
I mean, 2 to 4% is so disappointing, Santosh. You have to do better.
Just to clarify,
you don't grow.
No. He's clearly in the market to buy a Mercedes, right?
Surely. No, but it was on an annualized basis. I still said double-digit growth for the next 4 months and moving on. So, but for the full year effect, I said.
Okay, thank you. That sounds better to us.
Just to clarify.
Okay, fine. Thank you.
But on the MPC, what's the expectation?
No, see, we got to wait and watch actually, because the could come down, could be wait for a while. So this is not the. There's a bigger important is a cycle. The cycle in which we are in. That's more important.
Yeah, and the cycle suggests that it is definitely accommodative.
Accommodative, and could be coming down also. Now it's anybody's guess. It's 25 basis points. Yes, no, neutral. We are looking at this yearly cycle playing through, and already 100 basis points cut, CRR cut. Some CRR cut is going to play out this quarter, next quarter. So that's why I feel more bullish about.
So liquidity, ample liquidity in the system.
Liquidity is no problem at all. Deposits also not a problem. At least our bank is growing deposit 20% plus. So deposits also not a problem. So when you grow deposit, it gives you good license to grow loans. But I can say for the banking system as a whole, I think this is probably the year in which whatever negative we had to factor is factored. I think next year should be better.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBCTV18.com.
There's massive uncertainty in terms of how this plays out. You've seen a lot of corporates publicly announce that they want their staff to stay in the United States, reduce travel, etc. There's significant uncertainty whether this impacts student visas. There's a whole raft of degree structures in the United States, particularly STEM-focused, that result in automatic visas. That program is now up for question. The implementation will absolutely be critical. I think we have yet to see the broader impact of a lot of these programs, particularly on structural inflation in the United States. We've obviously seen a lot of conversations regarding Fed rate policy over the course of the past couple of months. There are elements of the U.S. economy that are starting to change off the back of legislation and off the back of new policies pushed by the U.S. government. We have yet to see how that plays out, particularly on the inflation statistic.
Santosh, let me come back to you now. Let's talk a little bit about, since we're talking about the reforms and the road ahead, what we are seeing at this point in time is also a move to try and ink as many FTAs as possible. The EU-India FTA, which has, of course, been long in the making. The expectation is that we could perhaps get to some sort of a conclusion as far as negotiations are concerned by the end of this year. Will that materially change your plans for India, from India?
No, for sure. We as multinationals have always advocated free trade, fundamentally because we feel that the economic growth is significant whenever the borders open up. And it's just not about the tariffs, it's also about harmonizing the regulations, for example, between countries. So, I think Indian automotive industry has also come out of age. So the access to bigger developed markets which has money in their pocket to sell and export grows. As far as we are concerned, surely today more than 90% of the cars we sell in India are locally produced. So they hardly have a 15% tariff when it comes to parts and components. So that won't change. The 5%, which is our CBUs, which is all those exotic cars, the G-Wagons, the Maybachs, there is a lot of expectation and anticipation that prices may come down. But in the real sense, we would say no, because...
You're disappointing him again.
No, we need to see that by this time this materializes. Already there is a 10% gap between the pricing and the euro. Plus, on top of it, from a contribution perspective as well, the challenge for India is we don't get allocations. There is much more demand on these cars. Some of these cars even have waiting period running to an year. So what would improve is customers would get better access to cars much faster. We may get even much more cars allocated to India once the FTAs happens. But in the larger scheme of things, I think two-way trade will go significantly higher. That opens up new opportunities for us as well to look at India differently. We have been 30 years in India. We call it strategic patience, been there. But I think also from numbers, in these 30 years, we sold more than 2 lakh plus Mercedes-Benz. The 1 lakh Mercedes-Benz has been sold in last 6 years. So that's the kind of demand and the uptake now that we see. So an FTA.
So when do you expect to sell the next 1 lakh Mercedes-Benz? How much do you believe you're going to be able to crunch the timeline down to?
2 years. It depends on all the forecasts. I think we have to look at all the factors in, and this is where the forex is one aspect where we are not able to put a finger in, and that's will go back to because a 5% increase in price will take us back to pre-GST 2.0 pricing. So we are back to square one. So this is something, and that may happen as early as 1st of Jan next year, because we will not be able to hold on to the pricing. So this is
because of the rupee depreciation.
The rupee depreciation. So I think on the other side we have enablers like FTAs, which by end of the year, if it concludes, and maybe it takes another 12 months for a trickle-down effect to come in, that's a positive side. So we have been strategically patient. We'll continue to be there, and the hope is positive for sure.
Well, strategic patience, that's a new term that we've heard here from Santosh Iyer. But Mohit, you were talking about this virtual cycle, and I think that's the question that the government is also asking, that look, we've done the heavy lifting now by way of the income tax cuts, by way of the GST rate cuts. It's time for industry to go out there and do some batting on the front foot. What kind of capacity utilization are you currently looking at? Are you looking to set up fresh capacity given the kind of demand expectation and demand visibility that you have?
Yes, Shireen. So we expect the demand actually to move up by at least to 500 to 600 basis points going forward next year. And next year is going to see a real boost in consumption and the demand, and which is going to have a trickle-down impact on the investments. So just to illustrate an example, the demand boost happened. We put up a capacity of around 1,000 crore in Madhya Pradesh around 4 years back, and we are at almost like 70 to 80% capacity utilization. So what the GST, another dimension to the GST reforms has happened is that we used to get GST benefits in a lot of places where we used to put up our manufacturing locations. For example, Tezpur or the backward areas, we used to set up manufacturing locations. With the GST rates now reducing from 18% to 5%, that is no more valid. Okay. So it calls for capacity relocations from one plant to the other plant. For example, in Tezpur, we end up losing something like around 100 crores per annum of the benefit that we get out of GST. So it calls for a relocation from a GST from a Tezpur to a south of India.
Oh, okay.
So besides the augmenting of demand and the consumption and the investments which will go up and the employment which will go up, that will call for capacity installations. There will be relocations of capacities also which will happen for a lot of FMCG companies that I know, which are availing the benefit. So that's a little flip side, but we have to work around the same.
Yeah. Yes, and I guess many will have to navigate that. We've got Rajiv Memani, the president of the Confederation of Indian Industry, here, and we're going to ask him to join the panel in just a second. I would imagine that you were out buying a Mercedes-Benz because Santosh Iyer was basically talking about the fact that his dealerships are completely chock-a-block, which is why Rajiv has managed to come to us a little later than we had expected. But
and Vedinathan has managed to get a great hard bargain from him, at least 10-15%.
Not yet. He's trying.
But
he's trying.
he's negotiated very hard.
Maybe by the end of the panel. By the end of the panel.
No, let me just tell you the reality. Okay, I'm not in market buying Mercedes, but over the weekend, really, I'll give a real case. Okay, over the weekend, I actually tried purchasing a car which is the sub 10 lakh category, because weekend driving, small parking, easy stuff. So the person actually told me, and Santosh is interesting, that he said that it is a small car, and he said that the GST benefit you're going to get, I'm going to give you upfront, even though the GST cuts have not come. So how they managing that, really?
You have touched a super touchy topic. There is something called cess, and the dealers are really grappling with, because the government has said that they can't compensate this cess as of now. There are still deliberations on, and that's the reason the dealers, to offset the cess balance, are just throwing away cash. So it's something that the dealers are trying to push, along with some OEMs also encouraging to give this benefit. But it is going below the balance sheet, and it will hit for sure the profits.
Yeah, in fact, the Association of Dealers, FADA, has raised this concern with the CBIC and with the government, but at this point in time, there hasn't been any agreement on the way forward. But perhaps we will hear more. Rajiv Mamani, welcome to Reforms Reloaded. Thank you very much for joining us here. So, were you out shopping?
Yeah, I was. I'll keep quiet. But I was certainly not shopping.
You were certainly not shopping. But what's the view coming in from CII, Rajiv, at this point in time, in terms of confidence, in terms of demand, in terms of investments, on the back of the measures taken by the government?
So I think just from a CII perspective, I think we have mentioned this. I think this is a really far-reaching reform. CII has been requesting the government on this for the last year or so, year and a half. I know government has also been working on this, but what they have come out with is far more comprehensive than what anyone expected. And the time frame with which it has come, the clarity with which it has come. And also, it's not just rate reduction, but it's also a structural reform. So, 2 rates simplifies things a lot. Otherwise, there was a multiplicity of rates. Ensuring that, they are now setting up the appellate tribunals. They are now committed to set up a national appellate authority. So I think if I look at the overall package, and without actually putting in any legal requirement, to say on anti-profiteering, I think nudging the industry, and to industry's credit, I think industry after industry have come out and voluntarily saying that we'll be passing on the benefit, which is, I think, makes sense from an industry perspective also, is great. CII is very hopeful that with the kind of, at least the feedback that we are getting from our members, is that the various soft signals that you get, number of people visiting websites, number of people going to dealer stores, I mean, he'll have much better idea of that. The soft signals that we are getting is that it's lined up for a very positive 1 month, and I think it coincides very well with Navratris today. So I think overall, I would say it's very positive, and hopefully the investment climate, which had, because of the geopolitical things and geopolitical uncertainty, it had got mired a bit. Hopefully this gives the impetus for people to look at investing, because eventually for the government to accede to a lot of the requests that industry is making to make India more competitive, from an industry standpoint, I think it has to lead to more investments as well. Because unless you don't have more investments, the entire thing of greater manufacturing in India, greater economic value added in India won't happen. So Shireen, we are very hopeful. I think that this will not only lead to greater consumption in the short term, but also it will lead to overall it has to lead to revival of investment activity. That's very critical from a country standpoint, and also for, as an impetus to future reforms that we will see. And also the way it's been done, we've not talked much about it, but I think also from a macroeconomic standpoint, I do believe that the government has balanced this very well. I do anticipate that they will look at other forms of incremental revenues to make up for this, at least in the short term.
there's massive uncertainty in terms of how this plays out. You've seen a lot of corporates publicly announce that they want their staff to stay in the United States, reduce travel, et cetera. There's significant uncertainty whether this impacts student visas. There's a whole raft of degree structures in the United States, particularly STEM focused, that result in automatic visas. That program is now up for question. The implementation will absolutely be critical. I think we have yet to see the broader impact of a lot of these programs, particularly on structural inflation in the United States. We've obviously seen a lot of conversations regarding Fed rate policy over the course of the past couple of months. There are elements of the U.S. economy that are starting to change off the back of legislation and off the back of new policies pushed by the U.S. government. We have yet to see how that plays out, particularly on the inflation statistic. They're discussing the trade dispute right now, and representatives from both governments are sitting down. We'll have to see how those negotiations play out. It's an interesting negotiation tactic, particularly from a U.S. government perspective. As we all know, there's a trade deficit in the United States, however, significant services surplus. And so if you're going to start to wander into the surplus side of the ledger, that is potentially damaging to U.S. To overall trade interests. And so my personal view is I think the U.S. government will be very careful to broaden the front on the services side, because then that opens up an area where the U.S. has a structural competitive advantage, and other governments could start to push back in more material ways than they have access to in the good side.
अब सिर्फ 5% और 18% के ही टैक्स स्लैब रहेंगे। इसका मतलब है रोजमर्रा के इस्तेमाल की ज्यादातर चीजें और सस्ती हो जाएगी। खाने पीने का सामान, दवाइयां, साबुन, ब्रश, पेस्ट, स्वास्थ्य और जीवन बीमा, ऐसे अनेक। अब सिर्फ 5% और 18% के ही टैक्स स्लैब रहेंगे। इसका मतलब है रोजमर्रा के इस्तेमाल की ज्यादातर चीजें और सस्ती हो जाएगी। खाने पीने का सामान, दवाइयां, साबुन, ब्रश, पेस्ट, स्वास्थ्य और जीवन बीमा, ऐसे अनेकों सामान, अनेकों सेवाएं या तो टैक्स फ्री होगी या फिर केवल 5% टैक्स देना होगा।
Session of the UN General Assembly this week in New York at the Nasdaq. It's Prince Albert of Monaco.
हम वो सामान खरीदें जो मेड इन इंडिया हो, जिसमें हमारे देश के नौजवानों की मेहनत लगी हो, हमारे देश के बेटे बेटियों का पसीना हो। हमें हर घर को स्वदेशी का प्रतीक बनाना है, हर दुकान को स्वदेशी से सजाना है। गर्व से कहो ये स्वदेशी है, गर्व से कहो मैं स्वदेशी खरीदता हूं, मैं स्वदेशी सामान की बिक्री भी करता हूं। ये हर भारतीय का मिजाज बनना चाहिए। जब ये होगा तो भारत तेजी से विकसित होगा। मेरा आज सभी राज्य सरकारों से भी आग्रह है, आत्मनिर्भर भारत के इस अभियान के साथ, स्वदेशी के इस अभियान के साथ अपने राज्यों में मैन्युफैक्चरिंग को गति दे, पूरी ऊर्जा से, पूरे उत्साह से जुड़े, निवेश के लिए माहौल बढ़ाएं। जब केंद्र और राज्य मिलकर आगे बढ़ेंगे तो आत्मनिर्भर भारत का सपना पूरा होगा। हम नागरिक देवो भवः, नागरिक देवो भवः के जिस मंत्र के साथ आगे बढ़ रहे हैं, नेक्स्ट जनरेशन जीएसटी रिफॉर्म में इसकी साफ झलक दिखाई देती है। अगर हम इनकम टैक्स में छूट और जीएसटी में छूट को जोड़ दें तो एक साल में हम नागरिक देवो भवः, नागरिक देवो भवः के जिस मंत्र के साथ आगे बढ़ रहे हैं, नेक्स्ट जनरेशन जीएसटी रिफॉर्म में इसकी साफ झलक दिखाई देती है। अगर हम इनकम टैक्स में छूट और जीएसटी में छूट को जोड़ दें तो एक साल में जो निर्णय हुए हैं उससे देश के लोगों को 2.5 लाख करोड़ रुपए से ज्यादा की बचत होगी। और तभी तो मैं कह रहा हूं ये बचत उत्सव है।
We are keen to get a share of that pie. We already operate in UP, in Greater Noida, and that's one of the most successful privatization cases of power in the private sector. And it is UP's most successful utility. So we've now begun to understand how to operate in UP. And Yogi Ji's government provides a very secure law and order, and so helps a utility for sure.
Mm-hmm.
We're keen, and we are going to bid.
Definitely, I was told about this by a lot of my people, but I have faith in my company, and this company is built over since 1976 by my father, the chairman, and it has very strong foundations. And Apollo is
Well, ladies and gentlemen, it is a pleasure and a privilege to welcome Amitabh Kant here on the Reforms Reloaded platform. Here's something that I want to share with the audience. It was the 12th of August, and I was in conversation with Mr. Kant on a platform like this. And I asked him, I said, what next as far as reforms are concerned? And the number one item on his list on the 12th of August was GST rate rationalization. Clearly, the government was listening to you, Mr. Kant.
Well, I don't know whether they're listening or not, but it's a great thing that they've simplified the GST. I think it will greatly help in pushing the consumption story of India, which in turn will create great demand, which in turn will increase capacity utilization and will lead to further investments in the Indian economy. It will create a virtuous cycle of investments, and that is in the context of all the challenges we are facing globally. This reform was critical.
Well, this reform was critical, and this reform has been done, and the hope is that it will boost consumption, boost demand, and then boost investment. What's the sense that you get on that front? Because the government is saying, look, we've done the heavy lifting, we've been front-loading capex, now we're giving you stimulus as far as the income tax cuts and now the GST cuts are concerned. What's the sense that you get from industry now that you're on the other side, Mr. Kant, about its willingness, its appetite to invest?
So, the government has done a lot. I would say this, because to bring in the GST simplification at this particular stage, to bring in all the states on board is a remarkable thing. And all credit to the PM and the FM for that. But I think we should accelerate the pace of many other reforms simply because the global challenges in terms of the breakdown of global supply chains, the rise in protectionism, the breakdown of institutions with a war on both in Europe and Middle East. There are many challenges, and now with this H1B visa. So we need to use this crisis as an opportunity to push many other reforms, to my mind. And GST should just be the beginning of an accelerated reform process.
Okay, if GST is just the beginning, what's the next step? And you talked about the H1B visa issue, which blew up over the weekend. You tweeted saying that this will in fact end up being an opportunity or could become an opportunity for India. I think that tweet has gone viral. You've got about 5 million views on that. But what do you believe we need to do in order for us to actually ensure that this emerges as a silver lining, Mr. Kant?
Shireen, the challenge is that there is no talent. There's no talent for computing power in the United States of America. So it's not that the Indian companies utilize H1B visa.
No, not the bulk of them.
It's the United States companies which bring in all this, utilize the H1B visa for their advantage. So if they had put that $100,000 per year, then it would have had huge implications. But now that they've clearly announced, backtracked and said that it's only in the initial period and not for students studying in the United States, I think my analysis is that this will, over a period of 6 years, it'll work out to a very marginal component, which will then get passed on to the consumer. But it opens up the opportunity for a lot of American companies, because there's lack of predictability and consistency of policies. It gives you an opportunity to open many more GCCs, and it also lead to a much more level of outsourcing for these companies, because simply there is no talent available, and you need talent to be able to do this. So India should be a beneficiary of this. My view is that India will benefit out of this.
You do think that India will benefit from this, but since we're talking about the next steps, Mr. Kant, quality control orders, I think that has been one of the issues that industry has been talking about as a constraint. In your view, is there a need for a big review or a dismantling even of quality control orders in the way that they're being implemented at this point in time?
So quality control orders, we've had an excess dosage of them. We've had about QCOs imposed on over 760 odd items. If you're doing it on the end product, I'll understand. But you're putting quality control orders on inputs and components, and you're making it difficult for medium and small industries to do production, and it is having severe implication on their livelihood, their survival. And I think all QCOs need to be reviewed, and at least all QCOs on inputs need to be eliminated, because it'll make it very difficult for India to be competitive. It'll make it very difficult for India to export, and therefore my view is very strong review of QCOs. It is licensing by the back door. And it is a very, all QCOs have been brought in under pressure by industry lobby groups, which is doing huge damage to India.
Okay, so a quick review and a big
elimination
review.
On all inputs.
On all inputs.
Yeah, because you're making the end product very expensive then.
Okay.
And you're basically making your country non-competitive in the global economy.
So from that perspective, if we are talking about making India more competitive as well as integrating India into the global supply chain, GST done, QCOs you believe work in progress or needs to be work in progress with a certain degree of urgency, what else?
So first and foremost, let's look at what all government has already announced for quick implementation. First and foremost, I think the labor laws, because they're already passed by Parliament, over 22 states have already approved them. So just implement the labor laws, which will enable you to do size and scale of manufacturing. That's critical. Number two, the government had some time back